Morning. Welcome to day 4 of your CA final marathon for FR, applicable for May 24 exams and later. Someone asked me, sir, my exams are in November 24, May 25. Can I watch this marathon? Definitely yes. So FR में changes don't come, so don't worry about it. You can watch this marathon as well. Now, in our day 1, day 2, day 3, what all topics we have done, let's just go through that first. So we have finished with Introduction to IND AS. Then your chapter number 3 is done. Your chapter number 4 is done. Your chapter number 6 done excluding leases. Your chapter number 6 is done excluding what? Leases. Except lease, your chapter number 6 is also done. Acha, 7 is pending. We'll do 7 today, 8 today, 9 today, 10 today. What is today's target? Chapter 7, 8, 9, 10. These are the target of today. 11th is pending. 12th and 13th already done. 12th business combination, 13th is your CFS, that's already done. Okay, so today we are required to finish off chapter number 7, 8, 9, 10. And there's one more day pending. Acha, so today is day 4, we'll have day 5 also. Now day 5 will not be tomorrow. Please take a note, day 5 will not be tomorrow. We'll take one day ka break and we'll have day 5 on Sunday, day after tomorrow. So on Sunday, that is your 28th. Yeah. Sunday, that is 28th of April, we'll have day 5, evening 6 o'clock, not 5 o'clock, evening 6 o'clock. Now, what will be pending for your day 6? Day 5. What will be the pending things for day 5? 1. IND AS 115, that is your chapter number 5. So, I'll do IND AS 115. Then we'll have IND AS 116. Okay, then we'll have financial instrument. IND AS 101, analysis of financial statement. These are 5 topics which will be done on your day 5. Day 5 will be on Sunday. Again, IND AS 115, IND AS 116, financial instrument, analysis of financial statement, and lastly, it is basically your first time adoption. Remaining 2-3 chapters are just theory. They are to be done on your own. They are just theory chapters. Usme koi revision is not required. That are to be done on your own. Okay, today's target, we need to finish off chapter number basically 7, 8, 9 and 10, starting with chapter number 7, unit number 1. Starting with chapter number 7, unit number 1. IND AS 41, which is on agriculture. Keep smiling, pay attention. Okay, and I again tell you, it's more about consistency. You come for one day, another day you don't come, then this is not going to be useful. And we are doing a very in-depth revision wherein you are basically covering all your important questions as well. So just make sure you're attending all the classes and you're also sharing it with all your friends as well. Anybody wants to buy my regular class lectures for CA Final FR as well as auditing, they are available on Yashash Academy's website. Okay, now IND AS 41 is on agriculture. Now, what do you mean by the word agriculture? So see, if at all we are doing agricultural activity, then this standard comes into picture. Plus, if I have a biological asset, living animals or plant, the biological assets, they are basically valued as per this standard. Acha, harvest, the agriculture produce coming, they will be measured initially as per this standard. Okay, so check out over here. What do you mean by the word agricultural activity? It's a management by the entity of biological transformation and harvest of biological asset. It's a management by entity of biological transformation and the harvest of biological asset for what purpose? Either for sale or for conversion into another agriculture produce or for additional biological asset. Now see, very purposefully they have defined it. We need to understand this definition. If at all I have basically, say for example, animals to be kept in a zoo. Now it doesn't fall under for sale, it doesn't fall under conversion into agriculture produce, it doesn't fall under producing additional biological asset. The animals kept in a zoo, they don't form over here, they don't come over here. Fine. Now, the agricultural activity, the features are, there's a capacity of change, living animals, plants, they are capable of change, you are managing the change. Achha, now see, pay attention, harvesting of unmanaged resources. If harvesting of unmanaged resources, from a forest I cut wood, so that is not coming under agricultural activity. Agricultural activity includes management of biological transformation, harvest of biological asset. Okay. Then, so they are having a capacity to change, we manage the change, we measure the change. Fine. Okay, biological asset means living animals or plant. But now one more thing you pay attention over here. Biological assets which are a bearer plant, they get covered under IND AS 16. Biological asset other than bearer plant are covered over here. Okay, moving ahead. Okay, this standard is applicable. This standard is applicable to agriculture produce, mango coming from a mango tree, only at the time of harvest. So at the time of harvest, I repeat, at the time of harvest, basically the mango coming from mango tree, it will be valued as per IND AS 41. But the thing is, later on it will not be as per IND AS 41. Later on it will be as per your IND AS 2 only inventory. Fine. Now check question number 2. We are doing only the important questions. Now this contract number 1, there's a owner of apple orchard. There's a owner of apple orchard. He raises the apple trees. Acha, so do we raise the apple tree? No, the owner of apple orchard raises the apple tree and we pay a fixed amount to the owner and all the apples will belong to us. The apples will belong to us. There's a owner of apple orchard. He will grow the apples. Now question, are we managing the biological transformation? No, he manages the biological transformation. Are we doing agricultural activity? Answer is no. As a second May, ABC obtains an apple orchard from the owner and we raise the apple tree. We raise the apple tree. So now biological transformation handled by us. We are doing agricultural activity. The first May, it is not agricultural activity. Second May, it is a agricultural activity. Okay, question number 3. Managing of animals for recreational activity doesn't fall under definition. Fishing in the ocean, it is basically harvest of unmanaged resources. No, not covered under. Fish farming, yes, fish farming is basically you are managing that biological transformation of fishes. Development of living organisms such as cells, bacteria, viruses, I need to understand for what purpose. For what purpose? If that bacteria ka hum basically development we are doing to be used basically for pharmaceutical industry, then no. But to be used in a dairy industry, yes. Okay, growing of a plant to be used in production of drug. Now purpose is basically we grow a plant so that we get leaves. The purpose is to get the leaf and then we'll make drug. So this is a agricultural activity because purpose is to obtain leaves. Okay, dogs for security purpose. No, they don't fall under the definition. Fine. Now, when do I record a biological asset in my book? So one, you should have a control over the asset. Second, future economic benefits are probable and fair value or cost, anything, fair value or cost can be measured reliably. Fine. Now, measurement. How do we measure the biological asset initially as well as subsequently? How do we measure it at fair value less cost to sell? Now, see, it's not measured on day one at fair value. It's measured at fair value less cost to sell. It's measured at fair value less cost to sell. So it is possible the amount what you have paid and the fair value less cost to sell is different. So day one only the difference comes and that difference will go in your P&L. Okay, so under this standard, everything, all profit loss is always going in P&L, nothing will go in OCI over here. The biological assets on day one as well as end of each year are measured at fair value less cost to sell and if the fair value less cost to sell cannot be determined, then you can measure them at cost less accumulated depreciation. If it cannot be determined, then you go for cost less accumulated depreciation. Achha, agriculture produce at the time of harvest falls under this standard. They will be valued at fair value less cost to sell. The agriculture produce at the time of harvest. The mango plucked from a mango tree, how do I value it? It's fair value less cost to sell and that becomes its cost for the purpose of IND AS 2. Okay. Now, we many times enter into a contract to sell biological asset or to sell the agriculture produce in future. I'm growing a mango. I'm having a mango farm. Mangoes will come. I entered into a contract to sell mangoes in future. That contract may not reflect fair value less cost to sell. Fair value, remember, it's from market participants basis. Okay. And sometimes the cost may approximate the fair value. Sometimes cost may approximate the fair value when little biological transformation is taken place or the impact of biological transformation on price is not material. Okay. Moving ahead. Acha, this one extra line was added over here. Fair value less cost to sell should be based on post-tax cash flow. fair value less cost to sell, which should be based on post-tax cash flow. This is what they've given. It doesn't impact any of our questions, but just for understanding, this is one line which was added recently. Now coming to illustration number 5, RTP November 2020 question. You purchase a kettle at an auction. Purchase price 1 lakh plus you have a transportation cost 1000. Okay, and plus in addition, there was an auctioneer fee 2% of sales price. Auctioneer fee 2% of sales price, and auctioneer charges 2% from buyer and seller both. Acha, so when I bought, I would have paid 2% auctioneer fee, 1 lakh ka 2%, I have paid 2000. Okay, so for me, my cost is 1 lakh plus 2000 plus 1000 rupee transport. So my cost is 103. My outflow is 103. I don't record at 103. This is my cost. It is not recognized at cost. It will be recognized at fair value less cost to sell. Okay, fair value less cost to sell. Assume this 1 lakh is the fair value. Ye fair value. Now less cost to sell. Whenever I sell, I'll have to pay auctioneer fee minus 2000, and I'll have to also bring it to the market. The transport cost also 1000. The fair value less cost to sell is 97. I'll be recording not at 103, I'll be recording at 97. Biological asset debit 97. To bank is 103. Difference 6000 is loss on initial recognition, goes in P&L. Clear? And now subsequently also it will be measured how same fair value less cost to sell. Subsequently, now the fair value is 110. Acha, fair value 110. Usme se 2% I'll have to pay auctioneer fee, and minus transport ka 1000. So now it is 106800. 97 becoming 106800. That will be a gain coming in your P&L. I hope this is clear. Okay, question number 6, January 21 exam. 1st November 2001, you purchase 100 goats for 10 lakh. Transaction cost is 2%. So can I say I would have paid a total 10 lakh plus 2%. My outflow is 1020. Outflow is 1020, but I'll record it at fair value less cost to sell. Imagine fair value is 10 lakh only, but whenever I'll sell, I'll have to pay 2%. I'll record at 980. I'll be recording at 980. I've paid is 1020. Acha, 1020 mein, just let me see. Your transaction cost 2% only by seller. If it's only by seller, I have not paid while buying. To buying time, it was only 10 lakh. But I'll record at 980, 20,000 goes in P&L. Second may it's buyer seller both. If it's buyer seller both, I would have paid 1020. I've paid 1020. I'll record at 980, 40 goes in P&L. Clear, che? Okay, next one. A farmer owned a dairy herd, 3-year-old cattle. 3-year-old cattle. First April 1, fair value is 13750. 13750 for how many? Basically 250 cattle. So can you say per cattle it's 55 rupees? Now the fair value at year end became 60. So 55 became 60. That is change. That is change in price. But now the thing is, last year those who were 3-year, can I say now they would have become 4-year? The last year it was 3-year, now they would have become 4-year. Acha, the 4-year wale ka price is 75. So now for me the valuation is 250 into 75. So closing will be 18750. The opening was 13750. Now they are not 3 years. Now they are 4 years. So 4 years into 4 years wale ka rate kya hai? 250 into 75. Now what is effect due to change in rate, and what is the effect due to 1 year gone? They became big. Physical change. Acha, the price changes. If they were still 3 years, so can I say 55 became 60? So 250 into 5 rupee. So 1250 is due to price. Remaining is due to that biological transformation. Now, all gain loss under this standard will go in your P&L, nothing goes in OCI. Moving ahead, question number 8. Moving ahead, question number 8. Okay, at 31st March, 100 Pinus radiata tree were planted. How many years ago? 10 years ago. The tree take 30 years to mature. So when I say still 20 years are pending. Cost of capital given is 6%. Mature tree have a fair value. Mature tree have a fair value, and fair value of mature tree, can I say after 20 years? Acha, 171 and 165. 171, 165. As at 31st March 1, 20 years are pending. As at 31st March 2, 19 years will be pending. Okay, so today one tree will have a fair value 171 ka present value for 20 years. Present value for 20 years is 0.312. So 0.312 karo. So it is 50. 1 minute, it is 171 into 0.312, and how many radiata tree we are having into 100. So can I say today the fair value is 5335? Acha, year end pay now this 165, this is after 19 years. So usme you have to take a present value factor of 19th year. So this will be the present value at the end. So currently it is this, later it is this. The difference will be recognized in P&L. Moving ahead, government grant related to agricultural activity. If I have a government grant related to agricultural activity, how would I do it? Now pay attention. How would I do it? See, your biological asset may be measured at fair value less cost to sell. Normally they are fair value less cost to sell. But if fair value cannot be determined, can I say then in that case they are valued at cost less accumulated depreciation? Okay, if biological asset are at fair value less cost to sell. Okay, if it's an unconditional grant, record immediately in your P&L. But if it's a conditional grant, record it only when conditions are fulfilled. This is different from your IND AS 20. Under IND AS 20, the grant is recognized when there's a reasonable assurance that entity will be able to fulfill condition and grant will be received. So, wahan pe we book it over the period. We fear reasonable assurance, grant will be received, I record it. Here I record only when conditions are met. If I have to fulfill conditions for 5 years, I'll record this government grant as income only at the end of 5th year. This is under IND AS 41. IND AS 20 may I record over a period of 5 years. So such government grant will be recognized as income over the period in which the expense for complying condition comes. This is IND AS 20. Here we'll record only when the conditions are met. But if they say that 1 year gone, now that much grant will never be refundable. Okay, the 1 year gone, 1/5 grant never be refundable, then I can book that 1/5 grant as income at the end of first year. Again 1 year gone, again 1/5 grant never to be refunded, I can book that much as income, wo kar sakte ho. Otherwise, you book it only when conditions are met, that is when all 5 years are completed. Suppose if they say, if you don't follow condition in year 4, still full grant refundable. If you don't follow condition in year 4, full grant still refundable, so don't record any government grant as income, record only when all 5 years are completed. Okay, check question number 9. You receive a government grant. This is basically if they are measured at fair value less cost to sell. If they are measured at cost less accumulated depreciation. If fair value was not determinable, the biological assets are measured at cost less accumulated amortization, then in that case, IND AS 20 will be applicable. Then in that case, IND AS 20 will be applicable. Okay, you receive a government grant for starting something in backward area, and they are telling there are no conditions attached with respect to purchase of poultry bird. So for poultry bird, no condition attached, record immediately in P&L. Okay, for incubators, there is a condition for minimum 3 years. You book it only when 3 years are completed. How to account for it? Under IND AS 41 as well as IND AS 20. So check out if it's measured at fair value less cost to sell. If it's measured at fair value less cost to sell, so now see this bird wala thing you record immediately because the thing is no conditions apply. But a second one for incubator may conditional hai, I need to record only when the conditions are met, so I'll be recording that way. But if biological assets are measured at cost less accumulated depreciation, if they are measured at cost less accumulated depreciation, so can I say now they will be measured as per IND AS 20, and as per IND AS 20 I can book it over a period of 3 years. So यहाँ पे you can follow either a deferred income wala, so you treat it as deferred income and it will be recorded in P&L over a period of 3 years. Next one, you have a land purchase 50 lakh, you purchase some 200 cows for rupees what? 10 lakh, 5,000 per cow. You got some 1 million grant for cow which is non-refundable, take it in P&L immediately. And you have some 4 lakh and 6 lakh expenses done for that purpose. Okay, October 100 cows are born. Free mein mila, still you will value it at fair value less cost to sell. Okay, and there are no other change in animals during the year, so this 200 remains 200, 100 cows are born. And there are some 3,000 liters of inventory milk ka. So inventory milk wala will be valued at fair value less cost to sell only. That is also measured at fair value less cost to sell. So N mein, that is basically inventory cost was 0, so that much will come in your profit. Okay, now land. It was 50, now 60, now 70. We don't fair value the land. Land doesn't come under this standard. Land is not a biological asset. Land is not a biological asset. That falls under PPE. Assuming cost model, land will remain 50 lakh only. Okay, new calves born, for us the cost was 0. New calves born, for us the cost was 0. They were born in 1st October. So can I say year end pe they'll be half year? Okay, the 6 months wale ka year end value 1300, our cost was 0. 100 into 1300, there's a gain 130 related to new calves born during the year. ठीक है. Our cows were average 2 year wale. Can I say now they'll become 3 years? Now they'll become 3 years. 3 years wale cow at the end is 5500. 3 years wale cow at the end is 5500. The 200 into 5500 is 11 lakh. We bought them at 10 lakh. There's 1 lakh gain. There's 1 lakh gain over there. And milk I'll be valuing at 24 rupee at the end. Give extract of balance sheet P&L. So in your P&L, from your old cow, the gain is 1 lakh. From your new calves, the gain is 130. Government grant went in P&L. Milk ka fair value 72, and this was the cost which was incurred. Ye ho gaya aapka. Balance sheet mein your land is coming 50 lakh. Okay, now your old cows are now worth 11 lakh. Calves are worth 1 lakh 30,000. Milk will come in your inventory 72,000. Okay, next one, question number 11. Next one, question number 11. Okay, this is as such similar to last question. I'll take the important point over here. 1st April 1, you had a 500 cows which were all 3 years old. And if they were 3 years old, they would have been valued at fair value less cost to sell. These are fair value. And they're given below, these are the cost to sell. Acha, so 27 minus 1000, they were valued at 26,000. 27 minus 1000, they were valued at 26. Now, during the year, some cow became sick and 30th September, 20 cows died. Okay, 30th September, 20 cows have died. Now, see, we basically value them at fair value less cost to sell every year end. Beach mein, if they're expiring, we'll remove the carrying amount. So, can I say carrying amount in our books is 26? So for 20 cows which are expired, remove the carrying amount. Check this. Biological assets are fair valued on day 1 and each reporting date. In between, they are not fair valued. Upon death, the carrying amount of cow needs to be removed. If I'm removing, so biological asset goes away, it's a loss. The loss debit to biological asset, carrying amount of 20 cows, which is 26,000 into 20. Okay, now we bought some new cows. So basically, uska purchase ka entry, fair value less cost to sell. Then the old cows and the new cows all will be valued at closing rate. Other things are all simple. Okay, question number 12. Going to question number 12. Company X purchased 100 goats at auction for 1 lakh and transport cost is 1000. Additionally, there will be 2% selling fee when we will be selling it. To see fair value 1 lakh minus cost to sell will be 2% minus 1000, net 97. So in your book, you'll record this 100 goats at 97,000. You are paid 101, difference goes in P&L. Okay? Now pay attention. They are telling 31st March, the fair value has increased. Now it became 110. So 110 minus 2% minus transport will be 1000. Now they are worth 106,800. So now 97 becoming 106,800. Difference goes in P&L. Okay, so now in our books, 100 goats are at 106,800. 100 goats are at 106,800. Now we are selling them. When you sell them, you get money. Carrying amount goes away. Difference is profit or loss. So check out. Now we are selling it. So bank debit, what we have received, net. Carrying amount of goats go away. 100 goats are 106,800. 18 goats will be how much? And difference goes in your P&L. That is done. Acha, few goats are slaughtered. Remaining ka fair value is this. That's not relevant. In between, they are not fair valued. तो उसका कुछ काम नहीं है. Now 42 goats are slaughtered, तो उसका carrying amount goes away. उसको slaughter किया and we got meat. Meat will be valued at fair value less cost to sell. Okay, the meat will be valued at fair value less cost to sell. This carcass is 48,300 and उसको sell करने का charge will be 420. So now carcass comes in fair value less cost to sell पे. ठीक है. and your goat goes away. 100 goats were 106,800, 42 goats will be how much? This much goats go away, and we incurred 4,200 rupee for slaughtering. To bank is 4,200. Difference is profit or loss going in P&L. And lastly, the remaining goats, 18 and 42 gone, 40 goats are still remaining. In our books, 100 goats were 106,800. So 40 goats ka kitna tha? They are remeasured and we brought to the closing fair value less cost to sell. Then this is your chapter number 7, unit 1, IND AS 41. Any doubts? Anybody? IND AS 41? Any doubts? Anybody? IND AS 41? Okay, Girdarlal has a question, sir. Can't we keep lecture number 5 tomorrow? Dear, I have some commitments. Actually, the plan was for 4 days, but unfortunately, we have to take one more day. So I'll be keeping it on Sunday. Plan accordingly, please. And only 3 main topics are there: 115, 116 financial instrument. So try to finish everything else from your side. And after that also, you still have so many days for examination. So we'll be having on 28, 29, 30, then your first, second se exam starts. Okay, going to chapter number 7, unit number 2, which is IND AS 20 on government grant. Okay, so this standard talks about accounting for government grant, disclosure of government assistance. Now see, pay attention. All government grant are government assistance. All your government grants are government assistance, but all government assistance, they are not government grants. So all government assistance are not government grant. So there are some government assistance which cannot be reasonably valued. We don't take it as government grant. For example, your file is processed faster in the ministry. The ministry mein aapka file is processed faster. That's also assistance to you, but that cannot be reasonably valued. It doesn't come over here under government grant. Fine. So what do you mean by the word government assistance? They are actions by government designed to provide economic benefit specific to an entity or a range of entity qualifying under certain criteria. So government assistance are nothing but actions by government designed to give benefits. Okay. And if they just improve the general infra, roads are developed, so that doesn't fall under government assistance also. Now what is government grant? Government grant are assistance. I told you all government grant are government assistance, but all government assistance may not be grant. So they are assistance by government in form of transfer of resources to an entity. They are giving me cash, they are giving me asset, they are giving me some right, intangible asset. So they are in form of transfer of resources to an entity in compliance with certain conditions which are already met or to be met. Okay. Government assistance which cannot be reasonably valued, they are out of the word government grant. Fine. Moving ahead. When to record a government grant? When do I record a government grant? When we have a reasonable assurance. See, the conditions met or not is not mandatory. When we have a reasonable assurance that we will be able to comply with the conditions and the grant will be received. We should have a reasonable assurance for this thing. Conditions only met, then only a record. No. We should have a reasonable assurance we'll be able to comply with conditions. Okay, forgivable loan. Forgivable loan means I don't have to repay it. The government is foregoing my loan, that falls under government grant only. It will be treated as government grant. Whenever there's a reasonable assurance that you will meet the terms of forgiveness, you record it. Achha, government gives you a grant. Government gives you grant. How? They are giving you a loan at less than market rate of interest. Market rate of interest is 10%. They are giving me a loan at 5%. So that is also government grant. So sir, how do I do it? Okay, so see, pay attention over here. Pay attention over here. Whatever you have to pay, I have to pay 5%, 5%, 5%, 5%, 5% and the principal 5. Okay? Discount it by the normal market rate. So that is the fair value of the liability. तो आपकी जो लोन है ना उसका fair value is whatever I have to pay discounted by the normal market rate. So you get basically the fair value of loan that you book it as loan. But you got more money. So I got 10 lakh, but the fair value of loan is coming only 9 lakh 20,000. I got 10 lakh, but the fair value of loan is coming 920. Loan will be 920. Remaining 80,000 will be the government grant, which will be booked as income over the period in which the expenditure will be incurred to comply with the conditions of grant. Okay, to check over here, this is the question. There's a 50 lakh rupee of loan we are getting. We have to pay 5% and that 50 lakh rupee have to be paid at the end of 5th year. And the market rate going on is 12% and they've already given you the present value of whatever I have to pay is 3738. The loan will be booked at 3738, but I'm getting 50 lakh. Difference is your government grant. The loan is 3738. And now in your books, interest accrues at 12%. Interest accrues at 12%. You are paying 5, वो payment गिनेंगे उसको. So how to account in your book? 3738 was the loan, interest accrues 12%, I pay 250, now this is the loan. Now interest accrues 12%, I pay 250, this is the loan. And now last May it will become 5250, I'm paying it, it will become nil. Okay, so day 1 I got 50, loan was 3738, remaining is your deferred government grant. Book it over the period in which the expenditure related to fulfilling the condition of grant will come. Okay. Now, how do I account for government grant? There are two approaches, capital approach, income approach. Capital approach, it goes directly in your balance sheet. Income approach, it goes in P&L. This standard does not allow capital approach. This standard does not allow capital approach. This standard prescribes only income approach. Remember, under your AS12, grant in nature of promoter's contribution, we were taking it directly in capital reserve. यहाँ पे नहीं है. Here all grants will go in your P&L. Acha, now how it will go in P&L? So as per IND AS 20, grant should be recognized in P&L in a systematic basis over the period in which the entity will recognize expense, the related cost for which the grant is intended to compensate. So basically the expenditure for fulfilling the conditions will come in which period? Over that period you book this income. Clear che? This line important, try to remember such important lines. Again telling you answer, solution may the final answer doesn't only have marks, the marks are there for all theories also what you're writing. Okay, now going ahead, non-monetary grant. Okay, if I'm getting a non-monetary, which is in kind. Okay, the land given to me free of cost or land given to me at subsidized rate. Okay, if it is received free of cost land, how do I record? One option, you record at fair value. Land debit to deferred government grant. Option, you record it at fair value. Land debit to deferred government. Second option, you record it at nominal value. Land debit to P&L 1 rupee. Nominal value. Achha, if I'm getting at concessional rate, imagine land of 10 crore, I'm getting at 4 crore. One option, recorded at fair value. So land debit 10 crore. To bank is 4. Difference is deferred government grant. It's an income which will be taken to P&L over the period. Second option is you record at the amount which you have paid to land to bank 4 crore. This is your non-monetary. Okay, what about others? Now grant related to some specific fixed asset. Machine purchase, uska grant, or tractor purchase, uska related grant, specific fixed asset. You have two options. One, deduct from basically the cost of fixed asset. So from the carrying amount of fixed asset, you reduce it. Depreciation proportionately will reduce. Second option is you treat it as a deferred income. If you treat it as deferred income, asset remains full 100 only. The depreciation will be on 100 only, but on opposite side, the deferred income will go to P&L in proportion to depreciation. Deferred income will go to P&L in proportion to depreciation. Okay. Achha, if it's a non-depreciable asset, then there is only one option available, treat it as deferred income. So recognized in P&L over the period over which basically the cost of meeting the conditions will come. Fine, moving ahead. Okay, grant which you got, it has no relation to operating activity. Grant which you got, it has no relation to operating activity. Suppose you start something in backward area, for that they gave you grant. Now operations mein what you're doing doesn't matter. If it has no relation to operating activity, take it in P&L. How? Over the period in which the cost of basically complying with the conditions will be coming. ठीक है? Now question number 8, you got grant of 20 lakh without any condition, record in P&L immediately. You got this grant 50 lakh. Okay, you got this grant 50 lakh, there are some conditions attached. What are the conditions attached? You have to make this drug available to public at a cheaper rate. So you should basically record it over the period in which the cost of complying condition will come. 2 acres of land you're getting for free, two option. One, you record it at fair value. So land debit to deferred government grant 10 lakh, or you recorded at nominal value, land to P&L 1 rupee. Okay, you got 2 lakh for purchase of machine. One option, deduct from the carrying amount of machine, depreciation will reduce. Second option is you treat it as deferred income, and deferred income will go to P&L over the life of asset in proportion to depreciation. Okay. Now presentation of grant related to income. Now how do I present the grant? See, two options. One, you show it on income side, or second, you deduct from the related expense. Either you show on income side or you deduct it from the related expense. Answer will as such be coming same. Either as income or from the related expense, both method acceptable. Okay, now check over here. You're getting a grant. You're getting a grant kind of exemption from custom duty. There's exemption from custom duty which you're getting. What you need to do further? आपको आगे क्या करना है? You have to do further exports. अच्छा, तो my question, is the condition to buy a fixed asset or condition is to do exports in future? If condition is to buy a fixed asset, grant is received because you bought a fixed asset. That's basically grant related to fixed asset. यहाँ पे condition is not buying a fixed asset, condition is doing export later on. So this will be grant related to income, not a grant related to fixed asset. Okay, is it a grant related to asset or income? The exemption from custom duty is over here. A government grant should be accounted as per IND AS 20. Fine. For grant related to fixed asset, the primary condition is basically to purchase, construct or acquire the long-term asset. Here the primary condition is not there. You have to do exports. So check over here. In the current case, the grant is received basically and you don't have to purchase, construct fixed asset, but the thing is there's an export obligation. So this will be a grant related to income, treated as deferred income over the period in which the cost of complying conditions will be coming. ठीक है, next question number 11. Next question 11. You received 2 grant, 1 lakh each. Okay, one is a clean river project के लिए I got some grant. No major steps are taken by you, but it doesn't look that they नहीं बोल रहे कि भी refund करना है. It looks like a non-refundable. If it is a non-refundable, book it immediately in P&L. Okay, second grant relates to what? The development of new equipment. Equipment के लिए what do I do? You need to deduct it from the cost of equipment. ठीक है. But now pay attention. The new technology and development of new equipment, and the new technology will be available for sale in April 23. So can I say equipment will be ready in April 23? If it will be ready in April 23, can I say I can deduct it from equipment in April 23 only? I cannot deduct before that. Okay, so check over here. First one, you take it in P&L immediately. If there are conditions, then over the period. Second one relates to construction of an asset. You deferred income. Once the equipment starts being used, the deferred income 1 lakh should be recognized over the life of asset. Second option is you can offset against the cost of equipment. Kab? On 1st April 2003. Achha, there's one more thing over here. 1st September, there were some floods. You had to shut down the factory. And now they've announced a compensation. Aapka last 3 months ka sale, what you missed. Aapka last 3 months ka sale, what you missed. Uske upar whatever profit is gone, the government is going to compensate. You need to submit an application by 30th June. Achha, till now you have not submitted application also. You have not filed application. So can I record that right now? No. Once the application is submitted, it's approved. So I say I have a reasonable assurance that the grant will be received. So that time you record it. So don't record it right now. You should be recording it when? You should be recording it when? Once it is submitted and approved by the government for compensation, only then we'll have a reasonable assurance that the grant will be received. Clear, che? Okay, question number 12. Question number 12. We are getting a government grant of 60,000, which is receivable over 3 years. 40 in first year, 10 in second year, and then again 10 in third year. Total 60,000. And this is for creating 10 new jobs, maintaining them for 3 years. Okay, employees are recruited at a total cost of 30,000. So recruitment cost happened, 10 employees, they are to be recruited. वो day 1 को हुआ, year 1. अच्छा, one first year का wage bill 1 lakh, subsequently it will rise 10,000 every year. अच्छा, तो first year recruitment cost 30k plus wage bill 1 lakh came. So can I say first year I have to spend 130? अच्छा, second year recruitment cost doesn't come. Second year wage bill will be 110, third year it will be 120. So I am spending how? Expenditure is how? 130, 110, 120. The total grant 60,000 should be amortized in that ratio. So grant total is amortized 60,000 in which ratio? 130 is to 110 is to 120. That way it will be amortized. ठीक है. तो first year में how much is basically the grant income coming? 21663. Now if you just prepare a deferred government grant account, you received 40. Out of 40, this much has gone in P&L, this is carried forward. Okay, next year I received 10, this much goes in P&L, now balance is this. Again I received 10, it goes in P&L, it becomes nil. Did you understand? So this is the balance of deferred government grant account. This is balance of deferred government grant account. You received 40. Out of that, 21667 went in P&L. So now the deferred government grant account will have a balance, how much? 18333. Okay, again you received 10. You received 10, the bank to deferred government grant. So 18 tha, plus I got 10. So now it's 28. Out of 28, this 18 is going out, so 10 will remain. Again 10 is received, so 10 plus 10, 20 goes to P&L, now it becomes 0. Okay, next, cash flow mein. Now see, cash flow mein, what do I need to do? Imagine I bought an asset, for that I'm getting a grant. So should I show outflow related to asset net of government grant? 10 lakh spent, 2 lakh grant received. Can I show outflow net 8 lakh? No. You have to show them separately. So purchase of asset, outflow 10 lakh, government grant received, inflow 2 lakh. That way you show it separately. So disclose as separate items in cash flow, should not be on net basis. Achha, if I have to refund the government grant, what do I need to do if I have to refund the government grant? Do opposite of what you have done. जो किया उसका opposite करो. ठीक है. तो whenever you received it, it was treated as deferred income. Achha, so balance was lying in deferred income. So to the extent balance is lying in deferred income, debit deferred income, and extra what you are paying, debit P&L, because out of deferred income something would have gone in P&L. Achha, so now whatever balance lying in deferred income, that much debit deferred income, extra debit in P&L. Achha, if you are deducted from PP, if you are deducted from the carrying amount of PP, add it to the carrying amount of PP, depreciation will change prospectively. To do opposite of what you have done. ठीक है. Okay. So check over here, deferred income, debit, you are paying to bank. Achha, to the extent available, balance debited to P&L. Asset में ले गए तो asset को debit करो to bank. Okay, moving ahead. Question number 16. Question number 16. Okay, the government is giving you an interest-free loan equal to 50% of the cost of plant. Interest-free loan equal to 50% of cost of plant, and loan you are required to repay 5 years. ठीक है, but a manufacturer has to do treatment of that wastewater, and if at all you are found guilty, you are required to repay the full 25 lakh loan which you received plus a penalty 10 lakh rupee. Cost of water treatment plan is 50 lakhs. Cost of water treatment plan is 50 lakh, and you got a loan of 25 lakh from government. You got a loan of 25 lakh from government. Now see, I have to pay back 25 lakh after 5 years. So uska today's value is the fair value of loan. Uska today's value is the fair value, and based on 12%, so uska fair value is coming. Uska fair value is coming 14,17,500. Acha, so loan you book it in your book. The loan will be recognized at 14,17,500, but you got 25 lakh. The bank debit is 25 lakh, but our loan is 14,17,500. Whatever I have to pay, uska present value. Difference is deferred government grant. Difference is deferred government grant. Did you understand? So I bought a machine of 50 lakh. That is basically machine to bank. Now they gave me a loan of 25 lakh. I'll record loan at the fair value. Whatever I have to pay in future, uska present value. The loan credited at fair value, I received 25, difference is deferred government grant. Fine. Okay, so now first year the deferred government grant is to be taken to P&L over a period of 5 years, because loan will be there for 5 years, and on loan interest will accrue at 12%, then loan ka closing balance will come. Okay, so going over here, check over here in first year, out of 50 lakh asset, 10 lakh depreciated 5 years mein. And out of your deferred government grant 10 lakh something, 1/5 goes to P&L. As a second year also this deferred government grant goes to P&L. Now end of second year the loan becomes refundable, plus I have to pay a penalty 10 lakh. Okay, end of second year the loan becomes refundable, plus I have to pay penalty 10 lakh. So I'm paying 25 plus 10. Let's first pass entry for 25. When I pay 25, the loan will go away. When I pay 25, what will go away? Loan will go away. Achha, loan will go away. How much is loan in your book? Loan was 14,17,500, but that was 2 years back. Plus karo 12%, again plus karo 12%. Plus karo 12% first year mein, again plus karo 12% second year. So now it is 1,778. We paid 25 lakh, loan of 1778 goes away. Acha, balance lying in deferred income, debit it, and extra is now debited in P&L. So loan goes away, 1778. Baki ka, whatever is the balance lying in deferred income, that you debit, and remaining you debit it in P&L. Acha, plus I am paying 10 more lakh penalty. Deferred income is already over, so that also will go in P&L. So they have passed this 2 entry. I may pass in combined entry total 35 lakh paid. So in P&L it is 72,000 plus 10 lakh, it's 10 lakh 72,000. I hope this is clear. This is your IND AS 20. Any doubts? Anybody with IND AS 20? Chapter 7 over, going to chapter number 8. Any doubts? Anybody with IND AS 20? Keep smiling, keep replying, have lots of water. Okay, thank you. Moving on to IND AS 19, which is employee benefit. Moving on to IND AS 19, employee benefit. Now see, employee benefits are basically whatever payments you do to employee. So they are all form of consideration given by entity in exchange of services rendered by employee. Okay? An employee may be a full-time, part-time, permanent, casual, whichever. An employee also includes directors as well. Acha. Now employee benefits take 4 forms. They can be in 4 forms: short-term employee benefit, post-employment benefit, retirement benefit, termination benefit, and other long-term benefit. Acha, short-term employee benefit are those which are payable within 12 months from the reporting date. Short-term. Acha. Post-employment benefit, they are those which are payable at or after the retirement. Either it is upon the retirement or after the retirement. Termination benefit, these are payable for terminating them. I'm terminating them, that's why I'm paying this. And other long term is something which doesn't fall under A, B or D. If something doesn't fall under A, B, D, they fall under your other long term benefit. For example, once you complete 10 years in a company, I pay you 1 lakh rupee. Achha, so that 1 lakh, is it payable within 12 months? No. Is it payable upon retirement? No. It's upon completion of 10 years, it will come under your other long term benefit. Okay. Now, how do I account for short-term employee benefits? The short-term employee benefits, they are payable within 12 months only. So, no need of discounting over there. And whatever is basically there, it will go in your P&L. So, it is basically including the salaries which I have to pay, some paid leaves. If suppose they are not taking leave, they can get cash for it. That profit sharing, bonuses, whatever I have to give, that all will be included in your short-term employee benefit. They are measured on undiscounted basis. They do not involve actuarial valuation. And whatever is the expense for the year, that will go in P&L. Expense for the year will go in P&L. If you're paid less, remaining appears as liability. If you're paid more, it will appear as prepaid. Now, coming to the word short-term paid absences. Coming to the word short-term paid absences. Now, pay attention. Many times we grant leaves, sick leave, then we have privilege leave. So some leaves are given to employees. In a year, they can take such leaves. Acha, if they don't take the leave, 2 options. Either that leaves not taken, either the leaves which are not taken. Suppose you are entitled for 10 leaves in a year other than the public holiday. So entitled to 10 leaves in a year, you are taking only 4. The 6, if it can be carried forward, you can take it in next year, or you can get cash for it in future. That is accumulating. Non-accumulating means if you did not took it, it lapses. So out of 10, you took only 4, remaining 6 gone. That is called as non-accumulating. So accumulating are those which can be carried forward. Non-accumulating are those which cannot be carried forward. Achha, now accumulating can be again divided in 2 parts. Wasting. Wasting means, okay, it's accumulated, carried forward, and you can get cash for it later on. That's wasting. Non-wasting means you cannot get cash for it, but you can use it later. Ab next year, mein usko use kar sakte ho, you cannot get cash. Achha, now very simple. Those which are accumulating, can I say this year you're not taken, future mein you will take, achha, either cash for it or you'll use it in future. So for that, I need to create a provision. Why I need to create a provision? Very simple. Future mein I need to pay cash for it. Achha, or else future mein you will not work, but still I have to pay. Future mein you will take those leaves, you will not work, still I have to pay. So I need to create provision only for accumulating paid absences. For non-accumulating paid absences, no provision required. Okay, the check over here, entity shall recognize no expense or liability for this non-accumulating one. Non-accumulating one, don't do it. Acha, for the accumulating one, the entity shall measure the expected cost of accumulated paid absences, whatever is going to come. You need to record it, you need to create a provision, show it as a liability. Only accumulating one, not the non-accumulating one. Acha, moving ahead, taking only important questions. Okay, come directly to profit sharing and bonus plan. Come directly to profit sharing and bonus plan. Now, many times we give bonuses to employees. Many times, what do? We give bonuses to employees. Okay? Now, expected cost of bonuses or profit sharing also we do sometimes, they should be recognized if I have a legal or a constructive obligation. You have legal or a constructive obligation, and a reliable estimate of the obligation can be made. Okay, now suppose in this year we made a profit, and every year we give 2% of profit as bonus to create a provision for that 2% which is to be given to employees. Create a provision for 2% which is to be given as employee, but there has to be either a legal obligation or there has to be a constructive obligation. Are you getting it? Okay. Okay. Now coming to the word post-employment benefit. Acha, post-employment benefit are to be paid when? Post-employment benefit are to be paid when? Acha, now Girdhar Lal is a question, sir, for non-wasting. For non-wasting, I don't have to pay cash, but they can take the leaves in future. Do you need to make provision? Answer is yes. Sir, why I have to make provision for non-wasting? So future में they will not work, but still I will have to pay. Work नहीं करेंगे तो भी मैं pay करने वाला हूँ. For that I need to make a provision. So for all accumulating, whether wasting, whether non-wasting, the provision is required. Okay, now post-employment benefits are those which are to be paid at the retirement or after the retirement. Now they are divided in two parts: defined contribution plan, defined benefit plan. Simplest example of defined contribution plan is employees provident fund. Now remember, employees provident fund, 12% of salary contributed by employer, 12% of salary contributed by employee. That way the contributions are done. Okay, so I can understand over here for defined contribution plan, there's a fixed contribution, you do it. The employee is required to contribute a fixed amount. Later on, what employee gets, I'm not concerned. I just have to contribute a fixed amount every year, 12% of salary, I'll contribute. That's it. What happens to that later on, what employees are getting later on, there's nothing on me. That's called as a defined contribution plan. It's a defined benefit plan. Under defined benefit plan, the benefit to be given to employees kind of defined by way of a formula. Like suppose gratuity. Gratuity is to be paid to them based on last drawn salary, number of years of service, uske basis pe. So here the benefit to be given to them is defined by way of a formula. ठीक है? So now what happens over here is I don't have to make a fixed contribution. ऐसा कुछ नहीं है. But the thing is, last में I'll have to pay. And it depends on salary ka increase, how much it happens, how many years they stay with me. So that all things are basically coming into picture. Here my obligation is limited to the amount which I have to contribute. Here my obligation is to provide the agreed benefit. Now actuarial risk, investment risk falls on employee. Here actual risk, investment risk falls on me. Ab sir ye kya hai? Now normally I contributed 12%, then government will invest that 12%. Whatever I contributed to PF department will do investments, and investment work well, employee gets more. Investment doesn't work well, employee gets less. So can I say investment risk fell on employee? But over here, imagine if it's a defined benefit plan, I have to give certain benefit to employee. In future. For that purpose, I'm doing some investments. Payment I have to do in future. But for that purpose, I'm doing certain investments so that later I don't have a fund crisis when I have to make payment. Okay, if I do investment, that investment does well, my benefit. Investment doesn't do well, my loss. Employee ko whatever benefit I have to give, that only I have to give. So here, can I say that investment risk is falling on me? ठीक है. Acha, one more thing. Actuarial risk. What is this actuarial risk? Whenever I have to pay gratuity at the end, see, I have to pay at the end when they retire, but I'll have a actuary hired who will tell me how much provision to be done every year. Now, actuary told me to do some provision of some X amount. Actual payable was Y. I cannot tell to employee, no, actuary told me only to pay X amount, I cannot pay you Y. That actuarial risk is on me. So whenever it's a defined benefit plan, the actuarial risk, investment risk is all on me. When it's a defined contribution plan, you contribute fixed amount, you are gone. So actuarial risk, investment risk falls on employees. Fine. Now, state plans. Normally, your state plans are defined contribution plan where you contribute a fixed amount. Insured benefit plan, you take an insurance, you pay a fixed premium kind of thing. An insurance company will pay to your employee. So normally, they are again a defined contribution plan. Okay. Now, how do I account for defined contribution plan? How do I account for defined benefit plan? If it is a defined contribution plan, can I say how to contribute a fixed amount? So whatever amount to be contributed for the period will be the expense for the period. Whatever amount I have to contribute for the period, that will be expense for the period. And here there is no actuary required. There is basically no discounting. Every year whatever I have to contribute, that is basically my expense for the period. If it is not paid, it will appear as a liability, the balance. If it is paid in advance, the extra will appear as kind of prepaid. Okay, this is defined contribution. Okay, check this question 11, important one. Check this question 11, important one. We are doing all important questions, so please pay proper attention. Okay, Siska Limited as a head count, how many employees? 1,000. They get 35 days of privilege leave, 15 days of sick leave, 10 days of casual leave. Superb company. 35 plus 15 plus 10, 60 days leave other than Saturday, Sundays and public holiday. Saturday, Sunday, public holiday comes to around 140 days plus year 60. You don't work for more than half year. Now, out of privilege leave, sick leave, 10 PL, 5 SL can be carried forward to next year. So 10 PL, 5 SL can be carried forward to next year. Okay, now what do you expect? You make a provision based on your expected cost which is going to come. So 200 employees will take 5 days PL. They will take 5 PL and 2 days SL, and 800 will avail 10 PL and 5 SL. Now see, I give you to carry forward this much. It doesn't mean that you will be able to use it in next year, because the carry forward is only for next year. And next year again you will get this 35, 15, 10. So whether you will be able to use or not, so they are telling 200 employee will be able to use how many next year? जो carry forward था उसमें से how many they'll be able to use? 5 days PL, 2 days SL. So 200 into 5 days, that much PL, 200 into 2 days, that much SL. 800 employees, they will be able to use all 10 days PL, 5 days SL. So I need to make a provision for PL, 200 employees, they will use 5 days, 800 employees will use 10 days. SL, 200 employees will use 2 days, 800 employees will use 5 days. This many man days ka salary provision I need to make for that accumulating paid absences. Is it clear? Second, you are distributing. Company has been incurring profit since many years. You have distributed 4%. It has decided to distribute 4% during the year. I'll be distributing 4%. But see, I'll be distributing 4% not now. I'll be distributing that 4% of profit in Diwali. So if you stay till Diwali, you get bonus. If you don't stay till Diwali, I'll not be paying bonus to you. And it's not like your bonus goes to someone else. No, so effectively I'll be required to pay not 4%. Effectively I'll be required to pay is only 3.5%. And profit earned is 2,000 crore. So 2,000 into 3.5 will be my effective cost. 70 crore provision for bonus. You should do it. Third one, you're required to contribute 100 crores, which will fall due within 12 months only. I'm required to contribute 100 crores for this period. This will be falling due within how many? 12 months only, and company has already paid 20 crores to employees. 20 you already paid, remaining 80 will appear as a liability. So check out over here, 100 crore will be expense, 20 you already paid, 80 will be regarded as liability. So 3 points were there: accumulating absences, bonus, and third, defined contribution. Defined contribution. Same 12th is duplicate question similar to it. Now we go to accounting for defined benefit plan. Now we go to accounting for defined benefit plan. That was accounting for defined contribution. Now under defined benefit plan, the benefit which I have to give to employees kind of fixed. by way of a formula, and I need to make a provision for gratuity every year, even though I have to pay at the end P&L to provision for gratuity. Now making provision is mandatory, P&L to provision, but I have to pay gratuity at the end. I may do investment for it. So some company, they don't just do provision, they also invest that much amount outside the business so that later on when payment is to be done, they can sell off investment. With that money they can pay the employee. So some people, what they do, they also do investment. They don't just make a provision, for wo money they will invest also. So if at all you're doing investment, it's called funded. If you're not doing investment, it's called unfunded. Okay. Now, whenever you're accounting for defined benefit plan, three things. What will come in your balance sheet? What will come in your P&L? What will come in your OCI? What will come in your balance sheet? What will come in your P&L? What will come in your OCI? Achha, first of all, coming to your balance sheet, can I say every year I keep making provision? Every year I keep making provision. So total provision, that will come on liability side. And opposite, I might have some investments. If I have some investment, opposite side, that is investment. So there are two things. One, obligation hai aapka, and then second, you are having is some investments. So in your balance sheet, you are having either a deficit or a surplus. If liability more, provision more than the investment, deficit. If investments more than the provision, then it's called surplus. Now, how do I find out the provision? How do I find out the provision? To see, employees have worked this year plus the prior year. Employees have worked this year plus the prior year. Because of working in this year as well as the prior year, what is the benefit accrued to them? What is the benefit accrued to them? ठीक है, अब उसका present value निकालो. This I have to pay after so many years, उसका present value. Like very simple. I will have to pay 1 lakh rupee after 10 years to them. I'll have to pay 1 lakh rupee after how many years? 10 years to them. So every year they work, can I say 10,000 gets accrued? They worked for first year, so 10,000 got accrued, which I have to pay at the end. Again they work one more year, again 10,000 accrued. Again they work 1 year, again 10,000 accrued. So I'll have to pay 1 lakh rupee at the end of 10 years. So 10 years के बाद 1 lakh है. So can I say for each year it's kind of 10,000. So you work 1 year, your 10,000 get accrued, but I have to pay when? At the end of 10th year. ठीक है. So suppose you have worked already 5 years. If you already worked 5 years, so can I say 50,000 got accrued? So I'll have to pay 50,000, but when? Accrue 50 हुआ है. I have to pay when? After 10 years are completed. अच्छा, 5 years already completed. So after 5 more years I have to pay 50. So उसका present value should be the liability in your book. So find out the amount accrued to them for the current and past period का service. उसका present value निकालो. This is your liability. Opposite, you have certain investment done, the fair value of asset. Difference is basically your deficit or surplus. Surplus will be subject to asset ceiling. Surplus will be subject to asset ceiling. So if at all I have some extra surplus but I cannot get it back, then don't record that. Acha, now, so if your liability is more, we call it as net defined benefit liability. If your asset is more, we call it as net defined benefit asset. And that surplus will be subject to asset ceiling. So if full surplus is not recoverable in form of refund or reduction in future contribution, then you will not show that extra surplus on your asset side. Okay, moving ahead. What will come in your P&L? What will come in your P&L? Achha, employee worked this year. If employee worked this year, can I say again 10,000 got accrued? I told you I have to pay 1 lakh after 10 years. So can I say for each year 10,000 indirectly? So they worked this year, okay, 10,000 got accrued. That's called current service cost. Second, suppose some employees are leaving. And I'm paying them money right now. Provision was done of a X amount, I'm paying them a Y amount. So provision kuch aur tha, what I'm paying today to them is a different amount. So that's called basically a gain loss on settlement. So one, current service cost. Second, gain loss on settlement goes in P&L. Acha, any past service cost. Imagine we decided I'll be giving you 1 lakh after, or I'll be giving you 1% of last drawn salary as pension later on. Now 1% I'm making 1.25. So when you say plan is amended, so you made a provision till now based on 1%. But now you have decided I'll be giving not 1%, I'll be giving 1.25%. So when I say all provisions past mid done will get changed. And now uska effect is to be given now. So we had done a provision considering 1% to be paid. Now provision will be based on 1.25% to be paid. This is called as plan amendment. Uske related cost, whatever comes, that also goes in P&L. तो वन करंट सर्विस कॉस्ट, दे वर्क फॉर दिस ईयर, उसका कॉस्ट. सेकंड प्लान अमेंडमेंट का कॉस्ट. थर्ड गेन और लॉस ऑन सेटलमेंट का कॉस्ट. एंड फोर्थ नेट इंटरेस्ट ऑन डिफाइंड बेनिफिट, नेट डिफाइंड बेनिफिट लायबिलिटी. ऑन your see, you had booked a liability at present value. You had booked a liability at present value. So on that, interest expense will come. And on your investment, interest income will come. Net interest will go in your P&L. ठीक है, तो current service cost we already did it. Now, attributing benefits to each period. I told you 1 lakh I have to pay after 10 years. So I am kind of attributing 10,000 to each year. Now, employee service give rise to obligation under defined benefit plan even if the benefits are conditional upon future employment. Okay, you will be getting gratuity provided you have to stay minimum 5 years. Provided you have to stay minimum 5 years. Now, suppose employee has just worked 1 year. So, should I do provision for gratuity? Should I do provision for gratuity? As such, he has to stay minimum 5 years. So, should I start making provision only after 5 years are over? Answer is no. See, if at all he leaves in 6 years, if at all he leaves in 6th year, can I say I have to pay a gratuity for all 6 years? So make a provision all the years. First year also, even though he has not completed 5 years, start making provision. But wahan pe you multiply it with basically the probability that he may leave in between. So you may do a lesser provision based on that. For example, gratuity is payable only if he remains for 5 years. Even if he has just completed 1 year, still will have to make a provision for gratuity. But we will consider the probability that he may leave in future. Accordingly, the provision may be done at a lesser amount. ठीक है. Now, the obligation increases every time we create provision till the time when further service by employee will lead to no material amount of future benefit. अच्छा, तो obligation increases till the time when further service by employee will have no material amount of further benefit. अच्छा, तो pay attention. I say that if you work for 10 years, I'll give you 1 lakh at the time of retirement. If you work minimum 10 years, आपने 10 years काम किया, I'll give you 1 lakh when at the time of retirement. अच्छा, someone worked 12 years, still you will get 1 lakh. Someone worked 15 years, still you will get 1 lakh. So can I say that 1 lakh is for working for 10 years? So for first 10 years, the benefit accruing is 10,000, 10,000, 10,000, 10,000. 11th year you worked, extra benefit is 0. 12th year you worked, extra benefit is 0. So now can I say after 10 years, extra benefits are not accruing? So don't make provision after 10 years. The provision should be only for first 10 years. If employee works for more than 10 years, still you will get rupees 1,000 only. Still get only rupees 1,000 only. Extra service from 11th year does not give any additional benefit. So no expense will be recognized from 11th year onwards. Okay, moving ahead. Okay, question 22. I'm taking all questions marked as important. Okay, going to question number 22. Gratuity shall be payable to employee who has stayed for minimum how many years? 5 years. And the amount payable is determined based on formula, number of years of service, last on salary, and the total amount will not exceed 10 lakh. Gratuity का total amount will not exceed 10 lakh. ठीक है. तो first I need to estimate how many years के बाद he will retire. First I have to estimate how many years के बाद he is going to retire. ठीक है. Now there are two kinds of employee. One whose gratuity amount is exceeding 10 lakh. Second whose gratuity amount as such is not exceeding 10 lakh. अच्छा, those who's not exceeding 10 lakh, तो for them you book a provision for throughout the life. Okay, so for those employee whose amount payable does not exceed 10 lakh over the expected period of service, this guy will work for 20 years. 20 years के बाद also, after 20 years also, he'll be getting 4 lakh rupees. अच्छा, तो he'll get 4 lakh after 20 years. तो can I say for each year 20,000? For each year 20,000 हो गया. अच्छा, for those employees whose amount as such exceeds. Now, the thing is, we thought they are going to leave after 20 years. And if I consider last drawn salary into that wala formula, so his basically amount is becoming 20 lakh. Acha, so his amount will become 20 lakh for 20 years. So can I say 1 lakh for each year? Okay, so you book 1 lakh basically based on 1 lakh for each year. After 10 years, stop booking further expense for him because total maximal pay is only 10 lakh. Now you worked 11, 12, 13, 14, 15th year, his amount total will remain 10 lakh only. अच्छा, प्लस वन मोर थिंग, तो यहाँ पे एक्सपेक्टेड पीरियड ऑफ सर्विस इज एज्यूम्ड एज 10 years. अच्छा, तो दोज हुज अमाउंट इज नेवर गोइंग टू एक्सीड 10 lakh. 10 lakh एक्सीड ही नहीं होने वाला है. फॉर देम फॉर ऑल 10 years एक्सपेंस विल बी बुक्ड. फॉर दोज हुज अमाउंट इज गोइंग टू एक्सीड 10 lakh, तो 8 year के बाद 10 lakh एक्सीड हो गया तो डोंट बुक इन 9th and 10th. Plus, even though gratuity is payable after 5 years, you need to start booking gratuity का expense from year 1 only. But while booking in year 1 to 5, you need to consider the probability they may be leaving in between. I hope this is clear. Okay, now past service cost. Past service cost, there are two things. One is called plan amendment, second is called curtailment. Curtailment, settlement are kind of similar. Okay, the one you amend the plan. I told you starting में I said pension will be 1% of last drawn salary. Now I am telling pension will be 1.25% of last drawn salary. So due to plan amendment, some extra cost comes up, or there's some reversal in cost also. That goes in P&L. Curtailment is you're settling, so liability goes away, you pay something, difference. Liability goes away, you pay something, the difference will also go in your P&L. ठीक है? Now check over here. The pension plan provides for 2.5% of final salary. 1st April ko you made it to 3% of final salary. So can I say because of that some extra expense is coming? The additional benefit coming is this too. For those who have already completed 7 years, for those who have not completed 7 years, the total is coming this. This you record it in your P&L. So this should be recognized in P&L immediately. Gain loss on settlement, I already told you it's similar. Net interest also comes in P&L. You book the liability at present value. So unwinding happens, so interest expense will come. On the investment, interest income will come. The net will go in your P&L. Now what will go in your OCI? So what will come in balance sheet we understood, what will come in P&L we understood. Now what will come in your OCI? One actuarial gain loss. Actuary changed his assumption. Actuary has changed the assumption. Because of that, this year may the expense increased or expense decreased. So earlier basically the provision was done based on certain assumption. Now he has changed the assumption. So because of that, provision goes up or down. That will come in OCI. Plus return on your investments. Return on your plan asset. That investments are called plan asset. So return on plan asset other than interest income. So suppose your investment was 100. उसमें normal interest income is 6 rupee. So it should become 106. But actually उसका closing fair value is 115. It should become 106, but closing उसका fair value is 115. So extra 9 rupee will come in OCI. So interest on plan asset goes in P&L. Return on plan asset other than interest will come in your OCI. ठीक है, this is basically done. Now most important is this. Most important is this for your IND AS 90. Okay, so we have one, the provision for gratuity, or we can say basically your net defined benefit obligation, and opposite we have investments. That's nothing but your plan asset. Okay, your plan asset, there was some fair value at beginning. You did some extra investment that will be added to your investment. You got returns. Pacha, some investment sold during year, तो minus utilize for payment. तो opening था ये, this is investment done, this is investment sold. You got some return and this is your closing investment. ठीक है? Now this is your total return. In this I can basically still bifurcate. Interest add करो, बाकी का हो गया. If closing is available, इसमें interest add करो, remaining will be your return on plan asset other than interest. So generally return on investment other than interest will be the balancing figure, which will go in OCI. ठीक है. Now coming to obligation, opening liability was there. This year employees worked, so some 10,000 got accrued, which is I have to pay after certain years. So uska present value is added. Okay, past service cost, plan amendment, uske related. Acha, if I have settled a liability, तो one, uska payment gets deducted and uska gain loss. So suppose simple, say for example, liability was 100, I paid 95. So payment में 95 and 5 rupee gain, total 100 goes away liability. तो liability was 100, I'm paying 95 on settlement, तो यहाँ पे 95 I deducted, here I'll deduct 5, can I say total 100 liability goes away that way. Okay, add interest, opening था उसमें interest because we booked at present value, the unwinding of discount happens, interest. And actuarial gain loss, remember actuary changing assumption, this will be generally the balancing figure and this is the closing. So opening plus this year's basically expenses added, past service cost added, payments what you've done or gain loss on settlement, that will come up. Acha, opening के ऊपर interest is on opening, and closing will be given to you actuarial gain loss, that will be the balancing figure. The actual gain loss will be balancing here, and return on plan asset other than interest will be the balancing under the plan assets. Okay, check question number 25. Check question number 25. Okay, RTP May 2020, May 22 exam. On 1st April, the fair value of asset 2040 and present value of your obligation 2125. The opening 2040, 2125. Interest on both you take it. Interest on both. यहाँ पे interest income, यहाँ पे interest expense. Interest income 102, interest expense 106250. Rate is given 5%. ठीक है. Now you received contribution 425. Extra investment done. Add it in investment 425. Extra investment done. ठीक है. Current service cost, employee worked one more year, उसके लिए 510, तो add it in liability 510, ये 510 added, तो ये this much portion is done. Okay, now they've given the fair value of plan asset closing and the liability का closing. This too is given closing. This too is given closing. अच्छा, there's one line which I forgot. ये amounting to 4, and benefits of 255 are paid. Or liability of 255 paid. Always assume investment sold with that money liability paid. Always assume investment sold with that money liability paid. So investment sold, investment goes down. Liability paid, liability also goes down. Investment sold, investment goes down. Liability paid, that also goes down. So this all figures done. Closing is available. ये difference आ गया. तो asset में the difference is return on plan asset other than investment income, other than interest income, and obligation में the difference is your actuarial gain loss. This too goes in OCI. ठीक है. Interest goes in P&L. Current service cost goes in P&L. ये investment done, investment to bank. This is investment sold, liability paid. This will not be affecting your P&L or OCI. So this too goes in OCI and this will be going in your P&L. ठीक है, this is basically your question. Now moving ahead. Question 28 is similar one. Question number 28 is similar one. I am not taking that. Now other long-term employee benefit. Other long-term employee benefit, how to account? See, other long-term employee benefit, how do we account? It is accounted in a similar manner as your post-employment benefit. Only thing is nothing will go in OCI. So it is accounted in the same way as post-employment benefit. Only thing is nothing will go in OCI. So यहाँ पे if you work for 10 years, after 10 years only, not on retirement, on completion of 10 years, I'll pay you something. On completion of 10 years, I'll pay you something, say 1 lakh rupee. So 1 year you work, 10,000 accrued, but I have to pay at the end of 10th year. That way it will be there. Similar to post-employment benefit, only difference post-employment benefit में I try to assume when I'll have to pay. वो कब retire होगा वो I basically assume. यहाँ पे it will not be there and nothing goes in OCI. Next, termination benefit. These are paid for terminating the employment. अच्छा, upon termination you will get your gratuity, you will get your PF, वो अलग है, that is post employment only. But because I terminated you, I paid something extra to you, that's coming under termination benefit. That's coming under termination benefit. Now check over here, if it is expected to be settled within 12 months. Termination benefit expected to be settled within 12 months, account it like short-term employee benefit. Account it like short term, so undiscounted basis. But if it is to be settled after 12 months, then account it like long term employee benefits. So this is termination. If you check out over here, we plan to close the factory in 10 months and because we are terminating employee, we are terminating the employment, I'll be paying what? So I'll be paying basically a cash payment. Achha, those who stays for 10 months, they will get 30. Those who leave right now, usko 10. Achha, those who are leaving right now, usko I'm paying 10,000. Those who will stay for 10 months, usko I'll paying 30. So can I say extra 20 is for staying for 10 months? So termination benefit is only 10,000. Termination benefit is only 10,000. Extra 20 is for staying for 10 more months. Achha, so day one only when you decided to terminate, you make a provision of 10,000 for all employees. You make a provision of 10,000 for all employees. Sare employees ka provision kar lo 10,000 rupees on day one only, whenever you decided this all things. Now extra 20 you book it over a period of 10 months. So 10,000 immediately on day one for all employees. Extra 20 which is payable, for certain number of employees, that is to be booked over a period of 10 months. Clear? This is your IND AS 19. Any doubts? Anybody with IND AS 19? Any doubts? Anybody with IND AS 19? I want answers from each and every one of you. Keep on replying, keep on drinking water, keep yourself fresh. Thank you. Moving on to IND AS 37. IND AS 37 is provision, contingent liability, contingent asset. Provision, contingent liability, contingent asset. Directly come to the definition of the word provision. Provision kya? It's a liability. Provision is a liability, but of uncertain timing or amount. Amount is basically not fixed, or when it will come is not fixed. It's a liability of an uncertain timing or amount. Achha, liability is what? Liability is a present obligation arising from past event, settlement of which will require outflow of economic resources. And when do I say it's a present obligation? On balance sheet date, it's considered probable, more likely than not. Achha, so provision is a liability. Liability is a present obligation, and present obligation is something which is probable, more likely than not. ठीक है. Now the obligation can be either a contractual or a legal obligation, or it can be basically a constructive obligation. The obligation can be either a legal or constructive. Legal means through a contract, through a law, or constructive is basically due to your past practices. Due to your past practices. Okay. Now when should I record a provision? When should I record a provision? One, there has to be a present obligation. There has to be a present obligation, legal or constructive, and it's probable, more likely than not. So there has to be a present obligation. Second, outflow of future economic resources is probable. It's probable the outflow of economic resources will be there, and you're able to measure it reliably. Achha, if outflow of economic resources is not probable, don't record provision. Same way, if reliable estimate of outflow cannot be made, don't make a provision. So sir, in that two cases, if outflow of economic resources, it's a present obligation. It's a present obligation, outflow not probable. Show it as contingent liability. It's a present obligation, outflow is also probable, but we are not able to measure it. We are not able to measure reliably. Show it as contingent liability. ठीक है. Now, whether it's a present obligation or not, you take into account all the evidences which are available, including the opinion of expert. Plus, you also take into account events after the balance sheet date, provided they are an adjusting event. Provided they are a adjusting event. Okay. Now, provision is recognized basically whenever there is a present obligation, but pay attention. No provision is recognized for the loss which will come up in future. Like say, this year we made a loss 1 crore. I am pakka sure next year also will have a loss, but I can't make a provision for that right now. Unless my contracts are onerous. If I have an onerous contract, I make a provision for onerous contract, but I don't have any contract. Koi future related sales contract are not there. But I know pakka there will be some losses coming in future. I cannot make provision for operating loss which will be coming in future. Plus, if any loss can be avoided, or if any future expenditure can be avoided by future course of action, then don't create a provision on that. For example, after 5 years, your machine needs a major overhaul. Your machine needs a major overhaul after 5 years. So should I make a provision for that overall expense which will come after 5 years? No. Why no? Reason, you may sell off the machine before that. You may sell off the machine before that, so it can be avoided. You don't make a provision for that. Provision is for something where it cannot be avoided. Acha, whether it's a constructive obligation or not. Now see, management normally basically gives bonuses. तो वो ठीक है, every time you're doing it, past practice है आपकी, constructive obligation happen. Otherwise what happens is, unless you declare it to public or communication is not done to public, then only the constructive obligation arises. So because of our basically announcements, there might be a constructive obligation, but announcements not done, then don't take it as constructive obligation. Okay. Achha, if management or BOD decision is communicated after year end, April May we did an announcement, so constructive obligation came in April, not in March. It came in April, not in March. Provision will not come in March. ठीक है. Achha, now reliable estimate, that's okay, fine. Some examples, staff training. Because we changed our system, we have to give staff training. Should I make a provision for staff training to be given? No. I can avoid it by hiring directly a trained employees. So no. A requirement to fit smoke filters. I have to fit a smoke filter. If I don't fit it, penalty will be there. So should I make a provision for cost of smoke filter? No. Don't make a provision for cost of smoke filter. If you don't fit it, date gone, you make a provision for penalty payable, but not the provision for cost of smoke filter. ठीक है. Next, refurbishment cost. I have to basically replace the furnace after every 5 years. So I may sell off that furnace before 5 years, so no provision requirement. Achha, aircraft needs a overhaul once every 3 years. I may sell off the aircraft before 3 years, so no provision required. Land we are contaminating, and basically the cleanup of land will be required. Achha, if it is there in contract, legal obligation. Achha, if it's our past practice, we have put an announcement kind of thing, then it's a constructive obligation. Then still you have to create a provision. तो create करना पड़ेगा. Fine. This is okay. Offshore oil field is fine. Court case is fine. Chalo. Moving ahead, questions में which are important. Question number 5. Come to question number 5. XYZ Limited offers a 6 months warranty on all its equipment. ठीक है. And आपका gross margin is 40%. You have made a provision. Gross margin is on sales. GP is always on sales. You made a provision 30,000 during the year. Achha, how much warranty is given? 6 months. Achha, you made a provision 30,000 for year ended this, which is 1% of its gross margin on sale of this equipment. Achha, 1% of gross margin. So can I say 1% of gross margin is 30,000. Your total gross margin, can I say it will be 30 lakhs? 1% of gross margin is 30,000. So your total gross margin will be 30 lakh. Achha, and this is 40% of your sales, divide by 40%. This is 40% of your sales, divide by 40%. So can I say total sales for the year is 750? Sorry, not 750, 75 lakh. The total sales for the year is 75 lakh. 75 lakh ka 40% is basically your margin. Margin ka 1% is your provision. This is what you have done. Now just tell me one thing. 75 lakh is my total sales. 75 lakh is my total sales for the year. Sales which were done in Q1. The warranty will get expired in Q2 only. Not Q1, H1, half year, first half year. The sales which were done in first half year from April to September, can I say uska warranty would get expired in this year only, October to March mein. So I don't need any provision for that. Uska warranty already expired. Provision required only for those which are sold in Q2. Provision required for those which are sold in Q2. Q2 mein which I have sold is divided by 2. Can I say 37 lakh 50,000? 37 lakh 50,000 is my sales in Q2. I need provision for that. And kitna? Based on past experience, it is 1% of equipment sold. So uska 1% chahiye. So I need a provision 37,500. We have a provision 30,000. 7,500. I need to create more. Check out. Sales done from 1st April to September. Return would have came in current year only, already accounted. We don't need provision for that. For sales done in Q2, so not Q2, H2, I need a provision. So basically your sales is 75 lakh for the full year. So second half ka it becomes basically 3750. I need a provision 37,500. It was 30. ठीक है. अच्छा, had warranty period been 2 years, so I need basically 1% of total. Had warranty period been full year, तो 75 lakh का 1%, I need 7500. Had warranty, अच्छा, this is done. Had warranty period been this, so then I need 75 lakh का 1%, 75,000. ठीक है. Going to question number 6. This question actually doesn't have a relevance right now. It was during COVID time it was there, so now leave it. This is not relevant as of now, so I'm not going into that. Now going to contingent liability. That was the word provision. We know provision is a present obligation. Now contingent liability is a possible obligation arises from past event, occurrence of which, whether it will come or not, the occurrence of which will be confirmed upon happening or non-happening of uncertain future event not within the control of entity. Or present obligation, but it was not recognized. Why? Because outflow of economic resources was not probable, or a reliable estimate of outflow was not made. You remember 3 criteria were there for recognizing provision. Usme, if outflow not probable, show it as contingent liability. If reliable estimate cannot be made, show it as contingent liability. Then normally contingent liability is a possible obligation, but it can be present obligation under these 2 cases. Now what do we do with this contingent liability? Do we recognize it? Answer is no. Do we recognize it? Answer is no. We don't record, we disclose it. We disclose it in notes to account unless the chances are remote. If the chances are remote, no need to disclose in notes to accounts also. ठीक, and they are to be continuously assessed. Once they become probable, you need to create a provision for it. This is contingent liability. Acha, contingent asset, same definition as contingent liability. It's a possible asset. It's a possible asset that arises from past event, the existence of which will be confirmed upon happening or non-happening of uncertain future event, not within the control of entity. Now, what do we do with a contingent asset? See, contingent liability is not recognized, disclosed in notes to accounts unless the chances are remote. What do I do with contingent asset? Contingent asset are also not recognized. They will be disclosed in notes if probable. Acha. They are disclosed when they are probable. Probable hai to disclose. Once they become virtually certain, they are recognized. Acha. Okay, for a contingent liability, when the liability becomes probable, we record a provision. Contingent liability probable hogi, to provision karte hain. Contingent asset becoming probable, we disclose. They are recognized when they are virtually certain. And they are also to be continuously assessed. Whenever they become virtually certain, we'll recognize it. Fine. Question number 7. Now see, we are basically entering into a sales contract. We are required to deliver some sugar. Delivery is to be made in 2 months. Failure hua, we have to compensate by 30 lakh rupees. Our vehicle met with an accident. Okay, we are covered by insurance. But now the cost of goods lost is 2 crore 50 lakh. And basically we would have given them late. So can I say this penalty 30 lakh would be payable? Uska provision karo. You gave late delivery. Accident hua, they don't care. Basically the customer is telling you gave me late. So now I have to give 30 lakh. Iska provision karo. Now, you got a informal communication from insurance company. Informal communication is not virtually certain. Informal. It's not virtually certain. Now, the 250 ka loss you book it. 250 your cost of goods which are, wo loss book kar lo. This loss you book. 30 lakh rupees provision you make it for compensation payable. Acha, insurance claim what I'll be getting. That you should record only when it's virtually certain. So don't book it right now. So currently, you can disclose a contingent asset. You can book a contingent asset, 85% of 250 which you will be getting. So that contingent asset is allowed, but you can't book insurance claim receivable because it's not virtually certain. It's probable, so you show it as contingent asset. Achha, this question already covered under IND AS 20. Just remember you are entitled to get a duty drawback wala thing, so I'm not doing it again. It's already done. How do I measure? How do I measure the provision? The provisions are measured based on your best estimate. It's best estimate. ठीक है. Now there are two methods of making the estimate. One is called as a most likely, second is called as expected value. Most likely method you use when there are only two outcomes. If there are only two outcomes, either penalty 1 crore or 0. Either penalty 1 crore or 0, go for the most likely. And expected value is used when there are more than two outcomes with the probabilities. Then you go for the expected value method. This is what they have given, and the provision is measured before tax. Before tax provision is to be measured. Acha, whenever you are making a provision, risk and uncertainty, because of risk the amount may be more or less. So if you feel amount may be more because of extra risk uncertainty, तो provision may add 5% for risk and uncertainty. Provision may add 5% for risk or uncertainty. Acha, should I make a provision at a present value when the effect of time value of money is material? If effect of time value of money is material, then you make a provision at its present value. तो present value पे जाना पड़ेगा, that is there. And whenever you're taking a present value, the discount rate should be a pre-tax rate specific to that liability. Specific to that liability. Okay, now the effect of possible new legislation. Effect of possible new legislation should be considered only when the legislation is virtually certain to be enacted. I'm not telling it should have been enacted. It should be virtually certain to have been enacted. Next, expected gain on disposal. Now, whenever I'm making a provision, imagine, say for example, simple case. I install a machine. Can I say at the end of the life I have to dismantle it? The provision for dismantling is done. The provision for dismantling required at the present value of expense to be incurred at the end. Now at the end, after dismantling, I'll sell the machine. And upon sale of machine, there will be a gain coming. So machine dismantle karke I'll sell. Upon sale, I'll be having a gain. So does it mean I should not make a provision for dismantling? So gain expected from disposal should not be taken into account while measuring a provision. तो उसमें gain आएगा, leave it, that you don't consider right now. That is not to be considered right now. Okay, coming to question number 12. There's a present obligation to dismantle the plant. An estimated total cost 50 lakh. Present value is 30 lakh. So I'll make a provision for 30 lakh, but there risk and uncertainty. And उसके लिए I want 5% extra, so you make a provision 3150. Risk and uncertainty के लिए you can add that 5%, it's fine. Okay, question number 14. Question 14. Marico has an obligation to restore the environment. ठीक है? And you have to carry out this restoration in two phases. Okay, you have to incur in first phase 2 million to remove the contaminated soil. Second phase, which will start 3 years later from the end of first phase. First phase end हुआ, उसके 3 years के बाद I have to do a second thing and I have to spend 3.5 million for replanting. ठीक है. The first phase will commence in few months time and it will be completed in basically 31st March 03. अच्छा, today's date is 31st March 2. Acha, the first phase ka payment will come on 31st March 3 after 1 year. The first phase will come after 1 year. Second phase will come after 4 years from today. First phase complete, uske 3 years ke baad. The first phase 1 year from today. Second phase 4 years from today. Provision should be at the present value. So ye PVI for 1 year, ye PVI for 4th year. Acha, now I'm making provision, but suppose I'm going to get some reimbursement. I'm making provision, but suppose I'm going to get some reimbursement. What should I do? मुझे reimbursement मिलने वाला है. तो reimbursement receivable should be shown as a separate asset. तो provision should not be netted. Provision को net नहीं करना है. Reimbursement receivable should be shown as your separate asset. Did you understand? उसको अलग से asset की तरह दिखा. Now, when I should book it? Whenever it's virtually certain. When I should book it? Whenever it's virtually certain. Separate asset. In your P&L में, you did a provision, there's an expense. You booked a reimbursement receivable, there's an income. So, P&L में net can be shown, net expense can be shown. But in your balance sheet, provision appears on liability side, reimbursement receivable will appear on your asset side. So, in SOPL, it can be presented net, not in your balance sheet. Achha, now suppose I'm a dealer. I'm dealing in basically Samsung washing machine. Customer complained about some washing machine. If company gives me a replacement, then only I'll give it to customer. company ने मुझे दिया replacement, I'll give it to customer. So then in that case you don't make a provision, because your liability comes when if company gives, then I have to give. But I give to customer right now and then I claim a reimbursement from company. If I give to customer right now and then I claim a reimbursement, then whatever amount you have to give to customer, make a provision for reimbursement receivable, book a separate asset. Clear? Okay, moving ahead. Question number 16. Check out. You are selling cosmetics under brand name B, getting it manufactured from Y, and now the Y will be liable for damage. They will reimburse 30%. They'll reimburse how many percent? 30. During the year, customer has claimed 30 lakhs. Customer has claimed 30 lakhs. Simple. Make a provision 30 lakh. And uska 30%. Uska 30%. 9 lakh. 30%? 30% will be reimbursed to it by Y. So 9 lakh, you show it as a reimbursement receivable. 9 lakh, you show it as a reimbursement receivable. P&L mein 30 lakh expense, 9 lakh income, net 21 can be shown. Balance sheet mein 30 lakh liability, 9 lakh reimbursement receivable is asset. Okay, 17th question over here. There is a scrutiny going on. Some deduction was claimed. Assessing officer has disallowed. You have filed an appeal. You have filed an appeal, but you're not confident. If you're not confident, you have to make a provision. You're not confident, you have to make a provision. Next one, changes in provision. Provision, whatever you have done, uska figures are to be estimated again. You need to review it. And if any change in carrying amount is required, you may change the carrying amount. It will be treated as change in accounting estimate. It will be treated as change in accounting estimate. Use of provision, it can be used to set off the expenditure for which it is created. Set off the expenditure for which it is created. Okay, future operating losses. For future operating losses, we don't make a provision. Provision are not to be recognized for future operating losses. Okay, coming to the word onerous contract. Coming to the word onerous contract. Okay, what do you mean by the word onerous contract? Onerous contract is a contract in which the unavoidable cost of meeting the contract will exceed the revenue to be generated out of it. The unavoidable cost of meeting the contract will exceed the benefit to be generated out of it. That's called onerous contract. I've entered into a contract to supply 100 units of machine. I've entered into contract to supply 100 units every year at a fixed rate. Now the prices of raw material etc. have gone up and I'll be having a loss. So वो आपका onerous contract हो गया. तो next 3 more years I have to supply goods at a lower rate. So that cost of fulfilling the contract will exceed the revenue to be generated out of it. We need to make a provision for onerous contract. Sir, how much provision to be done? Whatever loss which will be coming up under the contract or penalty to cancel the contract, whichever is lower. So cost of fulfilling the contract or penalty, usme se whichever is lower. Now question, what is the cost of fulfilling the contract? The cost of fulfilling the contract will include your direct labor, direct material plus any other cost allocated which is directly for fulfilling the contract. Any other cost which is allocated which is directly for fulfilling the contract. Example, for fulfilling that contract I'll need a machine. वो machine का depreciation. वो machine का depreciation that is allocated basically, that is for fulfilling the contract. Now this amendment. Now the word written is allocation of other costs which are related to fulfilling contract. पहले लिखा था exclusively, assets exclusively used for that contract. Imagine earlier word was dedicated to that contract. If machine was dedicated to that contract, then only uska depreciation was considered. If that machine was used somewhere else also, I used it in this contract also, I used it in other contract also, then wo nahi consider hota tha because it was not dedicated. So instead of word dedicated, they have written now fulfilling contract. पहले word था dedicated to contract, now it is fulfilling the contract. ठीक है, तो very logical. So any cost incurred which is basically related to that contract, like machine was used in that contract, उसका depreciation. They all are included in the word cost of fulfilling contract. Okay, come to question number 20. There's a non-cancelable contract to purchase 10,000 units of raw material at 50 rupee. So 10,000 units I have to purchase at 50 rupee. And if I want to cancel the contract, 60,000 is penalty. Now you're discontinued the product. Can I say I don't need raw material? Okay. If you go for fulfilling contract, you'll purchase raw material, then you'll sell it to someone else. You can sell it at 45. Okay, 50 mein leke, you have to sell at 45. So to fulfill the contract, 5 rupee loss will come. 5 rupee loss will come. 5 rupee loss will come into 10,000. Can I say 50,000 rupees loss will come? To fulfill contract, loss will be 50,000, penalty 60. Cost of fulfilling 50, penalty for cancelling 60. Make a provision for owner's contract, whichever is lower, 50. Fine. Question number 22. There's a binding agreement, non-cancelable. Custom made machine 4 lakh rupees ka. Before the deliver, now you have changed the method of manufacturing. You don't need a machine. Machine you don't need only. Now custom made hai. They say you have to take it only. And now I have to pay 4 lakh. So what will happen over here is, they've not told me what is basically, after getting a machine, scrap value nil hai. After getting machine, the scrap value is nil. So for me, cost 4 lakh will be incurred. I'll not be getting anything. Are they telling I can cancel it? No, cancellation ka penalty not available. To make provision for full 4 lakh rupees. So P&L to provision for owner's contract, 4 lakh rupees. Okay, question number 23. Question number 23. You order 90 equipments. Unit price is 190 lakh each. 64 were already supplied. Balance is remaining. HVCL has 5 equipments in inventory. 5 आपके inventory में है. And now the contract is considered onerous. Onerous है. So inventory already taken at NRV. Inventory already taken at out of 90, 64 already delivered. Delivered, uska loss would have already came in P&L. Uska loss would have already came in P&L. Inventory, they are already measured at NRV. Uska inventory mein loss would have came. So now for 21 units left. Now for 21 units left, I have to make a provision for onerous contract. ठीक है, तो I have to make a provision for onerous contract. ठीक है. HVCL contends that cost incurred towards admin overhead, finance overhead, R&D, sales overhead are period cost fixed. And they are not for considered for creation of provision, correct? See, if any cost is for fulfillment of contract, then it comes. These are not for fulfillment of contract. Even if contract was not there, this cost will be there. Contract nahi hota to bhi ye hote. So these are not cost incurred for fulfilling the contract. So they are not included in making provision. It's correct. So what they've included? They've included material. They've included labor and factory overhead. They've included material overhead which are linked with material like purchase related to this contract. So what they've included is all correct. And they made a provision for the remaining 21 equipment. So 21 equipment cost will come 199, selling price will be 190, loss will come 9 rupee. 9 rupee on 21, it is coming 189. Provision they've done 189. Is it correct? Looks correct. The answer is, check out, they've correctly measured. Answer is they've correctly measured. Okay, next one, restructuring. Restructuring is a program that is planned and controlled by management, and it changes the scope of business undertaken or manner in which the business is undertaken. It's a program planned and controlled by management which changes the scope of business undertaken or manner in which business is undertaken. Suppose out of 3 divisions, 1 division we are shutting down. So that comes under restructuring. So sale or termination of one line, closure of some business location, change in management structure, these are all coming restructuring. Now, provision for restructuring cost should be recognized only when that recognition criteria of provisions are met. वो provision का जो recognition criteria है तब. Suppose if I discontinue my one of the line I'm discontinuing, I have to remove their employees. Okay, for removal I have to pay something. So now I have to make a provision whenever basically it's decided to shut down. सिर्फ decision लेने के बाद it should have been communicated. Then only constructive obligation arises. A constructive obligation arises when you have a detailed formal plan for restructuring and you have raised a valid expectation in the minds of people by announcing its main feature. So provision should be done only when the plan is communicated. If plan is communicated after the year end, provision cannot be done on 31st March. Okay, the check over here, closure of division, and if you see over here, 31st March, the division was not communicated to anyone affected. So 31st March tak it's not communicated, there's no constructive obligation, no provision. No provision. But 20th को it was communicated, 20th March it was communicated, so then in that case provision will be required. ठीक है. A decision taken by management before the year end does not give rise to constructive obligation until basically it starts implementing or until it's announced to the people. ठीक है. And restructuring provision will include only direct expenditure related to restructuring. Restructuring provision will include what? Okay, if I have decided to terminate this business, this line, oh, so some contracts are to be cancelled, वो cancellation penalty, some employees are to be removed, उसका termination benefit, तो उसका provision I'll be doing it. ठीक है. Restructuring provision does not include marketing, investing in new system or retraining or relocating your staff. The staff will be located to some other place. Wo relocating staff will not be coming under restructuring provision. Okay, check out question number 25. You have 3 manufacturing units. On 10th January, you decided to close one. Detailed formal plan was that was there. It was agreed. And meetings were also held with all the parties. So it is already communicated. Constructive obligation is there. You need to make a provision. Question number 26. Important. Good one. This is basically your consolidated financial statement. ठीक है. It is approved on, board of directors approved it on 15th May. So for event after the balance sheet date, I need to check 1st April to 15th May. G, a wholly owned subsidiary. 31st January, their board of directors decided to continue G's business from 30th April, but they have made a public announcement on 15th Feb. 15th Feb, public announcement already done. So 31st March ko we have a constructive obligation. Provision is to be done. ठीक है. Following details are given. You will be required to pay a termination benefit 540 lakh. You will be required to pay a termination benefit 540 lakh. Make a provision. अच्छा, before year end if the figure इसका change हो रहा है तो वो adjusting event होगा. The actual termination payment came to 520 which were paid in full on 15th May before financials are approved. So we made a provision 540, actual came 520. Adjusting event, make it 520 only. तो वो provision 520 करेंगे, not 540. ठीक है. अच्छा, relocation cost 63 नहीं, relocation cost is not covered under your basically restructuring, तो leave it. अच्छा, you have a property, you are shutting down business, तो property आपने lease पे लिया है, but now future lease rentals you will still be required to pay. The present value of future lease rental which you have to pay is 430 lakh, but lessor has agreed to accept 410 for early termination. So I'll have to make a provision not 430 after year end before books are approved 410 हो गया ना, तो adjusting event 410. तो make a provision 410 plus 5 not 40 520 410 520 plus 410 provision comes 930. Okay, future or further operating losses will come 60 lakh because you have to continue till April. You will discontinue by April. तो April में loss आने वाला. You can't make provision for future operating losses. That is not required. तो check out provision will be only for two things. ये 520 का provision and second ये 410 का provision. Total provision is 930. Done. This is basically your IND AS 37. We are done with chapter number 7, chapter number 8. We are done with chapter number 7, chapter number 8, chapter 9 and 10 we need to do. Before that, I'm taking a break. 15 minutes break, and after that we start with chapter number 9. Okay, it's 6:55, a bit early today. We are having a break now, 15 minutes. We'll be back at 7:10. We'll be back at 7:10. Enjoy your break. See you after the break. Okay, hi, welcome back. We finished 4 standards in our first kind of session which we did currently. Still 5 more standards to be done today. So moving ahead, we finished with chapter number 7, chapter number 8, going to chapter number 9. We finished with chapter number 7, chapter number 8, going to chapter number 9, which is basically your IND AS 12 and IND AS 21. Okay, coming to unit number 1, which is IND AS 12. Give me high five, thumbs up, everyone. Okay, now IND AS 12 is on your income tax. Current tax as well as deferred tax, both are covered under this. So let's see the content of your IND AS 12. See, first of all, why do we need this deferred tax concept? The concept of deferred tax came by. See, we know that the profit as per books, profit as per income tax, they are not same. So in your income tax, the deductions are as per your income tax act. So profit as per books, profit as per income tax is different. There might be certain timing difference coming. There might be certain permanent difference coming. Your DTA, DTL is recognized only for your timing difference. Your DTA, DTL is recognized only for timing difference. And the reason is, if at all I don't record DTA, DTL, what will happen is the tax 30%, it will kind of not match. So people will feel, oh, why the tax is not coming 30%, for me it is 30%, why for him it is not 30%. So deferred tax, basically when we are accounting, it will get matched. And deferred is nothing but what? Defer. So suppose basically I have to pay tax in future, I have to create a DTL, deferred tax liability. Okay, I'll be getting a deduction in future. If I'll be getting a deduction in future, I'll have to pay less tax in future, I have to create a DTA. Okay. Now moving on to approach which is there under IND AS 12. So till now, whatever was given in your material was just the introduction, which is as such not relevant. Now, under your AS 22, IND AS 12, AS 22, AS 22 में deferred tax is based on the concept of timing difference, permanent difference, and only on timing difference the deferred tax impact is created. Permanent difference पे deferred tax is not created. Reason, permanent difference are those which are never going to be settled. Like timing difference क्या है? It comes today here, tomorrow it will be there somewhere else. मतलब tax में it will be there tomorrow. उसको timing बोलते हैं. But say for example, penalty paid in books. If I have paid a penalty in books, it's there in your books today. In income tax, it's never going to be allowed. So for that, I don't have to create basically a DTA or DTL. It's only for your timing differences. But the word timing difference, permanent difference, such word is not there under your IND AS 12. They use the word temporary difference. They use the word what? Temporary difference. An approach is changed. In your AS 22, the approach was from P&L angle. In your IND AS, the approach is from balance sheet angle. Over here, basically the approach is from balance sheet angle. Ultimately, both will give the same result. Answer will not be different. But how do we create a DTA, DTL over here? So we have a carrying amount of asset or liability and a tax base of asset or liability. Carrying amount is nothing but the value of asset or liability in your books. Tax base is nothing but the value of asset or liability as per income tax. As per income tax. That is your tax base. So pay attention. CA, carrying amount of asset or liability as per books. TB is carrying amount of asset or liability as per income tax. So we have to compare the carrying amount as per books and we have to compare it with tax base. If carrying amount of asset is more, if carrying amount of asset is more, in your books the asset is more, we'll get a more economic benefit in future, we'll have to pay more tax in future, create a DTL. So carrying amount of asset is more than tax base, DTL. Carrying amount of asset is less than tax base, DTA. Acha, liability more, if liability is more, oh, liability ज़्यादा है, it's a loss to us. So that loss will be allowed in future, we'll have a less tax to be paid in future. So if carrying amount of liability in books is more, then in that case we create what? A DTA. And carrying amount of liability is less, we create a DTL. Okay, the carrying amount of asset is more than tax base, DTL. Carrying amount of asset less, DTA. Carrying amount of liability more, DTA. Carrying amount of liability less, DTL. I hope this is clear. ठीक है. Definitions are all fine. Directly come to the word tax expense. Okay, what do you mean by the word tax expense? Tax expense for the year will include your current tax as well as deferred tax, both aggregate of current and deferred tax. Okay, current tax is basically the tax for the current period. based on your provisions of income tax. What is the tax I have to pay for current period? That's called as a current tax. Acha, current tax liability. Your current tax liability is basically your provision which you made for current year plus past ka provision which is not yet paid. So current tax liability will be having a current tax for current and prior period which are not yet paid. Okay, to the extent unpaid. That will appear as your current tax liability, and we might have paid some advance tax or our TDS was deducted. So that will get adjusted against it, and net current tax liability or a net current tax asset will appear in your balance sheet. Okay, so what is a net current tax liability? So out of your current tax liability, provision for tax, deduct advance tax, TDS receivable, that gets adjusted. But if at all your advance tax, TDS receivable is more than your provision for tax, then it is your current tax asset. Okay. Now, how do I measure the current tax? Current tax are measured as per the enacted provision. This year ka tax, I'll use the tax rate applicable for this year. I'll use the tax rate applicable for this year. If there are some uncertainty, if there are some uncertain tax position, so what do? I try to estimate the amount which I expect to pay, and based on that I create a provision. Accounting entries, if you try to see over here, first of all, as and when the year goes up, we have to pay advance tax every quarter. The advance tax paid, advance tax to bank. Achha, year end I create a provision to current tax expense debit to provision for tax. Current tax expense debit to provision for tax. Achha, now I have a provision, I have an advance tax. Advance tax will be adjusted against the provision, and remaining amount whenever I pay it is to bank. And suppose I have a refund receivable, so it's adjusted and there's a refund receivable. Okay, can I offset current tax asset and current tax liability? Can I offset a current tax asset and current tax liability? So very simple. I have a provision for tax, I have an advance tax paid, which is basically your asset. Can I offset? The asset you can offset. Now see, entity shall offset a current tax asset, current tax liability if and only if you have a legally enforceable right to set off. You have a legal enforceable right to set off, and you intend to settle it on net basis. You intend to settle it on net basis. So tell me, are you going to pay the provision for tax and claim a refund for advance tax? No, you will be settling on net basis only. You intend to settle on net basis or to realize the asset, settle the liability simultaneously. So normally we have a legal enforceable right when they relate to same authority, when they relate to same taxation authority, and tax laws permit you to make or receive a single net payment. But one thing, current tax asset of parent and current tax liability of subsidiary. So parent mein there is a current tax asset, subsidiary mein there is a current tax liability, that cannot be netted off because we will have to have it separate. So current tax asset of parent, parent will claim a refund. Current tax liability of subsidiary, subsidiary will pay the tax. So wahan pe it cannot be settled in net, so that is not allowed to be offset. Okay. Now coming to DTL, deferred tax. Calculation of DTA, DTL, they have given the following steps, 10 steps. Actually, it's not 10 steps, it's just a logical order in which basically the accounting will be done. First of all, compute the carrying amount of asset or liability as per books. Second, compute the carrying amount of asset or liability as per income tax. Difference is nothing but your temporary difference. I told you there's nothing called timing or permanent here. The word is temporary. So compute carrying amount asset liability as per books, compute carrying amount asset liability as per income tax, difference aa gaya. Achha, difference may try to understand whether it will be taxable in future or deductible in future. So whether it's a taxable temporary difference or it's a deductible temporary difference. For taxable temporary difference, we'll have to create a DTL. For deductible temporary difference, we'll have to create a DTA. Okay, try to see certain exceptions. There are certain exceptions where you don't record DTA, DTL. And if at all I have to record a DTA, if it's a deductible temporary difference, I will have to evaluate. Okay, it will be deductible in future, but can I say future mein profit should be there? If future mein profit hi nahi hai, then I can't get a benefit about it. So for deductible temporary difference, try to evaluate future profit will be there, not there. Okay, now you have a taxable temporary difference, deductible temporary difference, apply the tax rate to it, calculate your deferred tax asset or deferred tax liability, account for it. Account for it. So determine the tax rate, calculate DTA, DTL, account it and offset in presentation DTA, DTL. And as per your IND AS 12, you can offset DTA, DTL if they are for same taxation authority and basically you intend to settle on net basis. So same what we saw earlier, the same thing will apply here. But a parent ka DTA, subsidiary ka DTL cannot be netted off. Now first computing carrying amount of assets and liability as per book. This will be from your books only. Books mein asset ki value or liability ki value. Second, computing tax base. Computing tax base. Now how do I compute the tax base of an asset, carrying amount of asset or liability as per income tax? This is important. Tax base of an asset. Tax base of an asset or liability. How do I calculate? It's the carrying amount of asset or liability as per income tax. Now how do I calculate it? Coming to tax base of an asset first. The tax base of an asset is amount which will be deductible for income tax. Amount which will be deductible for income tax against the future economic benefit, the taxable economic benefit. So what will be deductible under income tax against the taxable economic benefit? That is basically the tax base of an asset or carrying amount of an asset. See, sometimes to understand carrying amount of an asset normally is simple rather than going by definition. Like suppose I have an inventory 100. I have an inventory 100. I'll sell it in future. I'll have profits against. I'll sell in future. So against the sales price which I get, 100 rupee will be deducted. So what will be the amount deductible for tax purpose against the taxable economic benefit? 100 rupee inventory I sold at 120. So from that 120, this 100 will be deducted, na? And net 20 will be taxed. So what will be deducted? Amount that will be deducted is 100 only. So that 100 is basically your tax base of an asset. Okay. If economic benefits are not taxable, if the economic benefits are not taxable, then they are telling your tax base is equal to carrying amount. The tax base will be equal to the carrying amount of asset as per books. So there is no temporary difference coming. This is basically to ensure that wo permanent difference wale points are rid of. तो जो permanent difference आ रहा था सर उसको कैसे sort out करेंगे? There we had timing, permanent. तो here if at all the benefits are not taxable or basically any payments जो होगा वो कभी deduct नहीं होने वाला तो automatically it will get adjusted over here. So there will not be any difference coming because in that case the tax base is equal to its carrying amount. ठीक है. So tax base of an asset is the amount which will be deductible under income tax against the taxable economic benefit. If economic benefits are not taxable, then tax base is equal to carrying amount. There's no temporary difference coming. Okay. I'll do one thing. I'll just check the example. Inventory is 1 lakh. Whenever you sell in future, this 1 lakh will be deductible. The tax base of an asset is 1 lakh. Next, you have an asset 1 lakh deductible equally in books. The books mein first year 50 gone, carrying amount in books is 50. Tax mein first year 75 allowed. So carrying amount as per income tax will be 25. Reason remaining 25 will be deductible against the future economic benefits. Okay. Next, interest receivable. I have an interest receivable carrying amount 100. So see, I would have booked the interest income. I have not received it. So there's a receivable 100 in books. Now the related interest revenue will be taxed on cash basis. So under income tax, as it is not received, there's no income. If there is no income, can I say asset is also zero under income tax? If you have booked the income, you're not received, there's an asset. But if you have not booked the income only, there's no asset also. The tax base over here of that interest receivable is zero. Okay. Similar things are there, it's fine. Okay, now I have some investment in listed equity shares and they've given there are no gains. There will no gains. So can I say the economic benefits are not taxable? If economic benefits are not taxable, the tax base is equal to the carrying amount. So carrying amount, whatever it is, the tax base will be same. There is no temporary difference over here. Fine. Now what is the tax base of a liability? The tax base of a liability is nothing but the carrying amount of liability less any amount that will be deductible for tax purpose in future. Achha, so what is the carrying amount of a liability? What is the tax base of a liability? It's carrying amount plus what amount will be deductible in future against it. Okay. Sometimes I told you going by formula doesn't work. Going by simple logic will be more simpler. Okay, I'll check the examples over here. And same way, if liabilities are not tax deductible, if liabilities are not tax deductible, the tax base of the liability is equal to carrying amount. This is just to tackle that permanent difference wale things. Okay, current liability include outstanding expense. We have outstanding expense. The expense debit to outstanding expense. So this is a liability. Now that expense will be coming in taxation on cash basis only. So books mein there is that expense, there is outstanding expense also. Tax mein there is no expense only, so there cannot be a liability also. The tax base of liability will be 0 here. ठीक है. Current liability include accrued expense outstanding, and tax mein it is already deducted. It has already been deducted for tax purpose. अच्छा, तो can I say tax may also be already taken? So tax may it's already taken. So tax may also the liability will be 100. Tax also the liability will be 100 because that expense is already there. The liability will also be there. Fine, moving ahead. Okay, there's a loan, 100 rupee. Repayment of loan will have no tax consequences. I told you if a liability has no tax consequences, then the tax base is equal to the carrying amount. Tax base is equal to carrying amount. Okay, item with tax base but no carrying amount means tax may there is asset liability. Tax may there is asset liability, but books may it is not there. Books may it is not there. Item with a tax base but no carrying amount. Now preliminary expenses, they are recognized as an expense in books in first year itself. Preliminary expenses, they are recognized as an expense in books in first year itself. In your books, it has gone to P&L, there is no asset. But under income tax, it's allowed over a period of 5 years. So out of total 100, 20 went to P&L, 80 appears in your income tax. So books may asset 0, tax may asset is 80. So can I say this is an item with a tax base but no carrying amount? Fine. Okay, the step 1, step 2 done. We found out carrying amount of asset liability as per books. We found out the carrying amount of asset liability as per income tax, which we call it as tax base. Now, the difference between two is nothing but your temporary difference. The difference between two is nothing but your temporary difference. Under AS 22, the word is timing difference, permanent difference. Here, the word is what? Temporary difference. The temporary difference includes your timing differences also. So, timing differences are included, but there's few other things also included. Okay, timing differences, AS 22 was with regards to incomes and expenses. वो P&L approach पे था. तो interest income, depreciation, they are all kind of temporary difference which are in nature of timing difference. They are all temporary difference which are in nature of timing difference. But there can be a temporary difference other than in nature of timing difference also. For example, revaluations. Under business combination, the assets and liabilities coming in at acquisition date fair value. Whenever they come in at acquisition date fair value, the asset has gone up. Asset has gone up, but we don't have to pay tax right now because SFS made is still at the same amount. SFS made same amount. CFS made acquisition date fair value. So now the thing is, uska tax will be paid in future. DTL will come. Now this business combination revaluation, iska DTA DTL was not there under AS 22, but iska DTA DTL is there under your IND AS 12. So these are balance sheet related thing, not related to income expense. So AS 22 में covered नहीं थे. AS 22 only covered related to income expenses. Fine. Okay, so now we have basically the temporary difference. Try to understand whether it's a taxable temporary difference which will be taxed in future, or whether it's a deductible temporary difference which will be allowed as deduction in future. If it's a taxable temporary difference, we have to create a DTL. If it's a deductible temporary difference, we have to create a DTA. Now, pay attention. For asset, if carrying amount of asset is more than tax base, books may asset is more, so can I say that future may I'll have more benefit, I'll have to pay tax, so it's a taxable temporary difference, create DTL. Achha, if carrying amount of asset is less, books may asset is less, so I'll have less profits in future, less tax in future, to create DTA. Okay, coming to liability. Liability in books is more. I'll have more expenses. So profit in future will be less. I have to pay less tax, create DTA. Liability in books is less. Books mein liability kam hai, kharcha kam aayega. I'll have to pay more tax in future. It will be taxable. Deferred tax liability. Now these examples very, very important. Almost your questions are based on these examples. I'll do it all the examples over here. Okay, interest revenue included in books on time proportion. So there is a interest receivable in books asset. Tax may it's not there. It's on cash basis. So tax tax में the interest income is not there, asset is also not there. तो books में we have a asset, tax में it is nil, book में asset is more, DTL. Next, revenue from sale of goods is accounted when goods are delivered. आपने deliver कर दिया, you booked a revenue. तो books में there is a debtor. Tax में it is recorded only when cash is collected. तो tax में there is no revenue also. Tax में there is no revenue also, no asset also. तो books में we have a debtor, tax में nil, asset में asset is more in books, DTL. Okay, development cost are capitalized. Development cost are capitalized, so asset is there in books. Tax में they are allowed as expense only. The tax में there is no asset. So books में we have intangible asset, tax में there is nothing, no asset, it was allowed as expense only. So again, books में asset is more, DTL. Next, prepaid expenses have already been deducted on cash basis. So books में we have a prepaid expense asset. Tax में whatever we had paid, it was already allowed deduction. So tax में it was an expense, there is no asset. So books में we have an asset, tax में there is no asset, so asset in books is more, DTL. Depreciation on asset is more in tax. Tax में depreciation ज़्यादा है. तो can I say tax में the value of asset will be less. तो book में asset is more. Book में asset is more, DTL. Okay, retirement benefit liability. In books we have a provision for gratuity created every year. Tax में no provision, कुछ है ही नहीं. जब pay करो तब you book it. तो books में we have a liability, we have a expense, we have a liability. Tax में no expense, no liability. तो books में there is a liability, tax में no liability. तो liability in books is more, DTA. Liability in books is more, DTA. अच्छा, accumulated depreciation in books is more. अच्छा, तो depreciation in books ज़्यादा है, books में depreciation ज़्यादा है, तो asset in books is less. Asset in books is less, DTA. Asset in books is less, DTA. NRV of inventory. NRV of inventory is NRV of item of inventory is less than the carrying amount. अच्छा, तो books में NRV was less, तो basically we valued inventory at NRV. तो books में inventory has gone down. Tax में नहीं. तो books में inventory has gone down. Asset in books is less, DTA. अच्छा, income is deferred in balance sheet. Books में we have not recorded basically the income. तो books में asset is not there, but tax में we have recorded income. तो tax में asset is there. तो asset is more in tax. Books में asset is less, DTA. Depreciation on asset is not deductible for tax purpose. Depreciation on asset is not deductible for tax purpose till it is sold or scrapped. अच्छा, तो books में we have a depreciation, tax में no depreciation till now. आएगा later जब we बेचेंगे तब. तो books में asset has gone down, tax में asset is more. Books में asset is less, DTA. Okay, now loan. Loan we have taken transaction cost. In your books as per IND AS 109, whatever is transaction cost for borrowing, the loan liya, loan processing fee gets deducted from the loan. So you feel that whatever interest you are paying is not on 50 lakh, the interest is on 49 lakh. The books mein liability 49, tax mein liability 50. The books mein liability is less, DTL. Fine. The assets are carried at fair value in book. Book mein asset is carried at fair value, which is more than the cost. So books mein asset is more. Tax mein there is no revaluation. The books mein asset more, DTL. Assets are carried at fair value, which is less than cost. The books mein asset is less, DTA. Okay, this all revaluation is similar. I'm just leaving revaluation. Unrealized profit from intra-group transactions are eliminated. So unrealized profit in stock. तो बुक्स में स्टॉक हैज गॉन डाउन, टैक्स में नहीं, तो बुक्स में एसेट इज लेस, DTA. बुक्स में एसेट इज लेस, DTA. डिड यू अंडरस्टूड ऑल दिस एग्जांपल? ओके, तो we computed carrying amount as per books, we computed tax base, we found the difference. Difference is classified as your taxable or basically deductible. Taxable temporary difference, deductible temporary difference. Now we see certain exception. So we record DTA, DTL for all taxable temporary difference. So they are talking first about DTL. So DTL is for all taxable temporary difference except exception number one. You know goodwill coming under business combination. Achha, in your business combination, assets and liabilities are coming at acquisition date fair value. Assets liability coming at acquisition date fair value. उस पे भी record DTA, DTL. But our balancing figure goodwill. Now goodwill you recorded in books. Tax में it's not there. बुक्स में आ गया, टैक्स में ऐसा कुछ है ही नहीं, बट उस पे वी डोंट रिकॉर्ड DTA, DTL. तो गुडविल के ऊपर DTA DTL is not there. Other assets and liabilities coming at fair value, DTA DTL is there. No DTL is recognized for initial recognition of goodwill, which comes under business combination. ठीक है. Moving ahead, question number 1, but it's not important. I'm just skipping it. Question 2 is important. I'm taking it. Question 2 is important. I'm taking it. Acha, you acquired a subsidiary for 15 lakhs. Goodwill arising on acquisition is not deductible for tax purpose. Acha, if it's not deductible one, तो can I say? If it's not a deductible one, तो can I say over here the tax base is equal to carrying amount? No difference comes. No difference comes. No need to have any DTA DTL. Acha, now tax rate of entity H, entity S is 30 and 40%. Tax rate of entity H, entity S, parent ka tax rate 30, subsidiaries tax rate 40. This is important. Now, assets coming from subsidiary. ये subsidiary के assets है. Book value, ये fair value. Can I say in your CFS you'll record at fair value? अच्छा, तो ये fair value ये है. This will be recorded in books. तो this will be the carrying amount of asset or liability in CFS. तो ये carrying amount हो गया और ये इसका tax base. अच्छा, तो tax base is coming as 920. Carrying amount in CFS will be 1020 the fair value, 1070 the fair value. अच्छा, तो can I say asset is more in books? Asset is more in books. Books में asset ज़्यादा है compared to tax. So you have to create a DTL. तो difference 150 के ऊपर DTL. Question is 30% or 40%. We have to create a DTL 30% or 40%. Now see, these are assets of subsidiary. These are assets of subsidiary. उस पे tax will be paid when subsidiary sells it. ये tax कब pay करना है? When subsidiary sells it, and that subsidiary has to pay tax. These are assets and liabilities of subsidiary. Tax will be paid when that asset is sold off by subsidiary and subsidiary has to pay it. So it will be based on 40%. Subsidiary का tax rate. Okay, तो check over here. 150 के ऊपर basically 40%. It's coming 60. Done. Second exemption. Second exemption. Initial recognition of asset or liability. Day 1 only. Day 1 you are recording an asset or liability and there is a temporary difference coming. Day 1 only you are recording asset or liability and temporary difference coming, and it's not a business combination. See, business combination mein recorded acquisition date fair value, day 1 only difference will come. If it is not a business combination and day 1 only, I am having a difference coming. I am having basically a temporary difference coming and at the time of transaction on day 1 it neither affects accounting profit or tax profit. So day 1 pay it doesn't affect accounting profit or tax profit, but day 1 temporary difference coming. See, business combination hota day 1 pay difference comes because assets liability come at fair value. It's not a business combination, but day 1 only still difference is coming. So how do I do for that? Okay, so check over here. They've given one example. So uske upar they are telling don't record DTA DTL. Acha, you got a land and building free of cost from government. If you got it free of cost, can I say in your books you'll record it at acquisition date, you'll record it at fair value or nominal value. Two options tha, fair value or nominal value. Fair value is 10 lakh. अच्छा, and tax laws do not tax such a grant neither now nor later. तो tax में ये कभी आने ही नहीं वाला है. अच्छा, तो tax में basically ये कभी आने ही नहीं वाला, तो what will happen again? It falls under that thing. If it is economic benefits are not to be taxable, वो कभी tax होने ही नहीं वाला, then the carrying amount, tax base is equal to carrying amount. हो गया. Tax rate do not permit any depreciation also. तो books में you recorded 10 lakh, tax में ऐसा कुछ है ही नहीं. Tax में as such is nil. Tax में as such this asset is only not there, but if basically it will not be taxable, the tax base is equal to carrying amount and the difference will be coming nil kind of thing that way. So you don't record this on day 1, nothing is to be recorded. The books में we have 10 lakh, tax में ऐसा कुछ है ही नहीं, zero है, but still will not record. Day 1, it's not a business combination, still temporary difference comes on day 1 and it doesn't affect your accounting profit or taxable profit on day 1. A third one, temporary difference associated with investment in subsidiary associate JV. Acha, investment in subsidiary associate JV. Now tell me one thing, in your CFS, can I say you include your share of profit in subsidiary associate JV? So I've included my share of profit in subsidiary associate JV, but they will be taxed to me really when they give me dividend. So मैंने include कर दिया, but my taxation I have to pay when they give me dividend. So the thing is, what happens is I've included our share of profits in subsidiary associate JV, but they'll be taxed whenever I'll be getting dividend. So future mein tax hoga. So can I say I have to create a DTL on it? It will be taxed in future. I have to create a DTL on it. But if I know, see, subsidiary I am controlling, and I know dividend aane hi nahi wala. Foreseeable future, there won't be any dividend coming. Acha, so the thing is, if dividend won't be coming only, so can I say this DTL won't be reversed only? So don't record only DTL. So if at all you control that subsidiary, you control basically that thing, and I know dividend is not going to come, DTL is not going to be reversed only, don't record the DTL. My share of profits are recorded, I have to pay tax in future, as such DTL required. But I know dividend is not going to come in foreseeable future, so don't record DTL. So see, so should you record DTL in these cases? You should record for all. Now they have given except kya? The parent investor or venturer is able to control the timing of reversal of temporary difference. Whenever they'll give dividend, at that time this temporary difference will reverse. If I am able to control, and it's probable that the temporary difference is not going to reverse in foreseeable future, subsidiary you control. Joint venture, you have a joint control. If dividend decisions you take, so you control. Otherwise, you don't control. An associate, you don't control. So subsidiary I control. So in that case, if I am sure that dividend is not going to come only in foreseeable future, don't record DTL. Associates we don't control, so wahan pe to DTL I have to record. And joint venture also, it's a joint control. If dividend decision is also joint control, I am not controlling, then DTL has to be recognized. Fine. Now question number 3. You acquired 100% in some company. They made a profit 5 crore. So can I say in CFS you would have included your share of profit. Ye pura 100% 5 crore aa gaya aapki book mein. But at tax purpose I have to pay tax whenever they declare dividend. I have to create a DTL 5 crore ka 15%. I have to create a DTL 5 crore ka 15%. But subsidiary hai. I control the dividend policy. If I know if dividend is not going to be declared in foreseeable future, then in that case, don't create DTL. So since parent controls subsidiary, it will be able to control the temporary difference. The deferred tax is not provided unless reverse hone wala. Dividend is going to come, then you create DTL. If reverse hone hi nahi wala, don't create DTL. Okay, next there's a JV. We do not control dividend policy. I have to create DTL. Okay. Now going to step number 6, if it's a deductible temporary difference. Okay, if it's a deductible temporary difference which will be allowed as deduction in future, I'll record DTA. But can I say there should be sufficient profits in future against which the benefit of deductible expense should be there. Future mein losses hi hai, then this deductible expense will have no benefit only. So then don't record DTA. So DTA should be recognized only when it is probable that taxable profit will be available. Taxable profit will be available in future. So if we will be having a sufficient taxable profit in future, then only you record DTA. Or there will be sufficient taxable temporary differences. So simple words may either the balance of DTL should be there or sufficient taxable profits are expected, then only you record DTA. So check out. So you can record DTA only if sufficient DTL balance will be available at each point of time. Each point of time pe available hoga. Then like check over here. Your taxable temporary difference is 532 and deductible is 431. So every time taxable difference is more. Every time DTL is more. Then you can record DTA because you can adjust it against DTL. But suppose if I come over here, yahan pe the DTL will be on 3000, DTA will be on 4000. No. Then don't record DTA on 4000. You record DTA only on 3000 unless sufficient taxable profits will be available. So ya to you need a sufficient taxable profit or you need sufficient balance of DTL at each and every point of time. Clear? Achha, if tax planning opportunity can create sufficient taxable profit, then DTA can be recognized. If a tax planning opportunity can create sufficient taxable profit, you can recognize a DTA. Okay, check question number 6 over here. Check question number 6 over here. Okay. There's a taxable temporary difference, accelerated depreciation 9000, which will reverse over 3 years. तो can I say next 3 years में reversal of taxable temporary difference 3000, 3000, 3000 will come? Okay. Now, deductible temporary difference 4000 which will reverse over 4 years equally. तो can I say वो 1000, 1000, 1000, 1000. तो यहाँ पे 3 DTL था, ये DTA you can record. यहाँ पे 3 DTL था, DTA you can record. But last वाले case, there's no DTL but there's a DTA. So on this 1000 you cannot record a DTA. So on your day one, don't record on 4000. When that last 1000 is going to get reversed, DTL will not be there. When that last 1000 is going to get reversed, DTL will not be there. So record not on 4, record only on 3. ठीक है. Now coming to unused tax losses and unused tax credit. What is this unused tax losses and unused tax credit? Carry forward of losses. Now see, if at all you are having carry forward of losses, the future may I'll have to pay less tax. Sir, I have to create a DTA on it. Future I have to pay less tax. So on your carry forward of losses, should you create a DTA? You can as such create, but you need a convincing evidence that there will be profit in future. तो वो just probable नहीं चलेगा, because see as such you are making losses, that's why it's a carry forward losses. So over here the existence of unused tax loss is a strong evidence future profit may not be there. So in this case, either you have a sufficient DTL balance or there's a convincing other evidence that sufficient profit will be there, then only you record DTA on carry forward of losses. So on carry forward loss, I should record a DTA only if sufficient DTL balance is available at each stage or convincing other evidence is there that sufficient profits will be available, then only I'll record it. Now, whatever DTA you might have recorded or not recorded, initially suppose you did not record because you felt sufficient profits will not be there, keep on reassessing. The day when sufficient profits becomes probable, day when sufficient profits become probable, then you can record a DTA that time. Fine. Next, tax rate. Now, which tax rate should I apply? Either the tax rate, basically. Now, see, यहाँ पे DTA, DTL. Can I say it's deferred? I have to pay tax in future. So, what will be the tax expected to apply? Expected tax I have to take. Either the enacted one or substantively enacted. या तो enacted or substantively enacted. Imagine, government has already announced in April, not April, Feb. In February, government has already announced next year's tax rate will be reduced. So for DTA, DTL, the tax will come in next year only. So I'll take up the rate already announced. But announcement हो गया है Feb में तो चलेगा. If announcement is done after year end, it will be a non-adjusting event. I'll take the rate of March only. Okay, so substantively enacted means announced in budget before year end. Okay, notification might be pending. Notification official gazette is pending, but already announced. ठीक है. Okay, check this question. Our year ends in December. Year ends in December. The new tax rate is announced in Feb. So before year end, it's not announced. So यहाँ पे ये non-adjusting event होगा. I'll not be taking 30. I'll be taking 25 only. I'll be taking 25 only. But if year ending was not December, but year ending was, say for example, March. If year ending was not December, it was March. So can I say before March only, I know next year 30% will apply. Then you take based on 30%. Next, manner of recovery of asset. Manner of recovery of asset. Now just pay attention. Just pay attention. I have an asset. I have a machine or I have basically a building. If I'll use the building, I'll be able to generate cash flows out of it. वो use करने से production होगा, something rental होगा, whatever. तो उस पे rental पे tax is 30%. But if I sell off building, there's a capital gain, there's a tax 20%. If you use it, rentals 30%. If you sell it, there will be a capital gain 20%. The question, DTA, DTL should be based on 30% or DTA, DTL should be based on 20%, depending on what you expect to do. The measurement of DTA, DTL, uska tax consequences would be in the manner in which entity expects to recover or settle the carrying amount. I hope this is clear. Okay, now we have the deductible temporary difference, taxable temporary difference. We also have a tax rate. Multiply karo, you get the deferred tax asset, deferred tax liability, account for it. You account for it. Now how do I account? Now pay attention. DTA, DTL, how to account. If that item goes in P&L. वो item goes in P&L तो उसका related DTA DTL impact will also go in P&L. But if item goes in OCI, if item goes in OCI, तो उसका related DTA DTL impact will also go in OCI. For example, revaluation surplus, PPE revalued. Okay, PPE revalued, the upward revaluation, now carrying amount of asset is more in books, DTL. Now revaluation surplus goes in OCI, तो उसका DTL impact should also be taken in OCI. So if that item goes in P&L, related DTA DTL will also go in P&L. Like interest के ऊपर or depreciation के ऊपर, they all go in P&L. DTA DTL also goes in P&L related to it. But a revaluation surplus goes in OCI, उसका DTA DTL will also go in OCI. Same way, if item goes directly in other equity, if some item goes directly in other equity, the related DTA DTL will also go in other equity. Okay, now can I offset DTA and DTL? Can I offset a DTA and DTL? So they are telling if you have a legally enforceable right to set off, then you do it, and the DTA DTL related to income tax levied by the same taxation authority on the same entity, you can do it. A different entity hai, if you intend to settle on net basis or simultaneously to kar sakte ho, but a simple words mein DTA of parent cannot be set off against DTL of subsidiary. Now few other things, practical application, business combination. Now pay attention. I had certain DTA recognized in book. Because I was expecting future profits. Now we went for business combination. Because of that, I feel now there will be losses. So now the company will not be making profit. Now company will be making losses. So because of business combination, now I feel overall there will be losses. So whatever DTA I have earlier recorded, can I say now they have to be reversed? That is what is basically happening. Or same way, earlier I did not record a DTA because I was feeling profits will not be there. But now we had a business combination and now we will profits will be there. So now you can record that DTA DTL. So we will recognize DTA which was not recognized earlier, or we will reverse DTA which was recognized earlier, depending on what the situation is. Okay, going to question number 9. Okay, A acquired 12 crore shares, 80% in B Limited for 25 crores. ठीक है? And NCI is at fair value. Market value of B share is 2 rupee. Okay, market value of B share is 2 rupee. 12 crore was 80%. So 20% will be how much? 12 crore into 20 by 80. 3 crore. So NCI people have 3 crore shares and 3 crore shares worth 2 rupee each. So NCI will become 3 crore into 2, 6 crore. NCI ho gaya. Now the net assets in the books is 23. But now PP is going up by 3 crore. Property going up by 3 crore. Plant and equipment going up by 2 crore. Inventory going up by 0.5. Acha, the assets and liabilities are to be taken at acquisition date fair value. So 23 plus 3 plus 2 plus 0.5. And on this fair valuation, I have to create a DTL. So 3 plus 2 plus 0.5, iske upar how many percentage? 20%. So 1.1 will be your DTL. 1.1 will be your DTL. So these are net assets which are coming. Now let's find out goodwill. PC, NCI 6, net assets coming after that DTL, and now goodwill comes as 3.6. On goodwill, there is no DTA DTL. On other assets and liabilities coming in at fair value, yes, we have DTA DTL. Goodwill ke upar DTA DTL nahi hai. Okay, next comes share-based payment. Okay, now tell me, under ESOPs, can I say that we record basically the expense arising under ESOP over the vesting period? First year, second year, third year. So we have booked it over 3 years expense, but under taxation, it will be allowed only when they exercise. So taxation it will be allowed in 4th year. So I have booked expense in first year, tax may allowed in 4th year. So can I say it will be allowed in future? I should create a DTA. So fair value of option we record over a vesting period. Income tax may it will be allowed as deduction whenever they are exercised. So we are required to create a DTA on it. Did you understand? Okay, moving ahead. A change in tax status is fine. 11th question, good one. 11th question, a good one. You are preparing a consolidated financial statement. You have a wholly owned subsidiary. Subsidiary had a loss. subsidiary had a loss, and on that loss should they record a DTA? Subsidiary had a loss, on that loss should they record a DTA? Income Tax Act does not allow transfer of subsidiaries losses to other group company. So can the loss of subsidiary be adjusted against profit of parent? No. No, the subsidiary का accumulated loss है, they should record DTA only if they feel they have a sufficient taxable profit in future. The board of directors of PQR do not consider that QPR will make any profit. तो subsidiary को profit नहीं होने वाला in future. तो can I say they should not record DTA? तो no DTA should be recognized. Second, we want to close a division. We want to close a division. The provision is done 20 lakh. अच्छा, books में we have done a provision. Tax में it will be allowed when I pay. Books में we have done a provision right now. So books में there's a liability. Tax में there's no liability. The liability in books is more, create DTA. Okay, books में we have capitalized development cost. Tax में it is not there. So tax में it was expense only. So books में we have capitalized development cost. Books में asset is there. Tax में zero asset. So asset in books is more, DTL. Last one, we have borrowed money. We have borrowed money and there was some loan processing fee which was paid. It was 2 lakh. So in your books the liability is 98 lakhs. In your books the liability is 98 lakhs. Day one pay. Now interest will accrue, effective interest rate. The effective interest rate 10%. This was 2017. Now it's basically this year is, which is this year? 2018. Okay, so day one liability was 98 lakh. Uske upar interest will accrue 10%. So can I say now in books it's 1 crore 7 lakh. So now in book liability is 1 crore 7 lakh. After first year 1 crore 7 lakh 80,000. Tax में liability is 1 crore only. So books में liability 1 crore 7 lakh 80,000. Liability more in books. Liability more in books, DTA. Did you understand? Because ये 1417 को 98 lakh था. I want to understand carrying amount on March 18. Okay, next question is question 13. Next question is question number 13. Okay, you have 40% holding in L, significant influence, and basically the equity method carrying amount is 70 crore and 75 crore. So can I say equity method you are following, पहले 70 था, अब हो गया 75, extra 5. तो opening तो 45 basically it was there. 45 से became 70. You would have recorded your share of profits. So past में you recorded your share of profit 70 minus 45, 25. And this year you recorded another 5. Now you record your share of profit, but tax you have to pay whenever they declare dividend. So tax I have to pay in future. So DTL to be created, and associate I don't have a control. DTL has to be created. DTL has to be created. So on 25 lakh 20% opening DTL will be there, and on 5 crore 20% this year I have to create a DTL. Okay. So total temporary difference 25 plus 5 30. 30 का 20%. Total DTL is 6. 5 already था, 1 created this year. It is like this. 5 was already there, 1 rupee is created this year. Now coming to second part. They measure HO building under revaluation model. HO building revaluation model on 31st March, carrying amount 40 after revaluation. Tax base 22. Okay, tax base 22, carrying amount 40, 18 ka temporary difference, 18 into 20%, 3.6. 18 into 20%, 3.6. Already in that 3.6, it was due to revaluation. It would have gone in your OCI. It would have gone in your OCI. Okay. Now during the year, depreciation as per books is 2 because you have revalued. Depreciation is more in books. Tax made is 1.25. Okay, so 2 and 1.25. ये जो difference है ना, ये जो difference, इसके ऊपर again we had a DTL created, DTL gets reversed. So DTL is getting reversed over here on 0.75, 0.75 ka 20%, 0.15. 0.15 DTL getting reversed, but this will go in PNL because this is related to depreciation. This will go in PNL. And 40 becoming 45, again revaluation done. 40 becoming 45, again revaluation done. That will go in OCI. So check out over here. Closing is now 45. closing is now 45. Tax base 22 था, 22 में से what is the depreciation as per income tax? 22 था, उसमें से what is depreciation as per income tax? Depreciation as per income tax is 1.25. 2 minus 1.25, 20.75. So 45, this is 20.75, so 24.25 is now the temporary difference. So 24.25 into 20%, total DTL 4.85. Total DTL is 4.85. Acha, for this thing. But now try to understand. Opening DTL was 3.6. Opening DTL was 3.6. Acha, 0.15 ka reversal came due to a difference in depreciation that goes in P&L. Due to difference of depreciation that goes in P&L. So now, that is due to difference of depreciation. Now in your books 40 tha. Now in your books 40 tha. Books mein depreciation is 2. So 38 becoming 45. 40 था, depreciation 2, 38 becoming 45, 7 increase, 7 के ऊपर 20%, that 1.4 will go in OCI. तो 0.15 का reversal is P&L, 1.4 का increase is OCI. Did you understood this? Okay, next one, question number 14. Now what has happened is, financial statement for year ended 31st March 2 was there. Before 31st March, government announced a tax rate amend होने वाला है 40 to 45 from 30th June. Before year end only it's announced. Before year end only it's announced. So now we have to have DTA, DTL based on new rate 45%. But now the thing is it's already based on 40%. The balance of DTA, DTL is given based on 40. Make it based on 45. So 40 is 80. So 45 कितना होगा? 80 into 45 by 40. This becomes 90. And this will become 67,500. तो वो 90 हो गया, वो 67,500 हो गया. But internally if in this something has gone in P&L, something has gone in OCI, the increase also that much goes in P&L, that much goes in OCI. That's the only question, simpler one. Disclosures are fine. And lastly over here, you are required to give a reconciliation. If someone tries to do profit, जो accounts में profit है, books में जो आपका profit है, उस पे 30% tax rate. Books में जो profit है into 30% tax rate, so this much tax should be there. And if they total your current tax, deferred tax, so books में whatever profit is coming into 30%, if they do that, and if they total your current tax, deferred tax, if it's not matching, then you are required to give a reconciliation. It will not match only because of permanent difference. It will not match only because of which difference? Permanent. So if there are no permanent difference, the tax expense, current tax plus deferred tax is equal to accounting profit into tax rate. अगर permanent difference नहीं है तो match हो ही जाएगा. So this reconciliation is required only if there are permanent difference. Are you getting it? And you are required to give reconciliation either amount wise or tax rate wise or both. Either basically amount wise or rate wise or both. It's up to you. ये expense wise, amount wise और ये rate wise. It's up to you. Check question number 15. Okay, you have a profit before tax 100,000 and आपका tax rate 25 है. If someone basically does 100,000 into 25%, can I say 25 tax होना चाहिए? तो tax should be 25. But आपका tax कितना आया? आपका tax is not on 100. आपका tax will be on profit as per income tax. Okay, profit as per income tax is coming 104. So 104 पे 25%, your tax is coming 26 current tax. And deferred tax नहीं है यहाँ पे. तो your tax is coming basically 26. ठीक है. अच्छा, let me just do it one thing. ये current tax आया. This is your current tax 26. अच्छा, on your timing difference actually there will be a deferred tax also. On your timing difference there will be a deferred tax. Deferred tax is coming 1. तो 26 plus 1 27. तो see आपका आ रहा है 27. If someone does books में whatever is in books into 25% is 25. So there is a difference coming of 2. Why? Give a reconciliation. So try to check over here. There is a machine wala thing, that's temporary difference. Okay. Now 8,000 you did a donation. They are not deductible under tax purpose. So I gave donation never allowed under income tax. So 8,000 ka how many percentage? 25%, 2 rupee. हो गया. So if someone does accounts में 100 into 25%, 25. add karo, tax effect of donations not deductible, 2 rupee, and now you have a tax coming 27. Did you got it? Okay, that was amount wise. If I want rate wise, so rate 25% था, आपका 27 हो रहा है, 27 on 100. So 2 rupee on 100 you are paying extra. Remember, 2 rupee I am paying extra on 100, so 2%, indirectly it becomes 27%. Okay, now going to, so reconciliation is only for those items which are permanent differences. Okay, this is a question given to you. Tax expense is 164.5. Now if someone tries to does PBT 594 पे कितना percentage है? If someone tries to does 594 into 30%, तो can I say 178.2? If someone tries to does that, it's 178.2, it's not matching. We are asked a reconciliation. So see, this is 178.2, it's not matching with that 165.4. So why? Due to permanent differences. Okay, check over here. Other income includes LTCG of 10 crore, which is taxed at 10%. So LTCG is not at 30, it's at 10. So उस पे 10 crore पे 20% I have to pay less, वो less deduct करेंगे. तो check over here, tax effect of income which are taxed at different rate. So this 2 I'll be deducting. ये 2 and 6 total 8 are deducted. Next, other expenses, these are not deductible under income tax. These are not allowed under income tax. So because of that I'll have to pay more tax. It will be added. So ये 3 का total. ये 3 का total इसका 30%. 1 plus 44 plus 6 into 30%. 15.3 add करो. ये 15.3 added. Okay, next. Other income includes dividend of 4. वो exempt है. कभी tax नहीं होने वाला. तो 4 का 30%. 1.2 remove. I don't have to pay. 1.2 remove. Agriculture income 55 is exempt. So 55 का 30%. Remove. 16.5 तो 1.2, 16.5, this is removed. Next, you have some income earned in USA, उस पे 20% है, not 30, तो 10% remove, 60 का 10%, 6 you remove, तो ये 6 remove, 2 plus 6 total 8 हो गया. And last, depreciation as per income tax is 25 crore. Depreciation as per income tax 25, वो temporary difference है, temporary difference or timing difference, that doesn't come in reconciliation. That doesn't come in reconciliation. And this is one thing left out. R&D 8 crore, we will get 200% deduction, extra deduction. So 8 into 30%, 2.4 extra deduction. Extra deduction deduct. Okay, ho gaya. Now it will get tallied. This is your IND AS 12 taxes on income. Any doubts? Anybody with this? IND AS 12 taxes on income. Let's move on to IND AS 21. Let's move on to IND AS 21. We'll do IND AS 21 as well as the next one, IND AS 24 before break. And then we'll take a break. 2 more standards, then break. Whew. Okay, IND AS 21 is effect of changes in foreign exchange rate. It's effect of changes in foreign exchange rate. This standard addresses the accounting for foreign currency ke transaction and foreign operation. If I have a transaction in foreign currency, that, and second foreign operation, these two are covered over here. ठीक है. This is fine. So this is applied for foreign currency transaction. Second one is foreign operation. It doesn't apply to foreign currency derivative. If I have a forward contract, etc. done related to purchase by a dollar in future, so that is not covered here. It goes under IND AS 109. ठीक है. Now, as per this standard, first of all, the foreign currency, basically your financial statements. The financial statements are basically prepared in your functional currency. I repeat, the financial statements are first prepared in which currency? Functional currency. And then if the presentation currency is different, they are converted into presentation currency. See, you are in India, you have to present financials in INR. If your functional currency is different, first financial statement will come in functional currency and presentation currency alag hai, they'll be converted into the presentation currency. Now, what do you mean by the functional currency? Functional currency is the currency of the primary economic environment in which you operate. Functional currency is the currency of what? The primary economic environment in which you operate. Financials are first prepared under functional currency. And while determining functional currency, we try to understand the currency which influences our pricing. So we don't try to see the currency in which transactions are denominated, but we try to see currency which influences our pricing. So which countries' competitive forces are affecting our pricing? वो सारी चीजें. So we have to look. So for determining functional currency, we have a primary indicator, secondary indicator. So it's currency of the it's basically the currency of the primary economic environment in which we operate. ठीक है. For determining, we have one primary indicator. Primary indicator में one, the currency that mainly influences the sales price of your goods and services, and the currency of the country whose competitive forces regulation determines the sales price. So this is basically thing, and the currency that mainly influences your labor, material, other cost. So primary indicators में they have given the currency that mainly influences your sale price, the currency of the country whose competitive forces and regulation determine your sales price, and the currency that mainly influence labor, material, other costs. So simple words में currency which influences your revenue and cost. So don't try to see my transactions are denominated in what. No. मेरे transactions dollar में वो मत देखो. Your revenues and costs are influenced by which currency? That is basically there. Achha, secondary indicator. A primary indicator you are not able to judge, then you go to secondary indicator. Secondary indicator, the currency in which funds you are financing, funds kaise aa rahe, and currency in which the receipts from your operating activity are retained. So money what you are getting from your operating activity, how are you retaining? That is basically secondary indicator mein given. So you try to see this indicator and decide which is the currency of the primary economic environment in which you are operating. So which is the currency which influences your sales price and your cost. ठीक है. Now if indicators are mixed, you have to make a judgment. Achha sir, if I have a foreign operation, imagine I have a subsidiary. So can I say functional currency of subsidiary same as mine? If it's an integral foreign operation. If it's an integral foreign operation, then in that case, you can say that the functional currency of subsidiary is same as yours. Otherwise, no. Otherwise, no. Okay, so check question number 3. Check question number 3. A is an Oman-based company having a foreign operation. Acha, so can I say this is in India, subsidiary is in India, parent Oman. So can I say the subsidiary ka functional currency is same as that of parent if it's an integral foreign operation? Now, in this question, 78% the functional currency of parent is OMR. Functional currency of parent is OMR. If we are an integral foreign operation, our functional currency will also be OMR. Now, 78% of our finances are in USD by way of contribution from A. Bank accounts are kept in USD as well as INR. The cash flows generated by B on a monthly basis in USD, we remit to A. So cash flows what we generate, we remit for the purpose of repayment of loan. The cash flows we are remitting, but for the purpose of repayment of loan. Revenues of B are in USD. Hamare revenues are in USD. Competitors are globally. We basically have the tenders in USD. Cost 70% INR, 30% USD. And see over here it looks like we are not a dependent one. It's not like we are selling only the goods coming from parent. As we are working independently. So as we are not an integral foreign operation, our functional currency is not OMR. Our functional currency not OMR. Now it can be USD, now it can be INR. See the terms and condition. So check over here. Revenues coming in USD. Cost 70% INR, 30% USD. Finance is in USD. Retained partially USD, partially INR. So thinking all this, I think USD will be the functional currency. And it's non-integral, so OMR cannot be your functional currency. Okay, next over here, question number 4. We have basically imported vehicle we are selling, but our cost is more influenced by import duty of Indian government. Our cost is more influenced by import duty of Indian government based on sales price also is basically determined like that. So because of import duty prevalent in India, the economic forces which affects our pricing are Indian government ke rules and regulation. Your functional currency will be INR. Now, Accounting for foreign currency transaction. We know foreign currency transaction, foreign operation. Two things are there. Foreign operation means we have a branch or subsidiary abroad, that's foreign operation. Now coming to foreign currency transaction. We are in India, but I sold goods to someone in US, so I have a debtor in dollars. So foreign currency transaction hai. We have a sales in US, or we have a purchase from US, or we purchase a machine from abroad, we took a loan from abroad. Wo foreign currency transaction, not operation. How to record a foreign currency transaction? So on day 1, it is recognized at a date prevalent on the rate prevalent on the date of transaction. So initially recorded at the rate on the date of transaction. Acha, if at all you want, you may take average rate of a week for all transaction of a week if it approximates kind of the actual. So practical reasons may you may do that. Otherwise, you take the rate prevalent on the date of transaction, day 1. Acha, subsequent recognition depends on whether it's a monetary item or a non-monetary item. Monetary item are those for which the value to be received or paid is kind of fixed. Value to be paid or received is kind of fixed or determinable amount. Value to be paid or received is kind of fixed or kind of determinable. That's basically a monetary item. Non-monetary item is basically the value to be paid or received is not fixed. Acha, so day 1, everything, all foreign currency transactions, they are recognized at which value? Day 1, the rate prevalent on the date of transaction. Subsequent depends on whether it's a monetary item or a non-monetary item. Okay, if it's a monetary item, what do we do? So all monetary item, they have to be brought to closing rate. Acha, so debtors, amount to be received is fixed. Creditors, amount to be paid is fixed. Loan, amount to be paid is fixed. Acha, advance given to supplier. Advance given to supplier, I'll be getting goods. तो मुझे cash नहीं मिलना, goods मिलने वाला है. So that's a non-monetary item. The advance given to supplier is not a monetary item, it's a non-monetary item. So for monetary item, what I'll do is monetary items are basically brought to the closing rate. Non-monetary item, we continue it at historical rate. But if non-monetary item are shown at fair value, then I'll be taking the rate prevalent on the date of fair value. Acha, the monetary item, bring it at closing rate. Non-monetary item, they are kept at the historical rate. But if they are measured at fair value, the rate prevalent on the date of fair value is taken. Acha, now, inventory. Inventory is measured at cost or NRV, whichever is lower. Acha, to do one thing. How do I do comparison? Cost or NRV, whichever is lower. Should I compare cost and NRV in foreign currency? No. Cost, you convert based on historical rate. NRV, you convert based on the rate on the date on which you are determining NRV. So cost you convert at historical rate, NRV you convert based on the rate when you're determining NRV, that's 31st March rate, and then you compare. So cost is converted into INR, NRV converted into INR, and then compared. In simple words, cost NRV should not be compared in foreign currency. Cost convert into INR, NRV convert into INR, then you compare it. Now, how do I record the exchange gain loss? The exchange gain loss coming will go in your P&L. Exchange gain loss coming will go in your P&L. So year end पे आया और settlement के time आया, both. So monetary items, it will go in P&L. There's one exception, I'll take it later. Normally it goes in P&L. Acha, non-monetary item. So for all monetary item, the exchange gain loss goes in P&L. For non-monetary item also, if that item goes in P&L. But wo item goes in OCI. If that item goes in OCI, तो उसका gain loss should also go in OCI. For example, we have a machine which is in foreign currency. Now, when I bought it, it was $10,000, 60 rupee rate. When I bought it, it was $10,000, and how much rate was there? 60 rupee. Now I'm following a revaluation model. Acha, if it's it's a non-monetary item. Machine is non-monetary. If I bought machine on credit, machine to creditor monetary item, machine is non-monetary. How much I'll get from selling machine? Not fixed. Machine is non-monetary. I keep it at historical rate. But if non-monetary items are basically shown at fair value, the rate on the date of fair valuation. So suppose if I'm revaluing it, so 10,000 becoming 12,000. Now tell me, this revaluation profit will go in OCI. Acha, if I revalue it, now I have to take the rate prevalent on the date of revaluation. Now the rate is 75. तो 12,000 into 75 9 lakh. तो पहले 10,000 to 60 था, now 12,000 to 75. तो now the thing is difference from 10 to 12 that goes in OCI. तो ये rate का difference 60 to 75 that also goes in OCI. Did you understood? तो non-monetary item, if the item का gain loss comes in P&L, तो exchange gain loss also comes in P&L. But item का gain loss comes in OCI, the exchange gain loss also comes in OCI. Question number 5, similar. 1st January 18, you purchased a machine for 2 lakh. At that date, the exchange rate was 68. Okay, the 2 lakh into 68, you would have recorded that time. Okay, rupee strengthened, now the rate has become 65. Machine purchase kiya tha and now it has become 65. So day 1, machine to creditor. Machine is a non-monetary item, creditor is a monetary item. You would have recorded basically 2 lakh into 68. ठीक है. You have to repay when? June में. Year end पे rate is 65. Creditor, monetary item, bring it to closing rate. Creditor, monetary item, bring it to closing rate. That will be there. Monetary item brought to closing rate. Closing rate is now 130. Earlier it was 136. So 6 lakh is profit on basically remeasurement. So that will go in P&L for creditor. Now coming to machine. Machine was 2 lakh into 68. Machine was 2 lakh into 68, carried at historical cost only, no change in that. उसमें कोई remeasurement or not happening, nothing happening. And depreciation will come up, so depreciation is given, that's it. Next question over here, basically machine is revalued. Machine को revalue कर रहे हैं. अच्छा, this is a good question, pay attention. 30th January, you purchase a machine $5,000, that rate is 60. So 5,000 into 60, day 1, 5,060, machine to creditor. Now, creditor is a monetary item, I have to bring it to closing rate. तो ये creditor को bring it to closing rate, उसका entry. Now, machine we are having a revaluation, revalued amount of machine 31st March 5500. And now the exchange rate 65, so 5500 into 65. Can I say now machine, if it is fair valued, I have to take the rate on fair valuation. So now it's 5500 into 65, it is 357,500. 357,500, earlier 3 lakh tha. So now 57,500, this will go in OCI. ये 57,500, ये OCI में जा रहा है. Creditor, monetary item, the difference is going in P&L. Machine revalue किया, तो revaluation surplus goes in OCI. The exchange difference उसका भी वो OCI में. ये दोनों आ गया combined. This is both. 5,000 becoming 5500, 60 becoming 65, both included here. Both gets included here. It goes in OCI. Now, basically later the creditors are settled. In your book, it was 65. Payment is done as per 67. 2 rupee loss comes. That goes in P&L. Now coming to machine again. Creditor settled. What happened to machine? Now machine ka fair value on 31st March 2 remains unchanged. Acha, remains unchanged. We fair valued it, but the value remains same. We revalued again, but the value has remained same. ठीक है, बट हाँ एक्सचेंज रेट नाउ टू टेक ऑफ. आपने फेयर वैल्यू कब किया? मार्च 2 को. तो एक्सचेंज रेट ऑफ मार्च 2 इज टू बी टेकन 67. तो नाउ इट्स 5500 into 67. इट वाज 5500 into 65. नाउ 67 तो 2 rupee. तो 5500 into 2 rupee, 11,000 gain is coming. That will go in OCI. Clear छे? Okay, moving ahead. 7th one is similar. I'm skipping it. 8th. 7th one is similar. I'm skipping it. Going to the 8th one. Okay, now 8th question, a good one. 1st April 1, you raised a loan. आपने loan लिया 6 million and there's a issue related cost. I told you as per IND AS 109 that is deducted from the loan. The loan is not 60 lakh. 60 lakh minus 2 lakh. It is coming 58 lakh. 58 lakh FCY. Rate on the date of transaction I need to take. Rate on the date of transaction 2.5. On day 1 my loan will be 1 crore 45 lakhs. 58 lakh into 2.5, 1 crore 45 lakh. Day 1 it is recorded like this. Okay. Now interest, effective interest rate 12% है. पहले foreign currency में 58 lakh का loan उसका 12%. 58 lakh loan उसका 12%. तो can I say interest is 696? तो see, loan 58 lakh, interest accrued 696, we paid 6 lakh. We paid 6 lakh is payable annually, so we are paying 6 lakh. And this is the closing. This is all in foreign currency. Now, opening was at opening rate. Interest will be at average rate. It's interest for the year. Payment we did on last day, it will be at last day का rate. तो ये foreign currency में था. Now INR में if I want, opening is at opening rate, day one वाला rate. Interest will be at average rate. So interest basically is coming at average rate. So finance cost will be at average rate. So this is it. And the payment done on last day, आपको last day का rate लेना है, rate on the date of payment. And now the loan balance what comes in INR. Now the loan balance what comes in INR. आपने convert किया तो this is coming 1 crore 45 lakh plus 1684,320 minus 1650. So can I say it comes 145,34,320? But loan is a monetary item. Bring it to closing rate. ये जो FCY है ना, इसको closing rate पे लाओ. Closing loan in foreign currency, bring it to close. INR में in books is 145,34,320. INR books में 145,34,320. Foreign currency में it's 5896. Bring it to closing rate, it will become 162,14,000. So minus 162,14,000. Difference 16,79,680 goes in PNL. 16,79,680. Clear? Question number 9. Question number 9. You purchase a US denominated bond. You have invested in bond. You have invested in foreign currency bond. Interest milega. Again, effective interest rate basis. You bought it at 1,000. The investment is 1,000. So day one, 1,000 rupee, valued at the rate prevalent on the date of transaction 40. Rate prevalent on the date of transaction 40. Interest is 4.7% on face value. Effective interest rate कहीं दिया होगा 10%. Effective interest rate 10% on 1,000, 10% I have to see. तो 100 rupee and that will be average rate. ठीक है? That will be average rate. And actually we received what? Actually we received 4.7% of face value. तो 1250 उसका 4.7%. 1250 उसका 4.7%. The actually we received is $59 and we received on last day. So that the opening ये था, interest accrued is this, we received this becomes the closing. This becomes closing. In dollar term, this is the closing. INR में this is the closing. Dollar term, this is the closing. INR में this is the closing. Did you understand this? Now, this is FVT OCI category. If it is FVT OCI category, we have to fair value it. And now they are telling the fair value कितना है इसका? The fair value of bond at the end is 1060. So 1041. Can I say 1041 becomes 1060? 1041 becomes 1060. Now this, it is FVT OCI category. That difference will go where? That difference will go where? In OCI. It's fair value through OCI. That difference will go in OCI. वो difference OCI में जाएगा. But now just pay attention. Now just pay attention. So over here, I am trying to understand. First of all, यहाँ आपने bond में invest किया है. Bond में the amount to be received is fixed. Bond में amount to be received is fixed. It's a monetary item. Monetary item, you bring it to closing rate. That monetary item का gain goes in PNL. अच्छा, तो monetary item 1041. I bring it to closing rate 45. तो ये closing rate है. This difference goes in PNL. It's a monetary item. Bond is monetary item. Amount to be received is fixed. So I bring it to closing rate. That goes in PNL. Now उसको मैं revalue कर रहा हूँ. 1041 becomes 1060. This difference goes in OCI. तो पहले 1041 ही रहा. उसको closing rate पे लेके आ रहा हूँ. That difference goes in PNL. It's a monetary item. Now I do a fair valuation. This difference, whatever it's coming, that goes in OCI. Clear? Okay, next one, net investment in foreign operation. Okay, sometimes we have a monetary item receivable or payable from foreign operation for which settlement is neither planned nor likely to occur in foreseeable future. A long-term interest kind of thing. So I've given a very long-term loan to subsidiary. A very long-term loan to subsidiary is given for which settlement is neither planned nor likely to occur. So it's effectively a net investment in foreign operation. Now it's a monetary item. You bring it to closing rate, the loan given to subsidiary. It's a monetary item, bring it to closing rate. ठीक है, closing rate पे लाने पे whatever exchange gain loss comes in your SFS, take it in P&L, but in your CFS, take it in OCI. So monetary item which is in effect a net investment in foreign operation, monetary item वो which form part of net investment in foreign operation, उसके ऊपर exchange gain loss coming, SFS में goes in P&L, CFS it will go in OCI. Are you clear? Are you clear? ठीक है, moving ahead. Change in functional currency. Okay, if the primary economic environment in which you are operating वो change हो गया, तो can I say functional currency is changed? On the date of change. Now what do? All items, suppose earlier the primary economic environment which we were operating was US, the dollar was our functional currency. Now primary economic environment in which we are operating became UK. So now the pound has become our basically functional currency. So from dollar, all figures are to be converted to pound based on the rate prevalent on the date of change. And the difference goes in OCI. So all items are translated to new functional currency using the rate on the date of change, and it should basically, the difference goes in OCI. Exchange difference, just a minute. If everything translated at same rate, difference actually will not come. If everything translated at same rate, the difference actually will not come. But an earlier difference, if anything was there in OCI, keep it in OCI until that basically thing is disposed of. Okay, that's fine. So that was there. Now presentation currency and functional currency are different. So see, financials are first prepared in functional currency. If presentation currency different hai, so can I say now that financials are to be converted from functional currency to the presentation currency? How do I convert? So all assets and liabilities closing rate, all incomes and expenses average rate. Difference goes in OCI. Assets, liability, closing rate, income, expense, average rate. Something is closing, something is average, different rates are used, difference will come. If you use same rate for everything, difference will not come. If you use same rate for everything, difference will not come. But here different rate are used, difference will come. Difference goes in OCI. Okay. Now translation of foreign operation. If I have a subsidiary abroad, can I say I have to convert their figures into INR for the purpose of consolidation? How do I do it? Same way. Assets and liabilities closing rate, income, expense, average rate. Difference goes in OCI. Okay, the check over here. I just take the important question. It's fine. Next, difference in reporting dates. Parent is in India, their year ends in March. Subsidiaries abroad, their year ends in December. Now subsidiaries abroad, their year ends in December. Now subsidiary ke December ke figures I'm using. For the purpose of CFS, I'm using the December's figure. Okay, if I'm using the December figure for CFS, now their figures are in dollar, I have to convert into INR. So should I use December rate or should I use March rate? I have to convert into INR. So should I use December ka rate or should I use March rate? So they've clearly given over here. So see, normally if they have a different year, they try to prepare one more set of financial statement which will be used for consolidation. But if they're not preparing, I can use the December figures. So if I'm using the December figures, they'll be translated at the rate at the end of the period of the foreign operation. What is the end of the period of the foreign operation? December. I'll use exchange rate of December. Acha, next one, intra-group transaction. Now see, parent sold goods to subsidiary. Parent has recorded sales, subsidiary has recorded purchases. Parent has a debtor, subsidiary has a creditor. Parent has a debtor, subsidiary has a creditor. Okay? Now I sold in foreign currency. So my debtor is in foreign currency, I bring it to closing rate. My debtor is in foreign currency, I bring it to which rate? Closing rate. So what happens is basically there's some exchange gain loss recorded in my book. Whenever basically in CFS that mutual indebtedness is eliminated, so that debtor creditor will go away, but that exchange gain loss which we had recorded, that does not go away. तो check out, although intra-group balances are eliminated on consolidation, any related foreign exchange gain loss will not be eliminated. See this question 14. See this question 14. The functional currency of parent P is USD. Subsidiary का functional currency euro है. P sold goods of value 100 USD to S. I sold goods 100 USD to S. So parent will record a sale of 100 USD. Parent will record a sale of 100 USD. Now subsidiary will record a purchase of 100 USD, but subsidiary's functional currency is euro. So they will record 100 into 2. Can I say 200 euro they will record? Then they will bring it to the closing rate. It becomes 220 in their books. They bring it to closing rate. It becomes 220 in their book. So now in parent's book it's $100. In subsidiary's book it is 220 euro and 20 rupee exchange gain loss they have booked. Now subsidiary का 220 euro foreign operations के financials they are converted at closing rate. The 220 euro will become $100. Now $100 receivable, $100 payable, knocked off, what 20 euro exchange gain loss remains. What 20 euro exchange gain loss remains. ठीक है. Okay, check question number 15. M Limited, a wholly owned subsidiary, has a wholly owned subsidiary G. M Limited has a wholly owned subsidiary, which one? G. M sold pharmaceutical bottles to G. M sold pharmaceutical bottles to G for euro 12 lakh on 1st February. अच्छा, तो M sold to G and M is in India, तो my functional currency is INR, but I sold it in which euro? मैंने euro में sales किया, euro में sales किया, तो I'll record it at the rate prevalent on date of transaction 83. So 12 lakh euro into 83, I'll record 996 lakhs. So day 1 G to sales 996 lakh. And now my debtor is in foreign currency 12 lakh euro. I bring it to closing rate. 83 becomes 85. So 12 lakh into 2, debtor goes up by 24. So there's exchange gain coming 24. So now in my book there's exchange gain 24. ठीक है? And it is actually 12 lakh euro. 12 lakh euro. Now subsidiary के figures, basically subsidiary would have recorded their currency is euro only, so they have a purchase recorded in euro. So 12 lakh euro they have a purchase. मेरा basically वो क्या था? Sales. Now the 12 lakh euro gets eliminated. They will preparing a CFS, but this 24 exchange difference will remain. Now moving ahead, inventory point. If you just check out over here, all these bottles are lying in stock with G. अच्छा, तो all these bottles are lying in stock with subsidiary. तो can I say subsidiary के पास ये stock में है. Now how stock is to be valued? Stock is valued at cost or NRV, whichever is lower. Okay, तो cost will be at the rate prevalent. NRV, cost क्या होगा historical rate पे. NRV is at the rate when you're doing a NRV valuation closing rate. तो check out over here. So cost is at 83, NRV is at 85, so 996 or 1026, उसमें से whichever is lower is 996. Okay, so now they have done valuation like this. Actually ये गलत है. So they are telling that inventory is 996. But if you just check out from group's angle, what was your cost? From group's angle, your cost was 830. From group's angle, your cost was 830. You are required to eliminate an unrealized profit of 166. Eliminate an unrealized profit of 166. Practically, there's one wrong thing. Actually, closing stock of G का closing stock will be 12 lakh euro and assets and liabilities of subsidiary are converted at closing rate. याद आया? How do I translate foreign operation? Assets, liability, closing rate, income, expense, average rate. So 12 lakh euro into 85, actually it will be 1020. Actually stock coming is 1020, cost is 830, so unrealized profit should be 190. Unrealized profit should be 190. But ICAI has done a valuation of stock like this over here. Actually the stock of subsidiary stock of subsidiary 12 euros will be coming at closing rate 85. So it comes at 1020, cost was 830, unrealized profit should be this. But for exam purpose, do what ICAI is done. Any doubts? Any doubts? Okay, now if I have a foreign subsidiary, the goodwill will be calculated in foreign currency. I repeat, the goodwill will be calculated in which currency? Foreign currency. And that goodwill, every time I'll put it at a closing rate. So can I say goodwill keeps on changing? Okay, check over here. Any goodwill or fair value adjustment which we are doing under business combination, they are treated as asset liability of foreign operation and they are expressed in the currency of foreign operation. So over here, if you check this question, we find out goodwill in foreign currency. Net asset comes this many million, I paid this many million, NCI is this much and difference is goodwill. So goodwill comes in foreign currency and now it will be at a closing rate. Closing rate is 84, so aa gaya 117.6. Next year if closing rate gets different, goodwill will be getting different. Clear? Acha, second question over here. Earlier question, parent sold to subsidiary, stock was with subsidiary and subsidiary ka stock comes at a closing rate. But here subsidiary sold to parent, can I say stock is with us only? Stock is with us only. Okay. 2.4 million they sold for 4.2 million. So 1.6 million is the profit. And in our book, inventory will be at our cost only. The rate on the date of transaction, to into 83 karna hai. Into 83 karna hai. So 4.2 minus 2.4 into 83. So here it will be 149.4 is unrealized profit in stock. See, very important to understand, if stock is with subsidiary stock will come at closing rate. But if stock is with us only, it is lying at the date on which it was purchased, wo cost pe hi hoga. Next, disposal of foreign operation. If foreign operations are disposed of. Acha, foreign operation may remember, we have their items in foreign currency, we converted into INR. So foreign operation tha, so their assets and liabilities converted at closing rate, income expenses were converted at average rate, difference went in OCI. Now, if that foreign operation disposed, if that foreign operation is disposed of, the balance lying in OCI, FCTR balance, it's an item reclassified to PNL, we are required to take it to PNL. Okay. It will be reclassified to PNL, FCTR balance. So if subsidiary sold off, now what do I do? Uska FCTR balance will go to PNL. And how to account for sale of subsidiary? We already did it in our chapter of consolidation. Acha, partial disposal. Partial disposal, control gone, transfer full FCTR balance to your PNL. It's item reclassified to PNL. Acha, but if at all control is not gone, change in proportion of NCI hai, then from OCI that much is transferred to NCI. If it's change in proportion of NCI, then it will be transferred to NCI. TK, tax effect is fine. Last point of this standard is advance consideration. Okay, I paid some advance and then I pay later the remaining amount. Okay, so pay attention over here. Or I received some advance and then I am receiving the remaining amount. 1st January 20, we received an advance $10,000 out of 25,000. Out of 25, I got $10,000. 15th ko we dispatched the goods. So now pay attention. For $10,000, basically advance I got on 1st January. Entry will be advance from customer to bank, 10,000 into rate prevalent on date of transaction. So 10,000 into it will be 70. So can I say it comes 7 lakh advance? And now when I'm recording sales on 15th, for the amount already received in advance, the sales will be recognized at that rate only. Acha, so now 25,000 sales hai. 10,000 sales is considered at 70 rupee and 15,000 ka sales is considered at 72 rupee. Total sales will be 17,80,000. Total sales will be 17,80,000. Did you understood? For $10,000, the sales will be considered at 70 only, and for another $15,000, the sale will be considered at 72. So that's the line basically written. The exchange rate to be used on initial recognition related to asset, expense, income should be the rate when advance was received. So now when you're booking, basically assets, liability, income, expense, sales, or purchase, basically your debtor, creditor. So for the money already received earlier, the rate of that day is to be taken. For remaining one, rate of today to be taken. ठीक है. Done. This is your IND AS 21. Let's do one more IND AS 24, then we take a break. Let's do one more IND AS 24, then we are taking a break. Any doubts? Anybody till now? Any doubts? Anybody till now? Get yourself fresh, have lots of water, shake yourself. Okay, going to IND AS 24. This are now chapter 10 is IND AS related to disclosures. Chapter number 10 is IND AS related to what? Disclosures. We have first one is related party disclosure. IND AS 24 related party disclosure. Now we know many times transactions are there with related party. It may not be at arm's length price. So because of that, the user should be made aware that these are related party transactions. It's very important for user to see the related party transaction. Now going to directly over here, the definition. Going directly to the definition of the word related party. Okay, who is a related party? Now, related party is either a person or an entity. It's either a person or an entity that is related to the reporting entity. Reporting entity is the entity for which we are preparing financials. So, related party is either a person or an entity which is related to the reporting entity. Okay. Now, which persons are your related party? Which entities are your related party? First, let's understand which persons. Which persons are your related party? A person or a close member of that person's family. Okay, so person or a close member of that person's family is related if, कब वो related होगा? If that person has a control or a joint control over reporting entity, or they have a significant influence. So someone who has a control over us, someone who has a joint control over us, or someone who has a significant influence over us, they are related, plus unke close family members are also related party. Or a person is a member of KMP. He is a KMP of our company or our parent. So aapke KMP, your directors, your CEO, your CFO, they are KMP. So your company's KMP are your related party. Your parents' KMP are also related party. Sir, my subsidiaries KMP are not your related party. Your company's KMP related party. Your parent company's KMP are also your related party. They are related party plus their close family members are also related party. So which persons are related party? Who has a control or a joint control or a significant influence over us, or he is a member of KMP of our entity or of our parent. Achha, who is covered in the close family members? So close family members will include your father, mother, brother, sister, spouse, also domestic partner. तो पहले आपके father, mother, brother, sister, spouse और domestic partner, and आपके kids, ठीक है. Second, they are telling kids of your spouse or domestic partner, but आपके साथ नहीं है, किसी और के साथ है. See, nowadays the concept is there, people marry more than once. So kids of spouse or domestic partner, but with someone else, they are also a related party. अच्छा sir, father, mother, brother, sister of spouse के father, mother, brother, sister, they will be coming only if they are dependents. Okay, so your father, mother, brother, sister covered. Spouse के father, mother, brother, sister will be covered only if they are dependent. So dependents of yours or your spouse or domestic partner. Dependent of yours or your spouse or your domestic partner. The father, mother, brother, sister of spouse or domestic partner will be related party only if they are dependents. Fine, so this is which persons are related party. This is which persons. Now going to which entities are related party. Which are the entities related to me? Okay, any criteria met. They've given A, B, C, D, E, F, G, H. Any criteria met, that entity is a related party. One, you are a member of same group. You are a member of same group. Group includes parent and subsidiary. Group includes parent as well as subsidiary. तो आपका parent, आपका subsidiary, other subsidiaries of same parent. Other subsidiaries of same parent, they are covered in your group. So if you are a member of same group, related. अच्छा, your JV, your associate, or your group members JV or associate. तो आपका JV or associate, your parents JV or associate, or the fellow subsidiaries JV or associate, all are your related parties. तो JV or associate of the reporting entity or group member. So your associate JV, your parents associate JV, your subsidiaries associate JV, fellow subsidiaries associate or JV. Done. Now for CD, for point number CD, F and G. For C, D, F and G, I have given you one shortcut. For C, D, F and G, I have given you one shortcut. Like suppose Mr. A or A Limited. There is company B and there is company C. Achha, one place you need control or joint control. Other place you have a control, joint control, significant influence or KMP. So one place में control, joint control चाहिए. Other place control, joint control, significant influence or KMP. Then basically B and C will be said to be related. So when are B and C related? Okay, the same party में, same party, one side there is a control, joint control, other side there is a control, joint control, significant influence or KMP. Okay, the check over here C point. Both entities are JV of same third party. So can I say A has joint control over B, joint control over C? So both the places joint control chalega. One place you need control, joint control. दूसरी जगह कंट्रोल, जॉइंट कंट्रोल, सिग्निफिकेंट इन्फ्लुएंस और केएमपी. बोथ साइड सिग्निफिकेंट इन्फ्लुएंस विल नॉट वर्क. Okay, check. One entity is a JV of another entity and another is a associate. So one side joint control, another has significant influence chalega. Both sides significant influence will not work. Same way, F. A person is controlled or joint controlled by a person. An entity is controlled or joint controlled by a person. So Mr. A has control or joint control over A Limited, and same Mr. A has a control, joint control, significant influence or KMP in B. I told you one place you need control, joint control, other place you need control, joint control, significant influence or KMP. A person who has a control or joint control over reporting entity, आपकी entity पे control, joint control, somewhere else is control, joint control, significant influence or KMP. Did you understood? So this for C, D, F and G, I told you shortcut. One place control, joint control, other place control, joint control, significant influence or KMP. Now E point. Entities created for post-employment benefits. Entities created for post-employment benefit, like Infosys created Infosys Gratuity Trust, वो आपका related party. अच्छा, sometimes KMP might not be a person. I've had an entity who is doing a KMP services. If I've had an entity doing KMP services, so that entity plus उनके group members. तो entity और group member, उनके group member, they become related party to me. अच्छा, तो basically if I have a KMP, my KMP or my parents KMP, they are related party to me. But suppose we don't have a KMP, we have had a entity giving KMP services. So entity giving KMP services to me or entity giving KMP services to my parent, they are my related party, plus unke group members are also related party. This is basically how we have it. Now one more thing, please pay attention over here. Whenever I say basically in your point number 2, your JV or associate, your subsidiaries JV or associate, your parent JV or associate, your fellow subsidiary के JV or associate, they are your related party. So when I use the word JV or when I use the word associate, JV includes subsidiary of that JV. Associate includes subsidiary of that associate. So JV includes subsidiary of that JV, associate includes subsidiary of that associate. Okay, moving on over here, illustration number 1. In this we are required to identify which are related party for whom. For P, all are related party. P has 2 subsidiary, SA, SB, and it has 2 associate, A1, A2. And SB has a subsidiary, SC, and SC has an associate, A3. Achha, so now just think from P's angle. Just think from P's angle. One point says your group member. Your group member include your parent, your subsidiary. So ये आ गया, ये subsidiary आ गया. Okay, second point says Second point says your associate JV, your fellow members के associate JV. तो my associate JV are this and this is my fellow member का associate JV. My group members associate. So indirectly all are covered. For P, everybody is related party. Now think from subsidiaries angle. From subsidiaries angle, अच्छा, तो your group member include your parent, then your subsidiary and fellow subsidiary. अच्छा, group member include parent, your subsidiary, your fellow subsidiary. This three covered, ये cover हो गए. Now second point says your associate JV और your group members associate JV. तो my group member के associate JV, तो group member associate JV, तो P के associates covered, SC के associate covered. Indirectly for SA all are related party, for SB also all are related party. But for A1, A2 and A3, for A1, A2 and A3 what is happening is, for A1, A2, A3, so P only here A1, here A2. So can I say here significant influence, here also significant influence, both the sides significant influence? This is not going to work. So for A1, A2, A3, they are not related to each other. So check over here. यहाँ पे P है, यहाँ पे A1, यहाँ पे A2, A3. तो both the sides significant influence is not going to work. But for SA, SB, SC, तो one side SA, SB, SC, यहाँ पे A1 है, तो one side control, one side significant influence is going to work. ठीक है. तो for P all are related party, for SA, SB, SC all are related party. A1, A2, A3 they are not related to each other. A1, A2, A3 are not related to each other. ठीक है. Now check over here. Atul is an independent director of X. अच्छा, KMP includes your director. Director is also non-executive director. All are covered. And he gets a sitting fee 2 lakh. He's a non-executive director. Naveen is getting some 1,50,000 per meeting. Accountant believes employees, they are not the employee. They are not the employee. They will not come under related party. No need to disclose it. No. They both will fall under the definition of KMP. It will be required to be shown as related party transaction. Okay, question number 4 over here. Check out. X is a domestic partner of Miss Y. So X and Miss Y are there. They are actually related parties. They are basically considered one only. Now check out. X has investment in A and Miss Y has investment in B. X has investment in A, Miss Y has investment in B. Examine when I can say there are related parties. A and B कब related होंगे? अच्छा, if both the places significant influence it will not work. One place control, joint control, other place is control, joint control or significant influence work. If they say both has significant influence, it will not work. So C में no, first and second में yes. So यहाँ पे no. Both the place significant influence will not work. Next question is question number 6 is fine. Leave it. 7. Okay, next question, question number 7. Okay, try to understand. A has 100%, Mr. X has 100% investment in A. So Mr. X 100% investment in A. He is also a KMP in C. He is also a KMP in C. And B has 100% investment in C. B has 100% investment in C. Examine related party relationship of C limited for A limited. ये दोनों. So see, Mr. X one place control, one place KMP. Mr. X one side control, one side KMP. They are related party. Achha, second question. If X is a KMP of B, not C. If X is a KMP of B, so can I say he is a KMP of parent? To be related party. Achha, what if X doesn't have control? It's a joint control. So one side joint control, other side KMP chalega. One side joint control, other side KMP chalega. अच्छा, what if यहाँ पे it's a significant influence, one side significant influence, other side KMP? No. One side control or joint control, other side you need control, joint control, significant influence or KMP. One side significant influence, one side KMP will not work. So 1, 2, 3 में yes related, D में no. तो check first में yes is related, second में yes related, third में related, fourth में not related. Fine. Next one, who are not the related parties? Achha, if you have directors in common, so both the places KMP will not work, or one place KMP, one place significant influence will not work, or both place significant influence will not work. That. Achha, two venturers, A limited, B limited, they came together, they formed AB limited. तो two venturers are not related to each other. They are not said to be related to each other. अच्छा, उल्टा होता, suppose AB has a joint control over AB has a joint control over B, तो then A and B are related. तो उल्टा होता, AB has a joint control over A as well as joint control over B, तो AB will be related, A and B will be related. यहाँ पे A and B will not be related. अच्छा, providers of finance, trade union, public utility, government departments, they do not control, joint control or significantly influence, so they are not your related party by just virtue of normal dealing. उनके साथ we have a dealing, that's why they are related. नहीं, they are not related. Same way, major customer, supplier, franchisor, distributor, they are not your related party just because you have some economic dependence. So major customer, 90% sales to him, he is not related party because 90% sales is to him. So no, that's not related. Okay, check over here. S, a wholly owned subsidiary of P. अच्छा, S is a wholly owned subsidiary of P, तो here related हो गया. Here you are related party, तो it's a related party. Wholly owned subsidiary हो यार, it's a related party. अच्छा, even if transactions are at arm's length price, it needs a disclosure under your related party transaction. ठीक है. Next, related party transaction. What is a related party transaction? It's a transfer of resource, service or obligation. It's a transfer of resource, service, obligation between the reporting entity and related party regardless of whether price is charged. Price charge kiya, nahi kiya, it will still be a related party transaction if it happens between a reporting entity and a related party. Okay. Now comes the disclosure. How do I need to disclose the related party transaction? How do I need to disclose the related party transaction? There are two categories. Category 1 mein, you need to disclose the relationship mandatorily whether transactions are there or not. So category 1, disclose the relationship mandatory. Category 2, you disclose the relationship only when there are related party transactions. Okay, category 1 relationship is to be disclosed, which? So 1, you need to disclose the name of your parent as well as the ultimate controlling party. Like suppose for S4, the parent is S3, ultimate controlling party is H Limited. That needs a disclosure, whether transaction there or not there. Same way, category 2 category 2 requires disclosure of relationship only if there are transaction. Okay, like suppose this guy is a KMP, you disclose only if there are transaction with him. So disclosure regarding compensation to KMP is to be disclosed. Acha, usme bhi how it is to be disclosed? Total compensation, category wise, short term employee benefit, post employment benefit, other long term benefit, termination benefit, share based payment. That way you need to disclose it. Plus any other related party with which I have a transaction, I'll disclose the relationship. So disclosure when you have a related party transaction during the year. When I have a transaction during the year means current year or even previous year, because in your financials you have two columns. So I don't have a transaction this year, but I have a column previous year, but I have a transaction previous year. It is to be disclosed. The relationship you disclose, and you disclose that transaction also in notes to accounts. Fine. Now what I need to disclose? What I need to disclose: 1, the nature of relationship and information about transaction. Information, which information? The minimum amount of transaction, outstanding balance, any provision, any expense recognized for bad debt relating to it. ठीक है. Even if transactions are arm's length price, you are required to give the disclosures. It's mandatory. Okay, fine. Moving ahead. Next, we have question number 13. Financial statement of ABC is given. Managing director is Mr. Y. We have a purchase made by ABC from PQR. And your managing director owns 100% in PQR. Oh, managing director owns 100% in PQR. So can I say now ABC and PQR will be related party? So the thing is, managing director Y, Mr. Y, one place, यहाँ पे Mr. Y, one place as a control, other place is a KMP. एक जगह control, एक जगह KMP, so that two entities will be related. So ABC and PQR are related party. and you need to give a disclosure in notes to accounts about the transaction. Transaction done at normal market terms doesn't matter, still disclosure will be required. They are related party, disclosure will be required irrespective of amount. Last point of this standard, exemption to government related entity. Exemption to government related entity. Now just try to understand. There's a CG. CG has a control over NTPC Limited. CG has a control over BHEL, Bharat Heavy Electrical Limited. So CG is controlling both the companies. CG has majority stake in NTPC, majority stake in BHEL, and there are so many numerous companies CG is having control. So these are basically, so you both are related to each other because the government has a control, joint control or significant influence. So basically, a government related entity is an entity that is controlled, joint control or significantly influenced by government. If basically you become a related party because of that thing, related party disclosures will be required, but there is an exemption given. What is the exemption? I'm not saying you are not a related party. You are a related party, but exemption is given from disclosures. So pay attention. Reporting entity is exempted from disclosure requirement about related party transaction, account, outstanding balance, commitment with government. अगर आपका transaction government के साथ ही है, which controls, joint controls or significant influences you, or another entity which is your related party, another entity which is your related, because the same government is having a control, joint control, significant influence there. अच्छा, तो simple word में, a government entity is exempted from disclosure for transaction which they enter with the government or other government entities. Which they enter with the government or the other government entities. Did you understand? However, you need to disclose the name of government, nature of relationship with government, and if individually significant transactions are there, uska data needs to be given. Individually significant transactions are there, uska data needs to be given. Now check out over here, government G controls entity 1 and 2, and it indirectly controls entity A and B through entity 1 and C and D through entity 2, and person X is a KMP of entity 1. Okay, let me go to chart. So there's a government, they have two subsidiaries, entity 1 and 2. Entity 1 has two subsidiaries A and B, and entity 2 has two subsidiaries C and D, and entity 1 has a KMP X. Entity 1 has a KMP X. This is the data given. Now question is, examine the entity to whom exemption of disclosure will be given for transaction, and this is you evaluate from A's basis. अच्छा, A कहाँ गया? ये रहा A is exempted from disclosure. A is exempted from disclosure about transaction with the government के साथ transaction, and other entities which are related party because the same government is a control, joint control, significant influence. Means I have an exemption from transaction with government, and I have an exemption from disclosure with transaction with entity A, entity 1, entity 2, entity B, C, D. Okay, am I exempted from transaction with X? Achha, first of all, whether X is related party of A. Whether X is related party of A. X is a KMP of entity 1. Okay, so he is not my KMP, but can I say he is my parent's KMP? Achha, he is not your KMP, but he is your parent's KMP. Parent's KMP is your related party. So you are not exempted from disclosure for transaction with X. X के साथ transaction में exemption नहीं है. You have an exemption for transaction with the government and other government entities. माने ये वाले. You're not exempted from transaction with Mr. X. Clear? This is your related party disclosure, IND AS 24. We take a break now and then we'll start with IND AS 33, which is on EPS. Any doubts? Anybody? Are you enjoying? And if you're loving it, please share it with all your friends. Definitely this revision is going to be helpful. Okay, we are taking a break, 15 minutes is 9:08. We'll be back at 9:24. Chalo. We'll be back at 9:24. Enjoy your break. See you after the break. Hi friends, welcome back. Give me a high five. Now, we need to finish two more standards. One is IND AS 33 and second one is IND AS 108. So two standards still to be done. Let's begin and try to finish it by 10:15. Okay, going to IND AS 33, which is on EPS, earnings per share. Now, earning per share is a very important kind of thing which we use it to find out the earnings available to equity shareholders, or we call it as ordinary shareholders under this standard. And that measure is also being used to find out the P ratio, market price per share divided by earning per share. How many times is the price compared to your earnings? So that is basically their P ratio. Now, over here we determine basically this EPS from your ordinary shareholders angle, and this EPS is coming under your SFS also, CFS also. In SFS, EPS should be based on SFS profit. In CFS, the EPS should be based on CFS profit. Fine. How do I measure? How do I measure the EPS? Now there are two types of EPS. One is called as a basic EPS, second is called as diluted. So first of all, coming to basic EPS. Basic EPS is profit or loss attributable to ordinary shareholder. Now they've written over here of the parent entity. Why they've written over here of the parent entity? They are basically from the viewpoint of CFS. From the viewpoint of CFS, the profit attributable to owners of the parent, that is taken. And not the NCI ka share, profit attributable to owners of parent. So this formula or this basically thing given is from CFS angle, that's why it is like this. If it is not CFS, if it's SFS, the profit attributable to ordinary shareholder divided by weighted average number of ordinary shares outstanding during the period. ठीक है, the two things, profit attributable to ordinary shareholders divided by weighted average number of ordinary equity shares outstanding. Let's find first profit. Profit, what it will be? Profit available to ordinary shareholder. The profit is after tax. The PAT I need to take. PAT I need to take. Now suppose I have a redeemable preference shares. Suppose I have a redeemable preference share. So dividend on redeemable preference share is an expense for me. It comes under finance cost. So can I say it's already deducted in PAT? If it's a redeemable preference shares, the dividend on it is already deducted in PAT. No adjustment will be required. But suppose the preference shares are classified as equity. If preference shares have been classified as equity, the dividend on preference share goes under retained earnings. So in your PAT, it's not deducted. So I need to adjust. So check. So your PAT should be after tax, after preference dividend. If preference shares are classified as liability, the dividend has already gone under finance cost. No adjustment will be required. But when preference shares are classified as equity, then what happened is the dividend on preference share has gone under retained earnings. It's not deducted under PAT. So from PAT, deduct the preference dividend. Balance is the profit attributable to ordinary shareholders. So if it is classified as equity, the dividend is basically gone in retained earning. The adjustment will be required. Okay, now when to deduct preference dividend? If it's a non-cumulative preference share, deduct only if it is declared. If it's a cumulative preference shares, you need to deduct whether it is declared or not. Fine. EPS we need to find separately for continuing operation as well as discontinued operation. दोनों का separately we are required to calculate. For CFS it will be based on profit attributable to the parent. Whatever is profit attributable to parent, that will be taken. The profit attributable to equity shareholders will be the profit attributable to parent, not the NCI. Total नहीं, total में से profit attributable to parent, that will be taken. And उसमें भी normal P&L, not NCI. Not OCI. So basically your EPS is based on your normal profit without considering OCI. Other comprehensive income is not considered. ठीक है. अच्छा, now they're given increasing rate preference share. Under increasing rate preference share, initially there is lower dividend, later there's a higher dividend to compensate for issuing them at discount. वो सारी चीजें हैं. Now, if such preference shares are classified as equity and anything related to that has gone in retained earning, so while finding out basic EPS, if anything related to preference shares has gone in retained earning, that needs to be adjusted in your PAT. See, anything related to preference share. If anything related to preference shares has gone directly in retained earning, while calculating profit available for ordinary shareholders for the purpose of EPS, PAT needs a adjustment. Next, redemption or repurchase of preference shares at premium. If you're redeeming preference shares at premium or repurchasing them at premium, but if they are classified in equity, the extra payment which you're making goes under retained earning. So from your PAT, deduct that. That is basically required to find out the profit attributable to ordinary shareholders. Early conversion of preference shares at premium. Now pay attention. To induce early conversion, to basically induce people to go for conversion, early conversion of preference shares, we many times change the terms of conversion in order to induce them to go for conversion. Whenever I'm changing the terms, the excess fair value basically is there. It's a return to preference shareholder, and as per your IND AS 32, whenever I change the terms to induce conversion, the excess fair value goes in P&L only. Now, as per IND AS 32, it goes in P&L. If it has gone in P&L, can I say no adjustment required because it has already gone in P&L? Now, there was a question related to this point. Many students asked me doubt also. See, there's a question given over here also, and there's a similar question given, I think, in MTP, mock test paper. So over there, they've done an adjustment for this. If it has already gone in P&L, no adjustment required. If it has not gone in P&L, adjustment required. That question was silent. And practically, as per IND AS 32, excess fair value to induce, excess of fair value basically which is there to induce them for early conversion, that goes in P&L, and as it has gone in P&L, actually there is no adjustment required. Because it has already gone in P&L. I'll follow this treatment, not the treatment given under MTP. Did you got it? I'll show you the question also over here. Okay, check this question number 3. We have 5% redeemable preference share. If it is classified as liability, the dividend on it would have gone basically under finance cost, so no adjustment in PAT. Second, we have a non-redeemable preference share. Non-redeemable means it's classified as equity. They were issued at discount, and accrual of discount 18,000 has gone in retained earning. I have to deduct it from PAT. PAT में से deduct करेंगे. Again non-redeemable. We repurchase them at 1,000 rupee discount. So 1,000 rupee gain would have gone in retained earning. Add it in PAT. Anything related to preference share, if it has gone in retained earning, I need to adjust it I need to adjust the PAT for the purpose of EPS. Next one, we have this 7% cumulative preference shares. They were classified as equity, clearly given. Until their conversion, wo equity the. And this year we have not paid any dividend. Related to it. Fine. Now, to induce early conversion, terms were modified. Extra fair value 300. I told you, as per IND AS 32, this has already gone in P&L, no adjustment required. Similar question in MTP, they have done an adjustment for this. I'll prefer this solution, not MTP. This is also ICI ka solution. So PAT is 150. Two adjustments were there, 18,000 to be deducted, 1,000 to be added. 18,000 deducted, 1,000 added. And just go down, you'll find over here, the excess of fair value on conversion to induce basically would already have been deducted from profit, and so no further adjustment required. Are you clear? Next, weighted average number of shares. How to find out the weighted average number of shares? It's based on time weighted, and based on number of days, we'll be calculating it like this. TK, coming to the important question. Next, deciding the date for issue of shares. If new shares are issued, I'll consider which date. If they're issued for cash, the day when cash is receivable, and not received, the day when cash becomes receivable. TK. If you issue shares as a part of business combination, so I assume that shares are issued at acquisition date because entries are made at acquisition date. If there are convertible instrument, if it's a mandatorily convertible instrument, you include it from the date of contract only, the day when such contract is entered. If it is contingently issuable shares, you include it when the contingency is satisfied. Clear? Okay. Now, partly paid up shares. If it is partly paid up share, I'll try to have into amount paid up divided by total value. Amount paid up divided by the total nominal value. That way we need to do it. For example, over here we have this are fully paid up, this are partly paid up. So first 31st October ko we are issuing 600 share. So 600 into 5 by 10 is to be done. 600 into 5 by 10 is to be done. Clear? Okay. Now different nominal values. If nominal values are different, we find out EPS of assuming all are of 5 rupee or assuming all are of 10 rupee. The equivalent number of shares. We'll be calculating the equivalent number of shares of same nominal value. And remember one thing, whenever the shares are partly paid up, there's only one EPS calculated. But whenever there's a different nominal value, there will be two EPS calculated. The first we try to calculate EPS for say 10 rupee share, and then 10 rupee share ka EPS is this, so 5 rupee ka how much it will be into 5 by 10. That way we'll be doing it. So whenever partly paid up value different, one EPS, nominal value different, two EPS. Fine. Now next point, this is important, change in number of shares. If there's a change in number of shares without change in resources, there's a change in number of shares without what? The change in resources. Resources are not changing. Okay, the assets and liabilities are remaining same, but number of shares are changing. See, if you issue shares for cash, asset changes. But if I come out with a bonus share split consolidation, there's a change in number of shares without change in resources. How to account for this? These are accounted as if it is done from the beginning of previous year. तो ये पहले से ही थे. The number of shares outstanding is increased over here, and now if I just see over here, the number of share outstanding before the event is adjusted as if the event has occurred at the beginning of earliest period reported, means this has happened at beginning of previous year. So bonus did not came this year, bonus was there last year also. And the previous basically EPS will get restated. Uska reason is, imagine your earning is same, but number of shares double ho gaye, so can I say this year EPS will become half? So people will feel, oh, company is not doing well. That's why the previous year's EPS is also restated. Fine. Check question number 12. Now, we came out with a bonus in August, but assume bonus was there since beginning only. So for every 3 share, 1 bonus. So earlier there were 3 plus 1 bonus. Can I say total becomes 4? The period before that, you do it into 4 by 3. पहले 3 थे, उसको 4 करना है, तो into 4 by 3. The period before, so this 10 lakh into 4 by 3. After that, it became 12 lakh into 4 by 3. Once bonus is issued, then don't do 4 by 3. The period before, इसके पहले January 1st to 28th February. For 2 months, we had 10 lakh share, not 10 lakh into 4 by 3. Then February to August, we had 12 lakh, not 12 lakh into 4 by 3. Achha, now August and onwards, we have 16 lakh. Now don't do 4 by 3 because bonus is already included. Clear with this? Okay, now coming to weighted average number of shares in case of a right issue. Now see, whenever you come out with a right issue, the shares are given to existing shareholders at a price generally lower than the market rate. So can I say there's some bonus element over there? There's some bonus element. Thoda sa bonus element hai. That's why what we need to do is we need to find out a right factor. आपको क्या find करना है? Right factor. How do I find out the right factor? Fair value per share immediately before right issue. What was the fair value per share immediately before right issue? Divided by theoretical ex-right price. And that right factor is to be multiplied for all period before the right issue came. So right issue के shares are issued उसके पहले वाले period पे. The right factor is to be multiplied, and right factor will always be more than 1. Right factor will always be more than 1 because theoretical ex-right price will be lower than the price going on. So today price going on is this. Okay, so we have 100 shares of rupees 25. Now extra 10 shares are given at 15. So 100 shares into 25, 2500 rupee. Plus 10 shares at 15, 150. Total divided by now 110 share. So your theoretical ex-right price comes at 24. So 25 divided by 24, it will be 1.05 that way. So find out basically the right factor, and the period before right issue is to be multiplied by the right factor. And our previous year's figures are also restated. Previous year EPS is also restated. So check out over here. We have question. Okay, it's fine, not important, but still let me just take it. So we found out a right factor coming 1.05. Right issue came in the month of March 1st. So basically January, February I had 5 lakh shares. No, not 5 lakh, 5 lakh into 1.05. So January, February, it's not 5 lakh, it's 5 lakh into 1.05. That just you need to do it. So for 2 months, it was 5 lakh into 1.05. Now it became 6 lakh. Now don't do it into 1.05 because right shares are already included now. Okay, now going to diluted EPS. This was basic, now going to diluted EPS. Now diluted EPS is basically coming whenever company have dilutive shares. What is this dilutive shares? Potential equity shares which can be converted into equity in future. Potential equity shares like convertible debentures, convertible preference shares or ESOPs. That way it can be there. So basically it's found out on the assumption. Suppose that convertible debentures have been converted or convertible preference shares have been converted or ESOPs have been exercised or contingently issuable shares, the contingency is satisfied. So what will be the impact coming on EPS? तो they became shares, but उसके ऊपर का now interest or dividend not to be paid, तो profit में increase होगा, number of shares में increase होगा. तो we try to show the effect right now if they have been converted or they have been exercised, kind of that. So diluted EPS is basically the reduction in earnings on the assumption that convertible instruments are converted or options of warrant are exercised or the contingently issuable shares, the conditions are satisfied. ठीक है. Now, how do I calculate this diluted EPS? So, profit or loss available to ordinary shareholders after giving effect of potential dilutive equity shares divided by weighted average number of equity shares after giving effect of that potentially dilutive equity shares. ठीक है. Now, EPS calculation में, तो what happens is, suppose the convertible preference debentures have been converted. तो वो convert हो गए, तो कहने से उसका interest is not to be paid. तो interest net of tax will be added in numerator. Denominator में the shares which are to be issued, that will be added. अच्छा, preference shares have been converted, तो उसका dividend not to be paid. तो entity shall adjust the profit or loss attributable to shareholder by after tax effect of dividend or interest related to it or any other change. Profit change होगा, तो possibly bonus might also change, which is to be given to employees. So that's any other change. And divided by number of shares में what will happen is the number of shares to be issued, that will get added. Now, these are important points. This, whatever points coming right now they are important. Dilutive potential ordinary shares are determined independently for each period presented. For current period, previous year, we'll find it separately. ठीक है? All potential ordinary shares are assumed to be converted at beginning of the period. I assume that they all have been converted at beginning of the period unless the debentures were not there only at beginning. So I assume they have been converted at beginning of the period. But suppose debentures were issued in July, so I cannot assume they have been converted since April. No. So then they have been converted from July. Okay, we have illustration 19 related to it. Achha, if any potential ordinary shares are lapsed in between, if potential ordinary shares are lapsed in between, so we include them in dilutive from beginning to the date they are lapsed. From beginning to the date they are lapsed, only for the portion for which they were outstanding. Achha, if potential equity shares have been converted during year, if they have been converted during year, from the time they have been converted, they became really the shares. They became really the shares. So then they would have been included while finding basic EPS only. So basic EPS के denominator में they are already included once they are converted. For diluted EPS, consider them from beginning to the date of conversion. For diluted EPS, we'll consider them from beginning to the date of conversion. अच्छा, if conversion में the holder has an option. Conversion में the holder has an option. If he converts at the end of third year, so he will be getting this many shares. If he converts at the end of fourth year, this many shares. If he converts at the end of fifth year, this many shares. So take the most advantageous from the viewpoint of holder. So assume the most advantageous conversion rate from the viewpoint of holder. Achha. Now diluted EPS may, if the EPS is going down due to that conversion, due to that optionally convertible shares getting converted, if EPS is going down, then we call it as diluted. But because debentures have got converted, interest not to be paid, denominator mein shares increase, but overall EPS is increasing, it's called anti-dilutive. Anti-dilutive effect is not taken. If it is anti-dilutive, diluted EPS will be same as basic EPS. The effect of anti-dilutive potential equity shares are ignored. Now, whether they are dilutive or anti-dilutive, how will I understand? So, I need to consider each of the potential shares separately. So, you need to consider each of potential shares separately. You need to find out the incremental EPS. To find out incremental EPS of convertible debenture, find out incremental EPS of preference share, find out incremental EPS of basically the ESOPs. You find incremental EPS of each one of them, one which has a lowest incremental EPS. Assume they are converted first. Okay, then you assume the second one is converted. Then you assume the third one, and time where it becomes anti-dilutive, you stop over there. So suppose upon conversion of ESOPs and upon conversion of preference share, it was dilutive. But upon conversion of debenture, it becomes anti-dilutive. Ignore that. Ignore that. So we need to find out the incremental EPS, and wherever the incremental EPS is least, it is considered most dilutive. Okay, coming to question number 16. Coming to question number 16, entity A has issued 25,000 4% debentures of 1 each. They are convertible at the rate of 1:1. There's a bonus 1% of PBT. Profit before tax was 80, after tax was 64. Tax rate is 20%. Find out earnings for diluted EPS. Only the earnings. Only the earnings. Acha, now just pay attention. We are required to find out the earnings for diluted EPS. PAT given is 64. Because of diluted EPS, now what happens is, upon conversion of debenture, can I say interest not to be paid? Acha, so 25,000 debenture of ₹1, uska 4%, 1,000 rupee not to be paid. So that added, but uska tax benefit 200 will go away. Tax benefit 200 will go away. Now, 1,000 rupee profit increased, can I say bonus will be given? 1,000 rupee profit increase, तो bonus देना पड़ेगा. Bonus is how many percent? 1%. तो 1,000 increase हुआ, उसका 1%, 10 rupee extra bonus. But उस पे there will be a tax saving of 20%. So this is the earnings for your diluted EPS. Fine. Question number 18. Question number 18. May 22 exam this was asked. Okay, 1st January I have total number of equity shares 10 lakh. Convertible bonds are 1 lakh. Rupees 1 lakh. Rupees 1 lakh. Every 100 rupee gets converted into 120 share. Every 100 rupee gets converted into 120 share. 31st March, this many bonds have been really converted. Achha, this many have been really converted. They will be used while finding basic EPS only. So 10 lakh shares were there for January, February, March, 3 months. 10 lakh shares were there for 3 months. And then for this 25,000, how many would you given? Into 120 divided by 100, 30,000 shares. So then 10 lakh shares were there. 10 lakh shares were there for 3 months, and 10 lakh 30,000 was for 9 months. 10 lakh 30,000 for 9 months. $10 lakh into 3 by 12 and 1030 into 9 by 12. It comes 1022,500. 1022,500 aa gaya. This is how it is there. Now, or they have done it like this. The 10 lakh was for whole year. This 30,000 is for 9 months. 10 lakh was for whole year. 30,000 for 9 months. Now, for diluted EPS. For diluted EPS, see, once they are converted, they are already included. So diluted may include them from beginning to the date of conversion. Diluted may include from beginning to the date of conversion. So diluted में कितना addition होगा? From the date of conversion already taken. So for the converted portion, that 30,000 share, they were there for 9 months. 9 months तो लिया था ना? Take for 3 months here. So ये 3 months they will be added. And for the non-converted portion, take it for the whole year. Because ऊपर they are not there only. For converted portion, they were there for 9 months, take it for 3 months. For unconverted one, take it for the whole year. So this much addition will happen in your number of shares. This much addition will happen in your number of shares. Now interest में Interest may be, can I say once they are converted, interest was not there only. So for the converted portion, 3 months ka interest added back, because anyways once they were converted, interest was not there. For unconverted portion, whole year interest. So यहाँ पे whole year interest, whole year share, 3 months interest, 3 months shares. Did you got it? So this much is addition in your profit, this much is addition in your shares. You find out the diluted EPS. Now question 19 is a good one. They have an option when they want to convert. If they convert this time 135 share, then 130, 125, 120, take most advantages from holder's point of view. Where he gets maximum 135. Where he gets maximum 135, he'll choose that. Clear? He'll choose that. Other things were fine in this question. Nothing much difference. Acha. Now one more thing. If you check over here, 1st October को we issued this convertible loan. Acha, 1st October को convertible loan was issued. So whenever I'm finding diluted EPS, I assume they've been converted. But I can't assume they've been converted from 1st April. Because they were there on 1st October. Acha, यहाँ पे year starts in July. So I cannot say they were there from July. They have, for diluted EPS, I'll assume they were there from 1st October. So if you just check over here, so while finding your number of shares, I'll assume they were there from October. So October to June, यहाँ पे 9 months. So last year में they were there from October to June. This year में, yes, you take it for full year. Last year they were there from October to June. So same way यहाँ 9 months, यहाँ full year. Same way उसका interest also. The interest also which would have been taken, that would be for 9 months and full year in your profits. The interest यहाँ पे, this will be for 9 months and this will be for full year. ये 9 months हो गया, ये full year हो गया. Clear? Okay, next one, question number 20, that is also a good one. Next one, question 20, that's also a good one. Now this is a consolidated financial statement. I need to find out EPS based on profit attributable to owners of parent. ये NCI नहीं, total नहीं. And profit attributable to owners में without OCI, without other comprehensive income, so it will be based on 39,000. It will be based on 39,000. ठीक है. Now you had some irredeemable preference shares. So can I say dividend would have gone directly? It's a equity. Irredeemable preference share classified as equity. Dividend would have gone directly in retained earning. So from 39 you have to deduct. From 39 you need to deduct the preference dividend. From 39 you have to deduct the preference dividend. That is what you need to do. It becomes 35. So your basic EPS will be based on this 35,000 divided by weighted average number of shares, that way. Acha, and if you just check out, you had 20 crore shares plus 5 crore you issued in July. That's why basically you took a weighted average wala thing. That's done. Now you have a convertible debenture. This will be used only for diluted EPS. Convertible debentures are there, and convertible debentures you are issuing 18 crore rupees ke are there. They have an option either to go for shares or they can go for cash. As an alternative to repayment, they can go for shares. How many shares? They can elect to convert the debenture for 10 crore shares. 10 crore shares I'll be giving. Acha, now pay attention. Whenever there's a convertible debenture, till now we did not bifurcated that, but as per IND AS 109, the convertible debenture, this question is very good. As per IND AS 109, the convertible debentures are compound financial instrument. Compound financial instrument are to be split into liability component, equity component. Acha, how to find out liability component? Whatever we have to pay. We have to pay interest at 6% and then repayment full amount principal. Whatever we have to pay discounted by the normal market rate 8%. Whatever we have to pay principal after 4 years, interest every year. So what we have to pay, the liability component is coming 168,948. 168,948 is the liability component. Difference becomes the equity component. Did you understand? As per IND AS 109, this is a question mixture of 109 and 33. Okay, now on that liability component, interest accrues at 8%. So on that liability component, interest accrues 8%, we paid 6, this is the closing. Again, interest accrues 8%, we paid this is closing. The question has asked us, what is the interest for the second year? And what is the closing balance at the end of second year? So check out question, find out the finance cost and closing balance second year end ka. second year end ka. And if I'm finding out diluted EPS for second year, so now second year interest not to be paid. So this will be added in your PAT. So profit mein this will be added, and denominator mein 10 crore shares I need to give. So numerator mein I'm adding is this less uska tax impact. Denominator mein I'm adding is 10 crore shares. Did you understood? A very good question. Okay, next one, options, warrant and their equivalent. Options, warrant and their equivalent. Okay, if I have options, so how do I consider them while finding diluted EPS? You need to find out how many number of shares are actually issued without consideration. How many number of shares are issued without consideration? So over here, numerator mein there won't be any change. In denominator, the number of shares which are issued for no consideration, that will be added. The numerator doesn't change, denominator number of shares issued for no consideration will be added. Okay, this is basically for your options. And over here, for each period, number of shares issued for no consideration is to be found out separately for current year also, previous year also, because how many shares are for without consideration depends on average market price for that period. Previous year mein average market price for the period was different. This year mein average market price for the period is different. So calculate number of shares issued for no consideration separately for 6 and 7. Average market rate price is different. To check question 22. Last year ka average market price was 120. This year ka average market price is 160. Okay, and if you just check out, we have options outstanding 6,30,000. They can buy at 70 rupees. Okay, so 630 into 70, I'll get 4410. If average market price is 120, I should be giving them 367,500. I gave them 630. The number of shares for no consideration is 262,500. So first wale mein it is 262,500 is number of shares previous year mein. Acha, current year mein 630 into I'll be getting 70 rupee, and currently price going on is 160. So I should have given them 275,625 shares. I should have given them. I have given them 630. The number of shares without consideration is 354,375. Check out 354,375. This you calculate separately for each period because average price differs. Now, contingently issuable shares. Contingently issuable shares, for calculating basic EPS, they are to be included only when contingency is satisfied. For basic EPS, they are taken only when the contingency is satisfied. But for diluted EPS, they are taken from the beginning of the period in which contingency is satisfied. They are taken at beginning of the period in which the contingency is satisfied. Imagine the contingency is satisfied on 1st October. Contingency satisfied on 1st October. So for calculation of basic EPS, they are included from 1st October. But for calculation of diluted EPS, they will be included from 1st April only. So basically, they will be included from the beginning of the period in which the contingency is satisfied. Are you clear? ठीक है. Achha, number of contingently issuable shares to be included in diluted EPS calculation should be based on situation prevailing right now. So don't try to predict the profits of future. Don't try to predict the profits of future. So should I include this? Depends on what is the situation today. Situation today, if criteria are not being satisfied, don't take it. If criteria is being satisfied, then you take it. Okay, to check this question 23, important one. Okay, we have ordinary shares total 10 lakh. There's an agreement which says I need to issue 5,000 new share for each retail outlet opened. So for basic EPS, they'll be considered only when condition satisfied. And 1,000 extra share for rupees 1,000 profit in excess of 20 lakh. Whenever profit is in excess of 20 lakh, for every 1,000 rupee profit, 1,000 shares. For every 1,000 rupee profit, 1,000 shares. But this are to be issued in December. So see, if profit exceeded 20 lakh in between, I don't have to give shares between me. That profit should be maintained till 31st December. And that issue will come only in 31st December. Retail site open 1st May ko, 1st September ko 1-1. And consolidated year to date profits are given. Q1, Q2, Q3, Q4. If data is given quarter wise, you are required to find basic and diluted EPS for each quarter and annual period. Okay, let's do first quarterly. तो न्यूमरेटर प्रॉफिट्स मिल जाएंगे आपको, दैट्स ऑलरेडी गिवन. क्यूमुलेटिव है तो यू कैन जस्ट फाइंड इट आउट. ओके, टोटल टिल Q2 माइनस Q1 करो तो वो Q2 का प्रॉफिट. तो दैट वे यू कैन डू इट. तो दैट न्यूमरेटर इज फाइन. डिनोमिनेटर फॉर बेसिक EPS, दिस इज बेसिक EPS. 10 lakh shares already there. Retail site opened, one in 1st May, one in 1st September. 1st May को opened second quarter. It's January to December here. It's January to December over here. The 1st May opened. Q2 में it was there for 2 months. अच्छा, another opened in 1st September. तो May वाला that उसके shares are there. उसका shares are there in full 3rd quarter. And this one it's only for September. And now in 4th quarter it's all 10,000. 4th quarter all. 4th quarter में whole 10,000 shares are there. अच्छा, annually if I consider this 5,000 is for 8 months, from May onwards this 5,000 is for 4 months. You have to do calculation quarter wise as well as for full year. That is what the question is asked. Contingency earning wala will be satisfied at end only. That's why you can't take it right now. The number of shares you got it, this is your basic EPS. Now for diluted, you have to take that contingency wala thing. Kaise? From the beginning of the period in which contingency is satisfied. Yahan pe contingency is not satisfied. Here, contingency is satisfied. Okay, so rather than taking from May, take it from 1st April only. Why 1st April? Because this is Q2, April, May, June. Beginning of period. If period is a quarter, beginning of that quarter. अच्छा, यहाँ पे this 5 है there. This 5 not September. September की जगह take it at beginning of July, 1st July. तो ये full 5,000, ये full 10,000, यहाँ पे full 10,000, यहाँ पे full 10,000. Beginning of period. So it is taken from the beginning of period in which contingency is satisfied. Now second wala criteria, profit exceeding 20 lakh. Don't try to predict profit. Till first year it has not exceeded. But second quarter में exceed हो गया. So now you can take it. कितना? 3 lakh more है तो 3 lakh shares are to be given. Then again it went down. No, now you don't take it. And again last में you take it 9 lakh. So here you take 3 lakh. Here you take 9 lakh. Annual में you take 9 lakh. And you find the diluted EPS. Did you understood? Okay, next point is also good one. Question 24 is also important. Okay. If at all we are having a discontinued operation, the EPS from your continuing operation, discontinuing operation are to be found separately. Now, whether EPS is dilutive or not, so whether that EPS is dilutive or not, you don't have to consider the total EPS. So continuing, discontinuing, total, the total EPS nahi consider. Whether it's dilutive or not, think only from continuing operation angle. If continuing operation, the EPS is going down, it's dilutive. If continuing operation EPS is not going down, it's not dilutive. So whenever you have this, to decide, we are required to present EPS of continuing, discontinuing operation and total separately. To decide whether potential equity shares are dilutive or anti-dilutive, we consider the effect based on EPS of continuing operation only. If continuing operation EPS going down, it's dilutive, otherwise it is anti-dilutive. Okay, next one, this is fine, nothing different over here. Ye chalega. Now going to the next over here, purchased option. If entity is a holder of option, if you are a holder of option, can I say you exercise only when it's favorable to you? If you are a holder of option, you exercise only when it's favorable, so it's always anti-dilutive. But if entity is a writer of option, you have a written put option. You have a written put option. I'm a writer. Someone has a right to buy. If someone has a right to buy, he will exercise if it's beneficial to him. So now I have to give him shares at a lower rate kind of thing. So वहाँ पे what I'll do is I have to give him shares at a lower rate. So I'll buy the shares from market and I'm giving it to him. I'm buying the shares from market and I'm giving it to him. So imagine there are 160 put option with exercise price 10. Exercise price 10. So can I say I'll have to pay? Achha, this is I have to buy back the shares at 10 rupee. I have to buy back the shares at 10 rupee. That's the concept here. Written put option. Someone has right to sell. Written put option. So someone has right to sell. I have an obligation to buy. I have an obligation to buy 160 shares at 10 rupee. Now market में rate 8 है, market में rate is 8, that guy will say okay take it at 10 rupees, I have to take at 10, I have to take at 10 160 shares. अच्छा, तो I have to pay 1600 rupee. For 1600 rupee I have to issue 200 shares in market. The assumption is like I have issued 200 share, with that money I bought back 160 share. तो net 40 share का addition happened, that you take it in denominator. Net 40 share का addition happened, that you take it in denominator in your diluted EPS. Okay, next one, shares of subsidiary associate JV. Now यहाँ पे there's an interesting concept. This is for CFS. Parent doesn't have dilutive shares. Parent doesn't have potentially dilutive share, but subsidiary has a dilutive shares. See, if subsidiary has a potential dilutive shares and that gets converted, can I say my holding in subsidiary will reduce? If subsidiary has issued some convertible debentures, convertible preference share, and they issue shares to someone, so now my share in subsidiary will go down, and because of that, can I say consolidated EPS should go down? If subsidiary associate JV have a potential shares issued to others, if such potential equity shares, कहाँ गया? Okay. If such potential equity shares become actual equity shares, our share in subsidiary associate JV will go down. So consolidated profit attributable to owners of parent goes down, consolidated EPS goes down. I don't have potential equity share, subsidiary has it. Still it will be considered because our share in subsidiary will go down. ठीक है, तो check this question. ये parent profit is 12,000, excluding any earnings or dividend from subsidiary. Subsidiary का earnings is not taken. ठीक है, ordinary shares you are having is 10,000. You hold 80% of subsidiary's ordinary share, 30% of subsidiary के warrant, 20% of subsidiary's warrant, and you hold 75% of their convertible preference share. So you are having equity shares of subsidiary, preference shares of subsidiary, you also have some warrants of subsidiary. ठीक है, subsidiary का profit 5400 assumed to be before preference dividend. Question is silent, but we are assuming like that. They have ordinary shares 1000, out of that 800 with parent. They have warrants 150, 30 with parent. They have preference shares total 400, उसमें से 300 with parent. And dividend on preference shares is 1 rupee. Dividend on preference shares 1 rupee. ठीक है, profit is assumed to be before dividend. So 400 shares पे 1 rupee, 400 rupee is preference dividend. Parent will get 300 out of it. Fine. Now let's see over here. ये subsidiary का basic EPS. Subsidiary का basic EPS, profit is before preference dividend, deduct the preference dividend. तो ये हो गया profit available to ordinary shareholder divided by number of ordinary shares in subsidiary is 1000. Done. तो ये basic EPS of subsidiary. Now diluted EPS of subsidiary. Assuming that preference shares convertible are converted, so this dividend not to be paid. This dividend not to be made. ठीक है, तो now it becomes 5400. Number of shares added is 400 plus वो warrants में number of shares issued without consideration is coming 75. तो diluted EPS is coming 3.66. Diluted EPS is coming 3.66. ये subsidiary का है. Subsidiary का. Now going to CFS. Parents earning 12. You are not considered earnings coming from subsidiary. Achha, for the preference shares which you are holding, 300 rupee comes. And for equity they have basically 5,000, my 80%, 4,000 will come. So this is my profit divided by number of shares 10,000, 1.63. This is basic. Now coming to diluted EPS, pay attention. Achha, subsidiary के potential equity shares got converted. Achha, my 12,000, now my share of profit. Now see, pay attention. Unka diluted EPS is 3.66. Can I say this 3.66 they earned on this 1000 share plus 400 share plus 75 share. They earned 3.66 on 1000, 400, 75. ठीक है ना? Okay, so out of 1000 I have 800. So can I say 3.66 into 800 comes to me? So this 3.66 they earned on this. Out of this I have 800. So 2928, 3.66 into 800. Achha, out of 400 I have 300. So 3.66 into 300 comes to me 1098 will come to me, and out of this I have 20%. 75 में मेरा कितना परसेंट था? 30. Not 30, it's basically 3.66 into 15 करना पड़ेगा. 20%. So here I had 80%, here I had 75%, here I had 20%. It was 30 out of 150. 30 out of 150. 75 में 30 नहीं. 30 out of 150. So 20% you do it. So 55 rupee. So this is 55 rupee. So in your numerator, this added. Denominator में you don't have any potential shares. Your shares will remain 10,000. Did you got it? Subsidiary had a potential equity shares. They get converted. My holding in subsidiary goes down, and that's why basically my EPS, diluted EPS of CFS goes down. Retrospective adjustment is required when for bonus, right? The prior period ke EPS are also to be restated. Presentation is fine, disclosure fine over here. Acha, last point this. If I have a participating equity instruments, okay, I have a participating equity instrument or two class of equity instrument. I have to find the EPS for each one separately. I have to find for each one separately. Now do one thing. First of all, let me just go to the question. It becomes more simpler. We have two type of things. One is 5,000 non-convertible preference shares and 10,000 equity shares. But this preference shares, they are a participating one. First, some 5 rupee dividend is given to preference. 5 rupee dividend is given to preference. Then 2 rupee dividend is given to ordinary. And then whatever is remaining profit, whatever I give to ordinary, 50%, whatever dividend I give to ordinary after 2 rupee, 50% should go to the preference also. So now how do I find out EPS is over here? So out of your profit, first 5 rupee went to preference, 2 rupee went to ordinary. So this is already given to them. Now remaining 55,000 profit I have. Okay, if I give any dividend to ordinary, half should be given to preference. So can I divide this in 2:1? No, don't do like that. So 2 rupee to ordinary people, 1 rupee to, but consider number of shares also. Ordinary shares are 10,000, this is 5,000. Ordinary shares kitne hai? 10,000. So 10,000 pe 2 rupee and 5,000 pe 1 rupee. So when I say 20,000 is to 5,000, so 4:1 mein you have to divide this. 4:1 mein this will get divided. So 44,000 on uske 10,000 share, so 4.4 they are getting. And 11,000 divided by 5,000, 2.2 they are getting. So 5 and 2 they got. 5 and 2 they got. Then they got this 4.4 and 2.2. I hope this is clear. Similar is the next question, which was anyways homework. Now going to the last standard of the day, IND AS 108 operating segment. Woo! Last standard of the day, IND AS 108. Okay, operating segment. See, Reliance, one company having many businesses. Bharti Airtel, one company, one business, many location. They are operating in India also, they are operating in Africa also. So one company, different businesses, one company, different economic environment in which they are operating. The core principle of this standard. See, people want to know how each of the businesses are doing, how each of the economic environment in which you are operating, they are doing. So core principle is the entity should disclose information to users to evaluate the nature and financial effect. The user should be able to evaluate the nature and financial effect of the business activities which you are doing and the economic environment in which you are operating. ठीक है. तो यहाँ पे we have this concept of segment reporting वाला thing. Okay, first of all, what do you mean by the word operating segment? What do you mean by the word operating segment? And if at all you are having SFS and CFS, the segment information is required only in CFS. Remember, it's only in CFS if you have SFS and CFS. Now, your operating segment is a component of entity. Operating segment is a component of entity that engages in a business activity from which it may earn revenue or incur expense. Now, see, revenue may not be today. Future mein aayega, revenue may not be today. It's a component of entity which engages in business activity from which it may earn revenue and incurs expenses, whose operating results are reviewed by CODM and for which discrete financial data is available. It's a separate segment of yours. Or component of yours doing some business activity, uske results are reviewed by CODM and discrete data available, then it's a operating segment. See, if it's a operating segment, doesn't mean disclosure comes. All operating segments ke disclosure doesn't come. Okay, only those operating segment which meet the threshold. ये तो operating segment की definition है. Then there will be word coming reportable segment. Out of all your operating segment, few are reportable, and बाकी सारे clubbed as others. That's the way it will be happening. If it meets the quantitative threshold, it becomes reportable one. अच्छा, now CODM is basically not a person. वो कोई भी हो सकता है, like board of directors or your CEO or CFO. The operating result are reviewed by CODM. ठीक है, Chief Operating Decision Maker. And उसके लिए discrete data is available. All condition has to be satisfied in order to be called as operating segment. Fine, moving ahead. Now comes the word reportable segment. See, there can be many operating segment. It doesn't mean I give details about each one of them in notes to accounts. No. Only those operating segment which exceeds the quantitative threshold, that will be reported as reportable segment, and all others will be clubbed together as others. Now, किसको बोलेंगे reportable? So when it exceeds the quantitative threshold. Sir, what are the quantitative threshold given over here? Achha, before going to the quantitative threshold, there's one thing. 2 or more segment may be aggregated. 2 or more segment may be aggregated into a single segment. Kab? When each of the following is satisfied. If they have each of the following similar characteristic, nature of product and service is similar, production process is similar, type of customers are similar, method used to distribute is similar, and the regulatory environment is similar. So I am making 2 products, 5-star as well as Dairy Milk. Unme this all things will be clubbed together. So I may club these 2 operating segments together. ठीक है. Now illustration 6 में you are basically giving bus services, local route, intercity route, contract hiring. Now local route में you don't have pricing आपके हाथ में. Intercity में you have a pricing आपके हाथ में. So can I say over here the economic environment or regulatory environment is getting different? So can I combine the segments? Answer is no. No, you cannot combine the segment. Management should disclose it separately. Now comes the quantitative threshold. 3 quantitative thresholds are given. Any quantitative threshold met, it becomes a reportable segment. Your revenue, internal plus external both, your revenue, segment revenue is 10% or more of the combined revenue of all segments. Acha, so revenue, internal, external both of your segment exceeds, or it's, so not exceed, it's 10% or more. Exact 10% is also fine. 10% or more of internal, external revenue of all segments together. Okay, second, the profit or loss. The profit or loss is 10% or more of, and now profit loss, I'll take it in absolute terms. So profits of all segment together, loss of all segment together. तो सारे segment जहाँ जहाँ profit है add it, सारे segment जहाँ जहाँ loss है add it, उसमें से whichever is higher you take it. And उसका 10% or more. So your profit or loss is 10% or more of greater of combined profit of all segment or combined loss of all segment in absolute terms. And third one, the asset of yours, segment assets are 10% or more of combined asset of all the segments. Then in that case, any of the 3 criteria met, you become a reportable segment. Plus sometimes you don't meet any quantitative threshold. Still the management, if they want, they can show you separately. Okay, one more thing. A reportable segment should have at least 75% of external revenue. The reportable segment should have at least 75% of external revenue. If the reportable segment does not include 75% of external revenue, then few more segment will be added as reportable segment. Clear? Okay. Now, if a operating segment is identified as reportable in current year, तो उसका previous year it was in others, it needs to be restated. So segment data for prior period presented for comparative should be restated because last year it was in others. This year I'm showing separately. तो यार others comparative नहीं रहेगा because it's this time it's not in others, last time it's there in others. तो उसको last time में से remove करके show it separately over here. ठीक है, question number 10. Okay, we have 5 operating segment A, B, C, D, E. Identify which are reportable based on profitability. Okay, profit of all segments 780 plus 1500 plus 6000. Profit of all segment 8280. Okay, loss of all segment 2300 4500. What is greater? Profit. Profit कितना आ रहा था? It was coming 8280, loss is coming 6800. Whichever is greater is 8280. Any segment having a profit or loss 10% or more of 8280 means 828 or more. 828 or more. Is this 828? No. So this is not reportable. This is yes, 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 yes. Okay, next we have disclosure. Next we have disclosure. Okay, if it is a reportable segment, can I say we need to give disclosure in notes? So what information we need to give disclosure if it's a reportable one? One, the general information. Second, information about assets, liabilities, profit loss. So segment profit loss, segment asset, segment liability. And I have to give you reconciliation. Acha, coming to first general information. Factors used to identify reportable segment, judgment which management has made if they go for aggregation criteria, type of products, services, what are there. So this general. Then I have to give information about segment expense income, segment results. Okay. So check over here. You need to disclose what? Regarding this P&L item mein what I need to disclose about the reportable segment? Revenue from external customer, internal transfers, interest revenue, interest expense, depreciation, amortization, other non-cash item other than depreciation, amortization. Then any exceptional item, any profit or loss coming from associate or JV, tax, income tax. So revenue, interest, depreciation, any other non-cash item, exceptional item, share in profit of associate JV, this all is to be disclosed for P&L. Acha, for balance sheet, for assets liability, what is the amount of investment in associate JV accounted by equity method, and amount of addition to non-current asset? What are the additions to non-current asset? These are disclosures to be required if it is a reportable segment. And now these are to be disclosed if they are reviewed by CODM. Disclosures are required if reviewed by CODM. Okay. Now check illustrative disclosure. We have like this many segment: car parts, motor vessel, software, electric, finance, others, and total. The revenue from external customer, internal, interest revenue, interest expense, depreciation. ये segment का profit बता दिया. अच्छा, material non-cash item other than depreciation. अच्छा, and assets liability में total assets, then total liability, assets liabilities are to be given, and expenditure additions to non-current asset is given, plus how much is amount of investment in associate JV accounted by equity method, that also is required, but they don't have, that's why it's not given. Clear? The segment profit, segment asset, segment liability, that is there, plus extra whatever is required. Okay, now at what value to disclose? Now someone says, sir, the value appearing in financials. No. It's not the value appearing in financials. The value which was reported to CODM. Suppose in your financials, inventory valued as per FIFO. But CODM reviews the inventory figure based on weighted average. So what was the figure of inventory given to CODM? Weighted average. तो यहाँ पे डिस्क्लोजर में वेटेड एवरेज वाला होना चाहिए. तो इट्स नॉट द फिगर इन फाइनेंशियल, इट्स द फिगर रिपोर्टेड टू CODM. Okay, but now sir it will not match with financial. For that we have to prepare a reconciliation. ठीक है. If CODM uses only one measure, you can use that measure. If CODM uses two measures, more than one measure, try to take the measure which will match with financials then. ठीक है. And you need to then give a reconciliation: segment revenue to entity revenue, segment profit to entity profit, segment asset to entity asset, segment liability to entity liability, and wherever any difference is coming, you need to give reconciliation. When measurement basis provided to CODM differs from measurement basis in financials, the reconciliation will be required. Fine, check question 13. Entity uses weighted average cost for financial statement, but CODM uses FIFO. If CODM uses FIFO for segment information, FIFO is to be used whatever is reported to CODM. And then this will not match with financials, you have to give a reconciliation. Next, entity-wide disclosure. Now see, entity-wide disclosure, this will come into picture if not provided earlier. We already provided certain disclosures earlier. If they are not covered, if this entity-wide disclosures are not covered earlier, then you give it. Acha, so what I have to give? This is to be given only if basically it is not provided as part of reportable segment information. Reportable segment mein ye information nahi gayi, then you take it. One, information about product and services. Information about product and services, and also report the revenue from external customer for each product and services. Now see, revenue from external customer for each product and services, if at all our reportable segment were business segment only, this would have already gone. If reportable segment were business segment, this would have already gone, so no need of this. So check out, if operating segment was business wise, this data will not be required only. It's already gone. Acha. So one, you have to give information about product services, revenue from external customer, product wise. Second, you have to give geographical area wise data. What is geographical area wise data? Revenue from external customer in India say, outside say. Revenue from external customer in India, outside. Acha, non-current asset lying in India, outside India. Acha, now pay attention. If your reportable segment were business wise, so can I say this geographical data was not given? That you give it now. Acha, if operating segment were business wise, now geographical area wise will be required. If operating segment were area wise, so now business wise will be required. So business wise mein revenue from external customer, product wise. And यहाँ पे revenue from external customer area wise है, non-current asset also area wise, in India, outside India. And you are required to give information about major customer. Major customer is a one जिसको आपका sales is 10% or more of entities revenue. 10% or more of entities revenue, not segment revenue. Entities revenue ka 10% or more, that's a major customer. Uska information needs to be given. Okay. Question number 18, important. This was asked 2 times in your examination, May 18, July 21. Okay, X Limited is operating in a coating industry. Business segment comprises of coating and others. Okay, so check out, we have only 2 things, coating and others, business hai. Acha, business hai, so now if you remember, entity wide disclosure mein geographical area wise will be required. Fine. This is external sale, assumed to be gross including GST, then I'll deduct GST from it. So external revenue excluding GST. Other operating income, theek hai. This is the result. Result is always PAT. PAT is after depreciation. These are segment asset, segment liability. Okay, other information given over here. Unallocated revenue. Interest and bank charges, they have not allocated. Income tax expense, they have not allocated, basically quoting how much, others how much. Investments you have unallocated, other unallocated asset. Unallocated liability, reserve, share capital. Depreciation, quoting and others is given, that needs to be disclosed. Remember, depreciation will disclose. Other non-cash item other than depreciation, that is also to be disclosed. Capital expenditure is to be disclosed. Capital expenditure, amount spent on non-current asset. And revenue outside India is this, segment asset outside India is this, remaining revenue will be in India, remaining segment asset will be in India. Okay, that will be used for that entity wide disclosure. Uske liye. How to disclose the information? How to disclose information? Now remember, we have to disclose for reportable segment 3 things. For reportable segment, 3 things. 1, general information. 2nd, information about assets, liability, income, expenses, and 3rd, reconciliation. The general information, 2 segments, quoting, others. Now information about segment revenue, result, that thing. Okay, so quoting and others. Okay, revenue, external, उसमें से GST गया, this is external. Internal is not there. Other operating revenue, this is total revenue. Done. Now result. This is the result given 10, 4, 14. ये result आ गया. Now we need to also give reconciliation. Segment profit to entity profit, segment asset to entity asset, segment liability to entity liability. याद है वो reconciliation? तो ये reconciliation के अंदर the unallocated items are considered. ये result है, right? Unallocated income is 3. Unallocated income is 3. Now they've written profit before interest, tax, other exceptional item. Then they've deducted interest. Exceptional items are not there. Then they've deducted tax. So this is your PAT after tax. This will match with financial. Your reconciliation also done. Now coming to assets. Segment assets are given. Segment assets. Okay, then investment, other unallocated, these are total asset. This will match with financials. Segment liabilities are given. Okay, unallocated liability. Then total liability will match with financials. Okay, share capital reserves. So now total liability and shareholders fund, this will also match with financials. This is that. Now others. Okay, remember depreciation needs to be disclosed. Addition to capital asset needs to be disclosed. So ये basically capital expenditure. ये basically capital expenditure 5,000, 2,000, 7,000. Depreciation 1,000, 300, 1,300. This was required based on reportable segment disclosure. Reportable segment ka disclosure. Now coming to entity-wide disclosure. Entity-wide disclosure, product-wise already given, so geographical area-wise needs to be given. So geographical area-wise revenue, external revenue. Acha, if you just see, your total external revenue is 262. Total external revenue 262. So if you see over here, the total revenue, acha 262 tha na? नहीं, ये total revenue is 317, sorry. Total revenue 317. Out of that, outside India is given. So ये 317, outside India given, balancing is in India. Outside India is given, balancing is in India. Same way, your non-current asset. Yeah, assume all assets, basically we don't know segment assets में सारे non-current मान लेते हैं. So out of your total assets, segment asset is 80. Unallocated भूल जाओ, वो तो नहीं पता. Segment 80. Out of 80 in India, we don't have. Out of India is given, in India is balancing. Out of India is given, in India is balancing. Did you got it? Okay, so this is based on entity-wide disclosure. This was basically required based on reportable segment disclosure only. And this was also reportable segment ke disclosures. This is your chapter number 10 that is over. Tomorrow, not tomorrow. Tomorrow I'm not taking any class. Sunday ko. Now what is pending? What is pending? We are left with IND AS 115, IND AS 116, then financial instrument chapter, and IND AS 101. IND AS 101, and then we have analysis of financial statement. After that, 2-3 theory chapters are there. Professional duty of chartered accountant, accounting and technology, conceptual framework. They are theoretical chapter, no need of any revision in that. But this 5 major topics are pending. This I'll be completing day after tomorrow. So now next session is on Sunday. And it will be from 6 p.m. onwards. It will not be 5 p.m. onwards, it will be 6 p.m. onwards. 5 topic to be done, 5 hours probably it will take. So Sunday ko will meet 6 p.m. 6 to 11 p.m. will be the class. Any doubts, anybody in today's work? And I hope you are enjoying this revision. I'm telling you, it's not easy for me also. 25-27 hours we have given for this. It's basically a kind of in-depth revision. Just ensure that you are taking benefit of it. We put in efforts because we want you all people to get the benefit of it. If you are not getting benefit, then it doesn't basically give us that enthusiasm to work more harder. So please make sure you spread about this to all your friends. Anybody who has taken classes from me or not taken classes from me, everybody will be able to refer this revision sessions, no problem at all. So please share about it to all your friends. Any doubts, anything you are having, we have a Telegram group, CA Niket Thacker, you just write over there, CA Niket Thacker discussion group will be available to you. Put in all your doubts over there. And our FR lectures as well as auditing lectures of new syllabus are available on Yashash Academy's website. And remember one thing, I may cry, but I should not allow others to make me cry. मुझे रोना है, मैं रोऊं, but I should not allow others to make me cry, and this applies even to ICAI. So make your efforts in such a manner that even ICAI cannot make you cry. Yeah, make your efforts, make yourself such strong, itna strong banao that nobody else is able to make you cry, even ICAI. Whatever paper they want to come out with, easy, difficult, but there won't be any problem for me to pass because I have done my best of preparations. I may cry, but I should not allow others to make me cry. See you all on Sunday. Bye-bye, tata, take care, study well, all the best.